the best crypto asset? Bitcoin's the best crypto asset. Which one's the best crypto asset? Bitcoin's the best crypto asset. Which one's the best? 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 What's the second best?
This is Discover Crypto. Every day on the channel, we teach you how to make money with digital assets. And we have a huge show today because it is Jerome Powell FOMC meeting. We're going to get some rate cuts today. And it's a very special day because we are finally broken out of the YouTube jail. Thank you for showing the support while we were kind of locked up abroad. But now I'm back, and I'm back with TJ. TJ, how are you doing today?
I'm doing good. It's a historic day, obviously. Everybody's expecting the Fed pivot, and we're going to talk about what to expect with the Fed, what to expect with the potential fallout or pumps to come. $1 million Bitcoin is in the cards, being talked about more and more by all sorts of people. So, yeah, I'm feeling good, feeling excited. Missed you guys. Glad to be back. We are live on Pump.fun as well, so shout out to all you trenchers. We're going to be hanging out with you guys doing some fun stuff. We're here for the long haul, but definitely missed our YouTube family, our YouTube audience. Not being live was just not the same. So happy to be back, and we missed you guys. So
yeah, it is good to be back. And you know what I miss? I miss those green candles because Bitcoin is bleeding, everybody. Just looking at the 5-minute chart here, you can see massive drawdown from the wee hours this morning. Just kind of measuring this move right here. And especially recently, we have fallen almost $2,000, but significant losses just in the past few minutes as the markets are bracing for Jerome Powell. What happens every time he speaks? We're going to look at the last 3 rate cuts, and we got a lot of hot takes on where these things are going to be heading. But before we get into the rate cut speaks, look at the predictions. Let's look at a little bit of a zoomed out chart here on Bitcoin. You can see we're starting to create maybe a little bit of losing momentum. But right now, today is going to be one of those choppy days. No one's going to know the ultimate direction here. All eyes are going to be hinging on Jerome Powell. But let's look at the rest of the market. We're going to hit refresh, make sure we got that fresh data. Bitcoin is up about 0.6. ETH is up about 1.0. And we see BNB leading the charge out of the majors here. It is up 2.5%. Keep scrolling. We see Chainlink with a little bit of a pullback. Always like seeing some link that I could get in. Fairly cheap, relatively cheap here. TJ, I might have to open a low leverage long on this one. And we keep scrolling. Let's look at the big winners and the big losers. We have Mix Finance, which I find suspicious. This magnificent pump today, this huge pump, takes it to break even. And this is one of the reasons we're saying just be careful trading this coin. If you end up buying the top, you can easily be down 60% before you know it. Story is up, Sky is up, and we have Immutable X. Haven't thought about that one. And Hype also looking good. And Tau, we call it the Tau pump. It's good seeing that one in the green. And looking at what is down, we have Monero, Memecoin, and Say. I heard Drew talking about maybe open a long on Say, TJ.
Yeah, they've been trading Say in the Discord. I was happy to see Arrow was up again. A lot of our base picks, obviously the big news coming out yesterday about a potential base network token. And this is part of why, again, my thesis of just do things in crypto, you'll end up learning and getting rewards. If Base Network drops a token, we're going to be getting an insane airdrop because we've been doing so much with Kita and Base and Arrow and Morpho and doing it on chain and locking up and doing all that sort of stuff. We do have plans for more DeFi content coming down the pike. We've just been a little scattered getting the new offices set up, but in the next month or so, just be prepared. We're going to have some more DeFi streams to help you guys learn how to earn with your capital once you have it. So a lot of that stuff's coming down soon, and yeah, it's getting into the fun part of the cycle. Again, risk on is definitely going up dramatically, and it's going to be wild to see what these next 3 months have. It's interesting when you've got kind of consensus around what to expect, because consensus is almost always wrong, or you usually want to be counter to the consensus trade most of the time, or they call the trade getting crowded. But it's going to be really interesting. It's also, again, I posted this on the Discover X account where it's somewhat poetic that we've got Bitcoin and industry leaders meeting with the lawmakers in Washington regarding setting up a strategic Bitcoin reserve on the same day that all eyes are on the Fed to do a pivot and potentially set the stage for what I believe to be stagflation. We're going to look a little bit later in the stream at a graphic that shows what happens every time they cut when we're at all-time highs. And I actually was looking at that last night, and there's some pretty interesting dates associated with some of those times. And I believe what we might experience is going to be somewhat similar to what we saw in the 80s, but we'll get to that a little bit later in the show.
All right, I see a lot of people talking about Toshi. Yeah, Toshi is sending today. I had someone else ask about crypto gaming. I'm going to answer a lot of these questions towards the end of the stream, folks. We got to cover a lot of this news with Jerome Powell primarily here. Now, we have a couple different scenarios. Here's how the next 22 hours could play out. Just kind of, go over this briefly. Drift a bit higher. Makes a lot of sense. Dump at the open tomorrow. That's exactly what we saw when you were looking at, some of these smaller time frames. You can see markets just dumping ahead of Jerome Powell's speech. Why? Because it is de-risking pre-FOMC. And then with the 25 basis points here, maybe we get a little bit of an insane Darth Maul candle on the makers, but we'll end the day in the green and we'll slowly melt up. So this scenario, high odds, 94% by ICO Beast here, 50 points. And they're saying, basically kind of some good news. Don't worry. It's not because the economy is broken. Like, hey, we're just a little late. There's no issues. Just time to cut. This is going to send things higher, lower odds. Then we have the hawkish FOMC. We're going to cut 50 basis points because the sky is falling. That's going to also be low odds. But this is the scary one, TJ. Basis points. Trump sends in the National Guard to storm the gate. Total bedlam. No one can predict what will happen in the market. Now that one, 0.0001%. But hey, never count it out, folks. Never say never.
Yeah, if they don't cut rates today, obviously most of the 25 basis point cut is priced in. We've been talking about that on shows all last week. My prediction is actually likely that we don't see much happen today.
So not this is kind of what you're saying. We're gonna
if the Fed doesn't cut rates, that's what would happen. Everything would implode. Everybody would be going crazy. Kind of like what you said. Trump would be sending in the National Guard. He said he'll appoint himself the Fed chair and just go in there and cut the rates himself. But I do think we're going to see 25 basis points. I think it's going to be somewhat muted as far as what happens with it, because 25 basis points is mostly priced in. It is, and we are going to be live a lot today. We're going to be streaming the Jerome Powell's speech, and there's going to be a lot more learned from the way he delivers it, kind of like what DZ was just alluding to, rather than the actual cut itself. I think we're going to get 25 basis points. The entire market's expecting that. The entire market's priced that in. We might even see a little sell-off when we don't get 50 basis points, because there are some people hoping for that. But depending on how he positions it, I think many people are expecting a range for the next several meetings to get 25 basis point cuts. I think today will be less volatile than people are expecting. But you never know. That's what makes it fun. That's why we're here all day, every day, and we'll be covering the action the whole time, going long, going short, having fun with it.
Well, TJ, let's jump in the DeLorean and see if this sucker can do 88. Because looking at the past here, these are the last three rate cuts. We had September 18th, November 7th, December 18th, 50 basis points, 25 basis points, 25 basis points. In this day, it was green. When we got that 25 or 50 basis point, green 1, 2, 3, 4, 5, 6, 7.5 days for the following week. It was just bullish action. You look at the next cut, 25 basis points. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days of green. Loved it. And then the markets were like, well, he's going to cut. The price is going to go up. Then we had that consensus bet that TJ was alluding to earlier. And then we ended up getting a dump. So 50 basis points. I agree, TJ. We're going to see a nice little pump. 25, maybe we edge a little higher. I think, if we knew for sure, we'd be betting the farm on it. You don't see too many people trading on FOMC days because the markets get very, very volatile, everybody. But let's back up a little bit. Beep. Let's back up that Amazon truck that's in your neighborhood. You're like, God, how many people are getting packages in my cul-de-sac? But this is just a simple breakdown. Many don't get how the rate cuts move the money supply, but it's simple. Loans create new money creation, okay? So cheaper loans equals more borrowing, which equals more money. So when you have a loan, especially from a central bank, you're creating new money. So when the loans are cheap, there's more loans. It kind of makes a lot of sense. However, global money supply is growing roughly 7% a year. So this money has to land somewhere. Your choices: stocks, real estate, bonds, gold, Bitcoin, or you could stuff some cash under the couch. What do you choose? TJ, let me ask you this question. And Chad, I want to ask you guys. You can't choose Bitcoin. What are you buying? I think I'm a gold bug.
Yeah, I would be too. Gold. I mean, it's commodities really.
Silver though is probably maybe what.
Yeah, I mean, all of those are fine. Real estate. I mean, the stocks. Equities are extremely overpriced. I saw an interesting graphic today. I don't think I saved it. I don't have it up. That was talking about equities and commodities go through. I don't know if it was like 10-year rotations or 10-year cycles. And it looked like we were in the commodity cycle right now where it's the equities, which is the stock market, gets overheated, which it is. I mean, there's, I don't know if you've got any of those graphs up, but we're at all-time highs when it comes to risky exposure from U.S. households in equities and in the stock market. And times like that, we've seen this in the past. In the 70, we've seen it in basically they've preceded many big crashes. Almost every big crash we've experienced in the stock market has been when retail wasn't all in as much as possible. And most of the time, smart money has been rotating out into commodities. We've been seeing that across the board. It's not just hedge funds, but central banks, governments, all piling into gold. Interestingly, the Fed being the only central bank that's not stockpiling gold right now, which that could mean that because that would allude to lower confidence in the US dollar. But like obviously People's Bank of China, the government themselves, many nations around the world are just the gold chart is just up and to the right. And every time you see gold going vertical, you should be somewhat concerned. That usually means some things aren't right in the world and you don't want to see. You need to prepare yourself. So this is what I'm doing. I'll just tell you guys, have zero debt. You want to own assets. You want to have no debt, and you want to be prepared to take action when things do inevitably draw down. I do think we've got a couple more months of euphoria, potentially even 6 months, like through this last 3 months. I do think we see a sell off, and then I think we could potentially continue to pump January, February, March. Maybe somewhat into the summer of next year. I do think people are going to be expecting the bear market to come sooner than it actually does, mostly because of these continued rate cuts. I think the main reason the U.S. needs these rate cuts is because they need to refinance their debt. And once the U.S. can refinance some debt, then I think we start to see more forms of QE. Rate cuts are they're signaling a Fed pivot. And what I think we start to see is Treasury buybacks getting larger, the Fed adding to their balance sheet, and basically what DZ, you were just talking about, new money creation. They flood the system with new money, risk on assets go up. Bitcoin will continue to go up because it really does. I don't know if you still have that thing up there. You really do have limited options. It's stocks, real estate, gold, Bitcoin, and that sort. And in Bitcoin, by the way, I put in the same bucket as commodity. I put Bitcoin, gold, and silver all as commodities, and you've been seeing all of those performing extremely, extremely well. Obviously, you've got some of the majors, Nvidia and Apple, Facebook, some of those that are going to continue to do well in equities. But overall, on the stock market, it looks I don't want to call it weak, but unstable, shaky ground. There's not a lot of confidence in overall equities. There's confidence in the majors, but even those, you've got this AI flywheel that they've got going on with like Oracle and Nvidia and all buying and selling, OpenAI, all buying and selling to each other to show their revenue, and it pumps up their stock price. They take that stock price and they go out and spend more to keep pumping it up. It's really interesting when you've got the trillion-dollar businesses running Pump.fun type flywheels with buybacks and just doing anything they can to pump up their price to keep the game going. Eventually that will crack. And being in Bitcoin, being in commodities, having no debt is where you want to be when that happens.
All right. And big shout out to Larry Ellison and Oracle for landing TikTok. Very, very lucrative investment right there. And so probably not going to be able to find content that's critical of certain nation states on that platform anymore. And they say that is going to be a large primary motivation. And I think I would agree with that take, but we're getting a little sidetracked there. This is some interesting data in regards to the stock market. Fed cutting rates when the markets are within 1% of all-time high produces an average return of 15% in the green over the next 12 months with a 100% hit rate according to JP Morgan. And again, this is, specifically for when we are within 1% of an all-time high. So typically it's just showing that the trend will continue. If things are faltering, if we're kind of entering a bear market, you get some rate cuts, then it can be very scary, typically is very scary. But when you're in this growth environment, it tends to bode very well. And a lot of it is just going to be, that more money into the system. Now, this is a good breakdown here. So Bitcoin, tapping 117 as the traders are bracing for the Fed rate cuts. But the Fed interest rate cuts, whether it's 25 or 50, are now basically 100%. We have a 96% odd for a 25 basis point and a 4% for 50, according to the CME Watch tool. They also had polymarket odds here. It looked like 25 was at 93 and 50 was at 5. But let's just jump in. I do want to hit refresh here. All right, so now it's even a little bit different. Now 25 is down to 90%, while the 50 basis points is up to 8%. And yes, that does equal 101% if you add it all together there. So still, some market commentators are saying any volatile price action from interest rate cuts, though, already priced in, certainly is for 25 points here. Traders are now turning. This is where the meat and potatoes of our stream later on in the day is going to be focusing on Jerome Powell's speech after the FOMC meeting. Therefore, the market's going to be keenly watching his language at the FOMC news conference to see if there's any shift in tone. The word choices, his adjective choice, his adverb choice. Is it going to be hawkish? Is it going to be dovish? Are they going to signal that the economy is faltering? Or are they going to signal that, the economy has a lot of strength, we're not worried, this is just a normal rate cut? Do you have any predictions on his language? Are we going to make the markets happy or make the markets sad?
Obviously he's going to be trying to be as neutral as possible. I doubt he's going to come out and admit mistakes. He's probably going to talk about the data. He's probably going to talk about, it's one of those, if he starts to talk too much about the labor market, and unemployment, and, I do think there's legitimate fears of stagflation where inflation continues to run and the economy is somewhat stagnant. That's where that comes from. And I think that reflects reality. And if that does happen, I don't think that's avoidable. They will be printing money. Inflation's going to be coming back. They never achieved their 2% goal, but they don't have a choice but to add money to the system. Otherwise, it's going to crack. We can see that a lot of this comes down to the bond market and the bond yields. And that's what I'm going to be interested to see. Like when they cut rates today, how do the bond yields react? Do they go up dramatically? Do they kind of stay flat? It'll be really interesting to see what happens there. But yeah, his language, he's going to be trying to be as neutral as possible. I doubt he's going to acknowledge being late. It'll be interesting to see if he talks about the revisions or the fact that they were making decisions based on bad information. That being said, how much do you trust the new information? My policy is if it's coming from the government, don't trust it no matter what it is. I don't care if it's the FBI. I don't care if it's the CDC. I don't care if it's the Bureau of Labor Statistics. Like, they're selling you
all
a
data
narrative.
Fake, essentially.
Well, especially government data. I don't know about all data.
And I don't mean literally, of course, but at the end of the day, there's money involved. All data is going to be fake. But stagflation also has another historical meaning here, TJ. I don't know if you're aware. Robert Baratheon, the signal was the stag, and his dynasty had a lot of high inflation and low growth in Westeros. Many say it was because of his hedonistic lifestyle. But I digress there. That was for you Game of Thrones fans, all 7 of you that are left that didn't hate that last season. But here we have some more interesting takes here. 25 clearly priced in. But if we get 50 basis points, the markets are going to rally. But what's not priced in, and this is the take that I love, is a complete Trump takeover of the Fed. He is replacing board members, and next year we'll choose a new chair. Of course, Jerome Powell's his term is going to end in the spring. The money printer will be rolled out, everybody. So just a good take. I would largely agree with that. And part of the reason is this third mandate that nobody's talking about. So let's go ahead and break this down. So the third mandate may devalue the dollar, and this is going to send crypto soaring. So his latest Fed pick cited a third mandate for the bank to moderate long-term rates, potentially justifying yield curve control. And we're going to cover that in a second, which could boost Bitcoin. And this could be bad news for the dollar, but this will be good news for crypto. So the Fed has long been considered to have a dual mandate. They have 2 things they need to take care of: price stability, aka what's the measure of inflation, and maximum employment. What does the job market look like? But Trump's pick, Steve Mirren, cites a third mandate, earlier this month, sparking speculation for what they're going to be doing in the future. The third mandate is actually written into the founding charter here. It's a statutory requirement buried in the founding documents, which states that the central bank actually requires 3 objectives, not 2, this whole time: maximum employment, the price stability, and moderate long-term interest rates. The Trump administration appears ready to use this forgotten statutory requirement as justification for more aggressive intervention in bond markets, potentially through yield curve control or quantitative easing and money printing. So let's break down yield curve control slightly. So the third goal has mainly been ignored, but many say it's just a natural byproduct of the first 2. But now they're saying it is legal cover for potential yield curve control. This is where the Fed buys government bonds to target a desired interest rate. That's where the government issues more debt to buy old debt so we can regulate the interest on that debt. So we're printing more money and printing more money and printing more money. And this is what led to the Arthur Hayes take there, where we might see a $1 million Bitcoin. Outspoken BitMEX founder Arthur Hayes said it was bullish for crypto, suggesting yield curve control since BTC to $1 million.
Yeah.
I wasn't actually aware of that hidden third mandate buried in the founding documents. I heard it a lot. I didn't know it was actually in the charter.
Yeah, it's in the charter, but they haven't lived up to their charter at all, any 3 of them over the course of the year. So I don't, like the Fed, and I might as well pull this up. I had it on X somewhere, so I might as well go find it. Just a reminder for oh shoot, I clicked the wrong button. Trying to verify my email. There we go. Where is it? This was from Wolf of Wall Street, Scott Melk, or All Street, sorry. Talking about reminder: the Fed's a scam, should be abolished. Rate cuts are part of the scam. Absolutely true.
Yeah,
say it.
Inflation is violent. At the end of the day, they're stealing the blood of your life's work. Is a good description that I heard, because you make money to pay for things, to buy food, to have lodging, to take care of your family. And how do you make that money? You trade your time, you trade your essence, you trade your living. And when they take that away from you stealthily via inflation, they're taking the toil that you do for years and decades. They're literally sapping you of your soul, sapping you of your strength, sapping you of your life's essence. And they do it in this very dark, insidious, hidden way that most people don't even understand. But I know that you understand, and that's why we keep screaming from the rooftops. Bitcoin is the answer. Crypto is the answer. That's why we're trying to give you financial freedom, folks.
Yeah, absolutely. I mean, they came in under the guise of like, oh, we're going to stop market crashes. Well, guess what? I mean, the biggest one ever happened after the Federal Reserve. And so really, it's just a slow money extraction play. If you learn about banks, how they operate, what their job is to do is to make money with low risk. So if they can pass that risk on to you, they're happy to do it. If they can make commissions selling debt, they're happy to do it, even though they know it's probably like they would never buy the debt because it's too risky. But sure, they'll sell it and take a commission on it and put it in their pocket and let the taxpayer deal with it down the line. And that's what they've learned how to do is basically privatize profits and socialize losses. And that is the function of the Federal Reserve. It's a way to continue to profit for themselves and de-risk any of the losses. And unfortunately, that's just the reality all around the world. I do think we're playing this game. We have the advantage in the U.S. of having the reserve currency. You guys have heard me on this show say before, he who cuts last wins. I saw somebody else say the Canada central bank cut rates. We've been seeing China cut rates, ECB, Bank of Japan. All of the other central banks have already been cutting their rates, which is why Powell's been holding out as long as he can. Obviously, we're going to cut now. We're going to continue to see the cuts. I think we do get back down to, something in the 3s within the next year or so, sometime in the next 12 months. It was funny. I don't have it, I don't think. But Miran, you just mentioned Trump's new pick as a Fed board member. I saw a rumor that he stormed out of the room after getting completely dismissed when he proposed like a 475 point, basis point cut for this meeting. And it's just like, or something ridiculous like that. And I'm like, oh, this
is that man. And everyone started booing.
This is off to a great start. So yeah, I mean, we're definitely going to see Fed getting more into more of a quantitative easing mode. I mean, it's
they have
happen.
to. They have to.
Yeah.
It's the end of the day. I see you guys on Pump.fun. GN, I appreciate your content or your comment here. Seriously, they are the best in crypto content. So we do appreciate all the love out there. But I'll tell you what's not doing the best. The dollar. It is dumping, everybody. So give me 1 second here.
Oh, yeah.
The US dollar's now lost 10% of its value this year. That is massive, massive decline. And if you think about it, if you have something that's worth $1 and it goes down to 90 cents, a 10% pump doesn't get you to parity, only gets you to 99 cents. So now we actually got to reclaim 11%, just get to the value that we were 12 months ago. And so, yeah, this is that hidden stealth violence that they're doing to your life here. They're stealing away your time, and they're stealing away time from your family, time to better yourself. And it's just ultimately it's a very, very evil thing. Inflation is. Now, Brian Armstrong, it's even worse though. You know, I'm complaining here. You know, I live off Atlanta. You know, I just left the Waffle House. There's always something to complain about where we're from here, but it's worse in Canada, folks. Canada is cooked. As they say, the interest rate for most checking accounts, 0% in Canada. That makes 0 sense. So from today, all Canucks can earn 4%, 4.1% uncapped rewards on USDC from Coinbase and up to 4.5% on Coinbase One. So since Canadians can't earn interest, they're going to prop up the US debt, and they're going to keep this bubble going a little bit longer before it pops. So now, I mean, we're relying on our maple brethren to prop up our US dollar. So that's just how bad things are today, folks. All right, now let's look here at Bitcoin. Let's talk a little price action that we're going to roll into the altcoins here. Bitcoin working on the second best September performance ever, but it's not September, TJ, that has me excited. This graphic, I think some of the people with the sharp eyes are going to be pointing this one out here. I think we can get it even bigger. Notice something about the green Septembers. What is the outlier for the green Septembers, TJ?
The outlier for the green Septembers?
Oh, what do you notice with every green September?
They're getting bigger.
That and every October is also green.
Oh, right. Yeah.
Every single time. Now, of course, as more and more people point this out, that lowers the odds that it's going to stay green, but they call it October. October is typically the most bullish month for Bitcoin and just equities in general. So seeing a nice pump in September, if history holds true, it's going to be the 5th green October in a row. So I don't know if this is going to hold true or if this is going to continue, but I certainly like the way this is going. I'm liking the history here.
Let's look at let me make it let's see, 2017
post-halving year.
Yeah, we'll look at the October, November, December. Usually, yeah, post-halving year, you know, 47%, 53, 38.
That's
and then 2021, 27, 42, 46. No, you're in 2022. Yeah.
2021, no, 40%, 7 and 18 decline.
No, that's maybe I'm
2021.
Okay, so I'm looking at 2020. Interesting. And then 24, 28, 8, 12. I think this year we could see some of those 2017 like numbers. It's coming into the halving cycle and the debt cycle have lined up. And everybody's predicting it, which is a little bit worrisome when everybody's saying we're going to have a really bullish Q4. A lot of people are prepared to take significant profits in November. I know we've been talking about this on this channel since 2022. I will likely roll a lot of my altcoins back into Bitcoin at that time just to be prepared. And if we continue to run into 2026, maybe I move back into altcoins early 2026, because I do think there will be a big, I think we continue to move in 2026. I do think there will be somewhat of a sell-off and people will be saying it's over. We're going back to 70K. We're going back to 80K, which isn't even that scary on Bitcoin anymore. But if you're in Bitcoin, if you're all in Bitcoin at say we get up to 150, 180 in Bitcoin and it pulls back to 100K, like, yeah, that's pretty substantial. But if you're all in Bitcoin, you're probably going to be able to ride through that. If you're in some nascent altcoin, when Bitcoin goes from 180 to 100, or if it goes from 150 to 80 or anything like that, that altcoin is getting absolutely decimated. Your coins are basically going to zero. So, yeah, it's to me, that's my plan. Roll out of all. I'm substantially in altcoins right now because we are risk on season. I expect Arrow to continue to outperform, and Morpho, and Athena, and many of the other ones we talk about on this channel all the time. Ondo, Plume, all the RWAs, Avalanche, Solana. I got some Solana stuff for you, Steve. I've missed you, buddy. I've just yapping in my ear all the time. But I saw you. You looks like you changed your stuff on X. I noticed, but I have some Solana stuff to talk about later. I'd be curious to hear if you're.
I'm a FUD Solana later in the stream.
Oh, perfect. Just for Steve.
It hard. Yeah, real hard.
Nice.
I will say this, folks. Tonight we're dropping a video. It's going over Bitcoin alt season and M2 money supply. There might be, let's just say, proof that the cycle is coming to an end and it's time for alt season. It's time for the certain altcoins to shine. And we're going to look at some, just some of the majors and their Bitcoin price pairs. But tomorrow we might do some Fed rate cut fallout. I want to look at some data because everybody's looking at, well, this is what happens the day they cut. But I want to figure out, I kind of had a thought here. What about 24 hours later? If we're green after a rate cut, what does this mean for 30 days? What does this mean for maybe 60, 90 days? If we're red after a rate cut, what does this mean for a forward-looking, data analysis? So turn on the notifications, folks, because we've been putting out some bangers on these videos here. But this might be, or go ahead.
Well, I just wanted to cover this. This was from Kelly earlier. He posted this on X, and it does kind of tie into what I was just talking about. This was really interesting if you look at this chart. This is a 3-day, so this is the last cycle when those months we just showed. This is others chart, which is altcoin. You can see 1, 2, dip, and then absolute rip. 1, 2, we're on the dip, and we could be getting ready to do that rip right now on the others. You can see, though, consolidation period here is shorter than it is here. This is a much longer consolidation, which is what we've been talking about. This accumulation period and like that Wyckoff accumulation has played out perfectly. It's taking a lot longer, which is what part of why I think we can see a much more explosive upside. So this chart right here for others looking very, very, very strong for altcoins.
100%, 100%. Now, one of the reasons we are seeing Bitcoin kind of, lead the charge today, the ETFs sneakily have turned green, everybody. Bitcoin ETFs now see the record inflow. This is the biggest inflow since July. I think it's July 22nd. And now it's pushing the holdings to new highs. So the ETFs have flipped bullish. Mostly, it looks like they inflowed just a casual 20,000 Bitcoin. And a reminder, only 450 are mined every single day. 450 times 7. 2,830 was that 3,050. So only 3,050 Bitcoin are mined weekly there. Now, this is, I might have to do some more breakdown here. There's a lot of people saying we are going to be ending the bull run. And essentially, it's just saying, no, we have not just begun because we are up so much from 16K. So again, if you have any thoughts on is the bull run over, make sure you watch tonight's video. So let's talk a little ETH here. Let's roll into the altcoins. And then I'm a FUD Solana. ETH unstaking queue goes parabolic. But what does this mean for price? So we covered this a week or two ago, TJ, if you remember. So the ETH unqueue was just insane. It looks like it's 12 billion today. 44-day wait time. This is the largest amount of ETH ever for withdrawal by the network's validator. So it's a proof of stake network. And you could stake your Ethereum with the validator. It's a lockup period. So, they'll give you some derivative tokens sometimes, depending on the protocol there. So there's never been more people trying to pull their money out of the bank. But this bank says, well, if no one's trying to pull the money out, hey, John, Tim, Bill, Sarah, they come in, they get their money immediately. But if a line forms, they're around that little velvet serpentine line, well, then they start saying, all right, guy in the back of the line, you're going to have to wait 2 days. Line keeps growing. Now it's at the point where you walk into the bank and they're just saying 44 days before you get your money. You're like, oh, geez, okay, all right. But let's actually look at the data. Now, what's also interesting is there's a entry queue as well. So there's a line for people to pull their money out, but there's a line to deposit. And so this is the drive-through of the bank. Now that drive-through line was also massive. So I was looking into it. I was like, wait a minute, TJ, they removed entry. And I was like, oh, are they trying to be bearish, but it's like secretly bullish, right? Like there's so many people trying to exit, but maybe entries are even higher, right? Because that's what it looked like, if you recall. Like around here, it was higher. Well, no. Entry queue, the drive-through line of the bank has been slightly diminishing. You can see there's more people trying to deposit than pull out money for 1, 2, 3, 3.5 days. But then the execute has just skyrocketed, and now we're at the 44.
Is that
44-day wait time.
I'm just curious. Go to like the 1 year or the all. I'm just curious to see what it looks like overall. Yeah, that's interesting. The all is going to be pretty similar. What's the 1 year on the wait time?
Wait time here. Yeah, skyrocketing. No one cared about it. It was like literally no one's at the bank. The parking lot was empty, and now the parking lot's packed.
Yeah. I think a lot of this, I still haven't really changed my thought. I think a lot of this has to do with the I keep wanting to call it Bitwise or Bitmain, and it's not. It's what's Tom Lee's thing?
Right?
Bitmine. Yeah, Bitmine. Yeah. Tom Lee acquiring a lot of this Ethereum and seeing a lot of these old, Joseph Lubin, obviously one of the founders of Ethereum, one of the biggest Ethereum whales out there. He's going to know who all the other Ethereum whales are. I think that has a lot more to do with this. They've been buying so aggressively.
Yeah, there's a lot of buy pressure, a lot of OTC deals just going straight to these treasury companies, basically.
Exactly.
Yeah.
And it's going to take them a little while to get their staking options set up and that sort of stuff. It's not, they've got a lot more custody things to go through, and they're
did you mean Two-Face from Batman and Robin, Tommy Lee Jones?
Yeah, no, I was talking about the drummer.
Oh, Tommy Lee. Oh, okay, yeah. He had a home movie one time. Anyways, we'll move
allegedly.
On there. Yeah. I want to empty every dog house, bath house, outhouse, tool house.
Great movie.
That is The Fugitive, folks.
Schoolhouse.
Yeah. Great movie. I didn't kill my wife. All right, let's talk about, speaking of kill. Is XRP going to kill the banks? Well, Swift, I don't know, folks. The reason I brought this up is, I've been seeing a lot of people just bring in some takes on XRP. And TJ, I don't know if I share this with the audience. I've been having a great time getting into TikTok lives and then asking everybody the same question. What are your thoughts in regards with XRP versus, what are your thoughts on XRP versus Chainlink in regards to bank adoption? And it's just it's a little bit of a tougher question. But it instantly just makes me realize how uninformed the average TikTok crypto content creator is. I've done it 5 times. I've gotten 0 cogent answers. Yeah, I've been blocked. I haven't got anyone to actually can answer with maybe covering both sides. Usually a lot of ad hominem attacks. Interesting stuff there. But essentially, Swift's made it clear they will not create their own Swift coin. Instead, they're going to focus on enabling third-party digital assets through their ISO 20022 framework. And if you don't know what that is, it's just basically a structured data standard that'll streamline the cross-border payments there. And they had one of the executives on a live stream talking about it there. So, if you hold XRP, that's fine. We're not here to fudge your token. It is going to go higher. It has an insane community, and it's got that Lindy effect. It's been here for a while. People think it's going to be safe, relatively speaking.
And it's got a hard cap. That's one thing that a lot of tokens today don't, and you can't really sleep on that.
It's not infinite token supply.
Right. It's a limited supply. So, with enough marketing and enough salesmanship, it can go up. And so that's something to at least keep in mind. In the top 10, it was what? Cardano, outside of, obviously Bitcoin's limited supply. That's one of the main selling factors for that. Cardano
is
XRP.
45 billion. XRP.
Those are the only ones in the top 10,
and Bitcoin,
right? Yeah, because Ethereum has an unlimited supply.
Yep.
Solana, Doge, all those other ones have unlimited supply. I thought there might have been one more.
They're all infinite, like Eminem's bootleg album from the late 90s there. All right, let's talk about ADA. We got Charles Hoskin in I think a weird AI photo. Charles Hoskin confirms he will attend the Senate Banking Committee roundtable. Oh, wait, that actually sounds something like it's real. So he's going to attend this. This roundtable's focus is on crypto market structure legislation and regulatory framework here. And we have this post just talking about some Cardano price action. Cardano flashing a huge breakout signal. Altcoin Gordon posting bullishly about it. And it's essentially using the same downtrend. I've identified, something else. So they got this. And yeah, we got a little triangle forming here, but it's within this larger parallel channel. And the thesis is the same, though, coming down and retesting this. However, if you don't do parallel channel and you're just to do some TA this style, you do have a target, and the target would be when it has touched the top and the bottom. And we're going to say, this is Altcoin Gordon's prediction here. Make sure we're on a regular chart. Yes. All right, new high for this cycle, $1.57. $1.57 target for ADA.
That works. Is there a certain time period that you expect that in?
I
Like, that's
mean,
this year, you know,
it could
November.
definitely hit $1.50 this year. I mean, look how fast this move was. Let's just kind of measure this. Cardano went from, Jesus Christ, I didn't realize it was that low, 30 cents to $1.30, and it did that in less than a month. And
Mhm.
so it can skyrocket in 25 days for sure.
Yeah.
And shoot, that would be October. But I
Yeah.
think that's a little too hopium laden. I can see something in December popping off. Cardano pumps in weird times. It always has. It'll probably continue to do so there. All right.
And I did see some questions about what time the FOMC is. That is later this afternoon around 2 o'clock. We're going to be live covering all sorts of stuff. I did see some questions about Josh too. Yes, he did post a video last night and will be on the live today. I probably with Drew covering a lot of the pre-FOMC and actually watching the speech and talking about our thoughts on the actual comments. So stay tuned for that. It's going to be a long day of streaming today on all sorts of platforms. We see you guys on Pump.fun. We see you guys on YouTube, X as well. Shout out to you guys on X. I don't think we did Rumble today, but yeah, we'll get back on Rumble soon.
All right, now for some Solana FUD from TJ. Quote tweeting this. There's now 100 million bots on all the crypto networks. 85% of them call Solana home.
See, that was interesting. I don't know if I think this is bearish or bullish. That was what I was talking to Kelly about. Like, I could make an argument that this is somewhat bearish because you can say,
I agree with that. So when you look at the fake volume on Solana, they're like, this is so bearish. It's so bearish. I'm thinking, well, someone cares enough to make fake volume.
Well, or this could end up being, if this ends up being the home of AI agents and AI in the future, and AI uses this chain to transact because it's cheap and it's fast and it kind of becomes the AI winner. In some ways, I could say this is pretty bullish, but I was curious. Steve-O, he actually commented underneath this on X. I was actually curious to hear his take on it. Does he think he's our resident Solana lover? He loves Solana more than anything else.
What's showing up on my feed, man? I got to interact with him more.
Yeah, I don't know. He changed his stuff though. I'm pretty sure it was that post he commented.
He might be in the algorithm.
You know what it was? I think I commented on DB Crypto, and then he replied underneath it. So, but I'm just curious. Do you guys think this is bullish or bearish when a chain is? I mean, that is a lot of bots on the chain, and if all AI ends up being on it, it could end up getting an AI bid. We know big money is going to be flowing into it. It could become a sales pitch for the likes of I forgot the guy's name. That's the big talking head for Solana, and then be like the Tom Lee of Solana now. I can't. Not
Yakovenko, the co-founder.
No. There's another guy that's doing a treasury company type thing, and let's see that. I can't remember his name, but Kyle something Samurai or something like that.
Kyle Salami or not Salami?
It's not Samurai. It's not
Salame, I believe.
Yeah, somewhere, but yeah, there it is. Kyle
Samani.
Sam. Yeah, whatever. Kyle S. We'll call him Kyle S. I think they could really start to dial in that Solana is the AI chain pitch, which will land with normies as new money comes flowing in. And could be very, very bullish for Solana. But I see the super chat here. Should I trade Matic and DOT for Arrow and Link? Interesting question. I know I have done that. I don't hold any Matic or DOT. I do hold Arrow and Link, so I can answer you like that. That being said, Arrow and Link are up a decent amount recently. Matic is such a tough one because ETH layer 2s in general, whether it's Matic, Optimism, Arbitrum, those are I'd say the top three when it comes to use, but it doesn't generally translate into token pumping. I mean, I heard somebody, I don't know if it was Drew or Kelly this morning, talking about Polymarket. We love Polymarket, one of the most successful product apps crypto products, I believe, out there. I mean, outside of financial related apps, it's actually found product market fit. Huge, well-known, uses Matic and hasn't translated to much of a result in the price action. So I don't hold any ETH layer 2s. I'd rather hold ETH, and you could even start to consider, especially as we get into 2026. You've heard us talk about the fat app thesis. I do believe it will be time to start getting into trying to pick specific app winners in 2026 versus buying the ecosystem. So for a long time in crypto, It was very easy. Buy Bitcoin, you're going to do well. You buy the other majors like Ethereum, Solana, Avalanche, Cardano, other layer ones that people are building dApps on top of. And you don't have to pick the one dApp. You just pick the rails and it will probably perform well. That's worked extremely well for me up until this point. It's how we got to where we're at. Now, I think that meta is going to start to shift as institutions come in, as more mature, as the space matures. You're going to have to find the Hyperliquid. You're going to have to find the Athena and the Arrow and the Morpho and look at the fundamentals of the project. Is it useful? Do people like it? Does it have volume? Does it have liquidity? Does it have revenue? And that's where you're going to make your gains in crypto going forward. So to your question there, Matic, Dot, swapping for Arrow and Link. Link is still more of an infrastructure play. So I don't, but Arrow is an app on top of Base. So yeah, I don't hate you I wouldn't hate that decision. Again, that's more or less what I did.
They say George RS says it sucks. I will address the fair criticism of Arrow and some of the same criticism I have here. Looking at the chart now, Aerodrome does some I'm not the biggest fan of, where they pay yield for using their platform, and so that does create consistent selling pressure, and I will give you that. However, I don't think it's as bad as people are. There's some places that they'll give you like 80% APY. The dumping pressure on the token is just insane. But if you compare the price to the market cap, it's still going to be a new all-time high just to, come to the new area. So if it comes back up to $2, we're not like super exceeding the previous all-time high. And so what you don't want is like, if we were to hit $2 again, it would be like 3x, 4x, 5x this previous range. It is going to be higher than this range, but I think it's within the realm of that's sustainable. I would say sustainable sell pressure.
Yeah, and a lot of I think the rewards you're talking about requires you to lock stuff up for 4 years too. So
yeah, but what's the low end of the lockup? Like, aren't there some that pay immediate, right, with lower APY? I would need to investigate it more myself.
No. If you're running, it's a DeFi project, so if you're running liquidity pools and stuff like that, depends on the pools you pick and all that sort of stuff. You can get paid out in whatever pairs you're getting into. So to me, what makes Aerodrome bullish is the fact that Coinbase is behind it. And so like Coinbase is obviously pushing CB Bitcoin, their version of wrapped Bitcoin. That doesn't exist more or less without Aerodrome. They run all of their business through Aerodrome. If Base token launches, that's going to be extremely good for Aerodrome. It's basically like the DEX on the Base network. There are other ones, but to me, there's plenty of product market fit. There's plenty of liquidity running in there. I see this super chat here. Solana could thrive from Swift incorporating stable coins. I agree. They are starting to get more stable coins on Solana and trying to compete with Ethereum there. I think both of those chains will thrive. But right now, Ethereum's been the major winner in the stablecoin world.
100%. There was one Solana price prediction thing I did want to throw out before we go on the next altcoins and stuff. I pulled up the fib level. This is going from the swing high to the swing low. This is going to be the high in July, and then where we end up dumping later towards August. And if you notice, it came right up to that 1618 level and has been respecting the level, shot above it, then used it as support, then shot below it, then used it as resistance. So I found that kind of interesting, but it was the next level I want to share with you guys here. That's going to be the 2618. That's going to be right around a $290 Solana, which, some people might have the little memory here. I'm trying to get it right there on there. That's pretty much exactly where we landed last time. So, yeah, you could definitely see that being that maybe the next point for Solana if we continue to break out. But also, it's going to break out here is BNB. They release Arrow is paid into locks, is max locked by Arrow. That don't goes is liquidity positions, but those LPs have high yield, and so you see it right here. Deposit stake liquidity to earn Arrow. So there's going to be different types of pools. Liquidity pools are going to be more liquid, I guess is kind of in the name there. Yeah, so it's going to be a little bit of sell pressure from those as well. Now let's talk about there's the CZ post. Binance drama back in the spotlight. Bloomberg says Department of Justice deal may end the compliance monitor. Minutes later, CZ flips bio from X Binance to Binance again. Markets going wild. TST, that was, I can't recall, was it the science token or no? Test. I think it literally just stood for test. It was their first token that they tested. I actually have some of that on some random, I got to find that whatever BNB wallet that's on. Is CZ comeback back on the table? Is BNB ripping? Well, let's look at it, folks. This is going to be the BNB chart right here. Hell yes, we are. We're coming up against that not quite ancient dragon resistance, but this is the resistance from March 24. We hit it again June 24, hit it again December 24 after the Trump pump. And then you can see we're right at it again. Let's zoom in a little on the 4-hour. Yeah, I mean, that's this is definitely a level. And then, of course, 1,000 is going to be a psychological number. I think it'll hit against that, hit against that, hit against that, and then that's when we can resume some price discovery there. But BNB has just been performing great recently here.
It's a monster. I mean, it always has been. You know, they've got an underlying business behind them. Obviously, they pretty much own the volume when it comes to crypto. Hyperliquid coming for the crown. I would like to see them continue to take a chunk out of Binance's business. But yeah, Binance, CZ. CZ, one of the GOATs, in my opinion, in this space, one of the absolute legends that really brought us, really advanced us quickly. You could say, you know, it was a move fast and break things type of approach. But BNB, from the beginning, you know, they were the first ones. I don't know about first, but the first major one to normalize and incentivize with buybacks and burns. They were the first ones. Hey, we're going to take some of our quarterly profits, buy back the token and burn it. I think that's coming close to an end, but they've been doing it, 6 or 8 years at this point. So I absolutely see that crossing $1,000 a token. I remember saying back in 2017 that BNB is like the Amazon of crypto. Because they touched everything. Obviously, they own a lot of the market making, and it's just
so it's the P Diddy of crypto. Just it touches everything there. I'm talking about his connections in the music industry. Everybody,
right.
Nothing involving exotic oils. Let's talk about Pump.fun. Pump.fun streamers. I want to see you guys in the chat. I see that there's millions of you on that platform. Maybe a little bit less here, but this is a crazy story from Pump.fun and. Let me go ahead and front run it. I bought a little, very, very small amount, like, you know, triple digit, nothing crazy, no commas here. Pump.fun streamers leak Drake song and then saw a 3,000% surge. What is going on here? Drake puzzled over the Bagwork token dev stunt. So this his quote. First time, this is from the stream. First time the song is ever played, one of the live streams, while another one shouted, buy effing Bagwork right now. Did this promo campaign involving unreleased Drake music work? Surely did, but only temporarily. So Drake called, actually, this is where it might just be a little advertisement here. Rolling Stone reported that Drake called into Aiden Ross's stream. I don't even know who the F these kids are. Talking about those who have leaked his unreleased music. Aiden Ross then went on to contact the Bagwork duo. Now, this associated token skyrocketed 3,000%, hit over a $50 million market cap, but then it ended up dumping. It would end up dumping at 44%, but that was just child's play, folks. It would continue to dump, and let's just measure this real quick. This is the token. Looked like it fell 90%. It basically fell 90%. And we go here, among other exchanges, MEXC, the first to list this token, this Bagwork token, and they're notorious for going to lengths to promote their tokens. Today, rumors swirled they're not done. They actually promoted a flag with the token name of the Hollywood sign. And this is just a weird screenshot. I was like, I don't trust this. No, they actually did it, TJ. They actually did it.
Wow.
I gotta admit, I respect the hustle. I bought a little bit, just a little bit right before we went live. So I guess that's going to be 3, 4, 15-minute candles ago. 1, 2, 3, 4. I'm up 5%. So I'm not trying to shill my bag. I just saw that story and I was like, okay, it's down 90%. What?
Yeah. They've got quite the reputation on there. It's this whole Pump.fun experiment is going to be interesting to see how it plays out.
Look at the daily.
Yeah, I'd love to see it be more legitimate for content creators, less crime and less scamming. Right now, I feel like on the app is about 85 to 95% scammers and max extractors and actual literal crime. So, we're going to be there trying to teach the people in the trenches to degen a little bit less. I guarantee people bought the top of that and just lost all their money immediately. If you don't think that team knew that was going on, knew it was going to get a ton of attention and dumped on your head, whether it was Pump, I don't know if it was Pump.fun team, but definitely Bagworks team. Yeah, it'll be really interesting. I like a lot of the stuff that Alex Becker's doing. I like the way he's trying to create incentives for creators. Right now, the incentives aren't aligned with quality content on the site. It's just made to be like you're incentivized to launch a bunch of tokens and hype them up and dump on people. Streamers aren't incentivized to invest traders aren't incentivized to invest long term. They're incentivized to find an early person before they bond, ride up the bond, and then dump it. So, but I do think, and this is something I've been passionate about for a long time, I do think there will be a shift in content creation where right now YouTube and TikTok and all the streaming platforms, they take 80% plus of the revenue that comes in off of the attention, and they kind of give the streamers and the content creators those 20% crumbs. I do think that model will shift. I do think the efficiencies from crypto and blockchain will make that possible. I just don't know if that's going to happen this year, next, or within a year, or sometime in the next 10 years. But somebody will crack that code. There's other models like Pump.fun out there right now. I've talked to some of those teams. Somebody will get that right, and it will be interesting when they do. Right now, it's still in its very, very early stages, but I love the authenticity of it and the freedom. It's truly a free market, and anytime you get into a truly free market, that means there's bad actors there. They will probably be there the most, the loudest, earliest. And so it will be interesting to see how the market evolves and adapts to either root out some of those bad actors or if it will migrate away. Again, I've seen a lot over the years, Friend Tech and Steam It, even all sorts of different things. There was a Snapchat or TikTok type competitor back in the day. We've tested a lot of them. Pump.fun has some money, but I wouldn't compare. I saw a really interesting post talking about, because a lot of people like to compare Pump.fun and Hyperliquid because of their revenue. They both generate a lot of revenue. Hyperliquid is almost the opposite, though, in some ways, where Hyperliquid built for 2 years, didn't extract any money. They did an $18 billion airdrop, and then they've just been rolling and rolling, giving all rewards back to the community. Pump.fun's kind of done the opposite. They max extracted. They took a bunch of money. They didn't do any airdrop. Now they're doing the creator rewards, which we like, and I'm a fan of creator rewards. I'll just be interesting to see how much the team, if the team wants this to work for creators, they will adapt, and they will basically listen to most of the stuff Alex Becker's telling them to do. The person responsible for giving the coins utility is Pump.fun, is the platform. If you expect each creator to come in and make their coin worth holding, you're going to be disappointed. But if Pump.fun implements basic utility into this thing, it can work. The question is, are they incentivized to do it, or are they just happy taking the money they've already got?
Or are they willing to steal Drake songs? But then you got to sell into that pump. Sell like as the song is playing. Don't wait. Don't even wait for the chorus. Okay, the intro starts. He's like, yeah, sell. That's your sign. You sell right then and there. All right, now this is one of the most bullish things I've seen. Not a lot of people reporting it, and all roads kind of lead to USDT at the end of the day. All roads lead to Bitcoin, but you can also say all roads lead to the #1 stablecoin. I'm not gonna lie, I've never seen this much Tether printing ever. You already know I track it. Let's just say they printed the most USDT I've ever seen in 2 weeks this entire cycle. No shorts for me over the next 3-4 weeks. TJ, we don't trust, we verify here, right? So I wanted to look at 2020, just kind of start. This is the start of 2025. Yeah. So you can see, bear market, we kind of pumped into it. So this is January 1st. We're sitting around, 138 billion. Okay. You go into March, we're up to 142. You go into May. Whoa, wait a minute. Something happens in April here. Whoa. Dang. Whoa. Yeah, the man's right. This is that's a log chart too, so it actually gets crazier. Wow. I didn't even realize I had on log. Yeah. That's insane. Now, this 2-week period could potentially exceed it. So he's lying. He's lying. I don't, man. Sometimes if you look at a log chart and then you retype in TradingView, it'll default to log. Yeah, he didn't know what he was talking about there. This is definitely more printing in this 2-week period. However, let's not diminish this by any means. This is massively bullish, and I definitely wouldn't want to be fading altcoins, fading Bitcoin, following a USDT print like that.
No, that's new money coming into, that's liquidity being added into crypto. And that's what we're predicting for the traditional market, is to get liquidity from the Fed and from the Treasury injected into all markets, which will be in the trillions of dollars. And then seeing that we're already preceding that right into crypto.
It's Scott Bessent opening like the back door of some like Chinese restaurant, and he like opens it, and then they're like just getting rid of all the debt. And the stablecoin buyers are just buying up all this debt. And we hope that the Ponzi keeps going.
Yeah, well, if they don't really have a choice but to keep the Ponzi going. It's a confidence game. It has been for a long time. They're starting to lose the confidence of the people. They've definitely, anybody watching this has obviously moved over to Bitcoin and crypto, and you guys are ahead of the curve. And just like DZ said, it's better, you don't trust, verify. You absolutely cannot trust the government. You cannot trust the Federal Reserve. They are slowly stealing value from you. And it never ceases to amaze me when you see those posts about, like, imagine working for 40 years for something that they will inflate away the buying power of in 15 minutes. Jerome Powell Trump decides, hey, let's do 3 trillion instead of 2 trillion. Like, there goes 40% of what you've been saving for your whole entire life. And that's fine.
Evil. It's evil.
It really is. It really is.
All right. Well, folks, we are going to roll into another host here because we got a very, very special show for you today. I do want to, before we roll into it, let's just kind of, we got it right here. Kelly, the markets are dumping pre-Powell. Does that mean Powell speaks and totally reverses? Do we got the V-shaped recovery coming?
We saw the run up into the expectation. Everybody was watching for this. I think it all started really following Jackson Hole Summit with Jerome Powell's softening stance. The markets kind of, got a little bullish coming into this week, and it makes sense. We're getting a little bit of a sell-off right now, but I got some killer charts to really highlight what I'm looking at, not only through today, but also going through the end of this week into October and November, which is kind of crunch time coming in here. But great stream so far, guys. I always, for everybody that's out there, give a shout out to the Discover Crypto family. We were in YouTube jail there for a minute, but we are back live with all systems pumping, not only on YouTube, but Pump.fun, also here on X, on my X, on Discover Crypto. So we got some.
Yeah, that's right, Sergey Brin of Google. You can't keep us in the jail, you island visitor. I know your past, Sergey.
Yeah, but we got some good things lining up. I can take it over from here if you like.
Man. Go ahead. Folks, stick around. We're going to be rolling into Jerome Powell's speech. Stick around. Kelly's going to give you some excellent chart analysis, man. I can't wait.
And real quick, just for those watching on Pump.fun, we are going to take some creator rewards, roll that back in. Don't expect us to pump this. This is not about the token, but
what do you mean by roll it back in?
I would take the creator rewards and buy a little disco.
There you go. Some buybacks. You happy? Yeah.
It's a day for buybacks. We're talking about. No promises long term, but somebody asked what the plan is. The plan is we're going to be here for the long haul. We do this every day. We're not going anywhere. If you guys want to ride with us, ride with us. That's cool. We are as this evolves, we will do some fun and creative things, but no promises. I'm not telling you to buy the coin.
We might do a thing where you can compete against me in a video game and maybe earn a couple $100 or something. Hell, I might put 1,000. I might put some of my own money on the line because you're not going to beat me.
All right. Well, we'll see you guys.
At the end of the day, it's, I think one of the things all of us agree with here at Discover Crypto, we're super happy about being on Pump.fun. We're super happy to be with the family there. We're not going to pump and dump it. That's the whole thing. If it grows organically, I did myself a little allocation there into that DC Stream token, but it's going to grow based on whatever the community's doing. It's not going to be us pumping it. Hey, guys, we're not going to do things specifically to pump it, but we're going to do things to specifically make it an actual community token by just participating on Pump.fun like we are here, also on YouTube, on X, breaking down the data, breaking down the signals. And I know TJ, myself, Drew, DZ, we want to make sure everybody's educated as to what's happening in this market, because we see so many people going overwhelmingly, impatient in this market when the market is doing enough. Like, do I play in the degen space? I absolutely do. However, I do it in a very, very, I don't want to say restrictive, but just very thoughtful way in terms of it's not going to put my portfolio at risk. Now, if any of those tokens I have absolutely pop, then great. That's all extra money. It's not like, oh man, I can't pay rent this month because I was expecting this token to absolutely change my life. The truth is, you never know what it's going to be, but you can look at the signals and really get set up there. But now, when we're diving on this, could you give me a price prediction on Link, Ondo, and Say? Yes, we will cover all three of those. And of course, today it's going to be a mega monster stream today, going from the 10:30 slot that we just wrapped out. We're going to continue this going all the way through beyond when Jerome Powell gives the rate decision, and also when that rate cut is the press conference around the rate cut and what he says. It's going to be a very big impact. I mean, think about what just happened only a few weeks ago with Jerome Powell speaking, not making a decision, but speaking at the Jackson Hole Summit. Just his tonality, the shift in tonality lit this market on fire. Today, we actually have a rate decision after yesterday's, tribulations and trials and the different discourse that they've had in those back rooms, which we'll get the minutes on here in about 3 or 4 weeks, 2 or 3 weeks. But the actual decision's happening, and then the press conference where we're getting more tone. So today the market's going to be trading what that decision actually ultimately ends up being, but then the tone that then signals what's going to happen in the future. Now, why is that? I think everybody needs to really realize why this is so important, because the tone in some ways has more impact than the decision as of late, what we've seen. Why is that? Because people that are actually making money in this market are looking at a grouping of different data points, a grouping of different things that are implying what is going to happen in the future. They're forward looking, which is why we saw on the markets, on Bitcoin, on S&P 500, on stock markets, on these different assets people are invested in, you see specifically the run up in the charts to this date. Now, this was also very much in line with when we saw that Jackson Hole Summit. When was the Jackson Hole Summit 2025? Let's see what that date was and see what it looks like on the chart. August 21st to the 23rd. Now, where does this lie on the chart? Now, I know all you people over there on Pump.fun are like, we want the mean degen charts right now. Well, I'm giving you the lessons on how to fish rather than giving you the fish. I'm giving you the data. I'm giving you the tools so that you can create the edge so that you can actually dominate in this market. So pull up your britches, because I'm about to get deep on you right now. Now, when we're looking at these charts, Jackson Hole Summit, no decision, just a tone shift in his talking points. Now, let's see about where that was. August, this is about right here. This is that pump right here after Jackson Hole Summit. We ultimately did go lower. Oh my God, it didn't work. Well, here's the deal. The tone shifted and the pattern ultimately played out into what you could have foreseen anyway, which is a price action falling in a bullish pattern, retesting what? A previous range high chop zone. So top here, top here, top here. And we had this marked out based on this previous range top back here in January of this year. All of these price points of previous price action where there's bounces or rejections, and this happens on meme coins as well, it colors basically a map of areas to pay attention to in the future. Now, we're going to get into altcoins, and I have some monster, overwhelmingly bullish altcoin charts I'm going to be showing you in just a few minutes. But we need to really ground our analysis first in what Bitcoin is doing, and then what Ethereum is doing, and then we can expand that into Solana and XRP and Say and Sui and Ondo and Link, all these other assets. but Bitcoin primarily, and then also along with that, almost tied. But we need to pay attention to what Bitcoin and Ethereum are doing, because they're going to be the bellwether of what the sentiment is going to be in terms of capital flowing into or capital coming out of a market. If capital's going in, think of it like water on a plant. If you're watering the plant, you can expect that it will likely, or at least more likely, grow. If the plant has no water whatsoever, you can expect that those leaves are going to start to turn brown, and at some point it's going to wither or die. Money going into the market is watering the plant. Money coming out of the market is basically starving the bull's ability to go up. So when we see this price action with this breaking down into a previous range, a little bit below where people want, because this was the top of that previous range, and that was right here at about $112,000. Well, the price came down. Did that fail? No. There's overwhelming expectation in this market as everything has developed to be so bullish in the crypto space in terms of the landscape, the context, the framework for which the crypto market lives in now is a different universe than it was 6 months ago, let alone a year ago, in terms of support versus suppression. The market is still wrapping their mind around this. They're finally waking up to, maybe we should take a peek at this. Maybe we should come up with an action plan. And we're seeing that overwhelmingly signaled in the on-chain data, in the ETF appetite, in the corporate treasuries for Bitcoin, Ethereum, Solana, DOG, Bonk. I mean, there's a number of different publicly traded corporate treasuries that have been stacking in, and I think that's only going to increase. So the fact that this broke down a little bit beyond this previous range high isn't bearish to me. This actually is bullish. This is me seeing the market makers saying, let's convince them the top is in, and then we rebound. And this is what we did. A little bit of a bear trap below this range. None of this is a bear trap. This is a bear trap once we break below this previous high range, okay? And then within that, we had much lower lows, and the RSI is getting fairly flat through this point. I mean, look at how much lower this is, from 112 all the way down here into 107. And the RSI is essentially, it's not flat, but it's near flat. There's not a lot more weakness here, but the price is a lot lower. This screams to me, let's shake the weak hands out, because they're only here as tours. So my question to you, and this is really directed to everybody out there on Pump.fun, are you a tourist? Are you just a noisemaker? Are you a keyboard warrior that's a troll that has no freaking idea how markets work? If so, hey, more power to you, but life's going to be difficult. But for those of us that are paying attention to the data in this market versus just, I want it to go up, I hope it goes up, or that one sucks, you suck, that's a pump and dump because you lost money. That doesn't fly in these markets. The market doesn't care about you, and it never will. That's the truth. And that's for people in Bitcoin, Ethereum, and meme coins. You have to make your own luck in these markets, and that's by finding an edge. That's why yesterday we had Caleb Franzen on, and we broke down a lot of the economic impacts, the economic framework that could give you edge, that was front-running the signal that now we have clarity that, yes, we'll get a rate cut. And that was that 3-month treasury yield dropping, always foreshadowing when we get rate cuts. So today, now, if we don't get a rate cut, it's going to be a bit of an upset for a big, the majority of the market. But also remember, the majority of the market typically gets upset. So the question here is, the upset going to be that we don't get rate cuts? Or is it going to be that we get rate cuts and the market really doesn't do anything because it's already priced in? Or do we get a larger rate cut than is telegraphed, especially on things like Polymarket? Because you can see, I'm sure they showed it earlier on the stream, but we got different people rolling in at different times, 5,000 people in the room. Shout out to each and every one of you. Remember, put your hand on your heart. Be grateful you're here. If you're making money or losing money, all of these things can give you lessons and an education on either where to strengthen and really solidify your strategy, or where to change your strategy. And that could be in life, that could be in markets, that could be in love, that could be in romance, that could be in family. All of these things are intertwined. So let's get back to the data. Fed rate decision in September. Today, FOMC was yesterday and wraps up today, 2 p.m. Eastern time, which is in about 2 hours and 15 minutes. We get the rate decision. 30 minutes after that, we get the press conference around it, both of which are going to have impact on the market and how the market is responding to those two things. Now, today, 25 basis point rate cut is currently at 91%. And this is ticking around a little bit. If we look at this on the 1 hour, it's not ticking around that much. 90%, 91%, 90%, 91%. So about 90%, 9-to-1 odds based on people betting. It's not just, hey, I'm voting. People betting with money are, about 91%, about 7%, 50 basis points. So if we get this could be bullish, but understand what this means. If we get a 50 basis point cut, that's not necessarily all systems go. Now, I think it will have an immediate impact. The market will boom. 2 o'clock, if we get a 50 basis point cut, you'll see the markets broadly probably respond pretty darn bullish, because this is, double the expectation of what people broadly are looking for. But then again, when you get the press conference 30 minutes later, if it's 50 basis point and he has soft language, dovish, we're going to get more rate cuts, and, things aren't as bad as they seem, except the labor market, because we had bad data. But, it looks like then you start, that's positive. That reinforces the bullishness from the, 50 basis point rate cut. If we get a 50 basis point rate cut and they're very hawkish, okay, we're doing this. We'll see what we're going to do later. Maybe we don't do another rate cut. Then the market responds to that, and you get that sharp up move right when that 50 basis point rate cut happens, and then you'll get a sharp sell off after, because now people are then pricing in, well, maybe that was it. And as DZ pointed out earlier in the stream, the last 3 rate cuts, the first 2 saw, pretty strong bullish response following that to persist. The momentum continued after that. The third one, a little run up into it, and then a sell off. And yes, it did rebound up to about a double top, and then it sold off again from there. But the point is, there's so much spring-loaded tension in this market right now. And I just want to highlight something. For those of you that think the market's not doing much, well, let's look at the total market cap. Crypto total market cap, most boring chart out there, right? It's because you're not paying attention to the data that really is going to impact what's going on. And that's this. When everybody was crying about the price moving from, look at this up here, this was a market cap of about $3.72 trillion. And this, December, this is when the price went up to, let's see, December would have been back here. This was, when the price went up to about 106, 109,000. And then again, 108, 109,000. But then the market's over, right? The market topped. Similarly on altcoins, with that run up that never followed through. Broken hearts, broken spirits. But then you go back over here and realize went from $3.72 trillion, and it dropped all the way down here at the beginning of April. This was that sort of the fear of the tariffs, aka overwhelming opportunity for those of you that were stacking. I don't care if it's SPX 6900. I don't care if it's Bonk. I don't care if it's Bitcoin, if it's Ethereum. I don't care if it's Link. We saw a big pullback in markets around this time. And people were crying. They're upset. You're not going to make it if you're upset at this drop. Why? Because this drop has now proven, and this happens time and time again in bull markets, this drop proved to be an overwhelmingly good buying opportunity for those that weren't absolutely frozen in fear because they weren't sure what was going to happen. First off, on the 4-year cycle theory, we're nowhere near the top back here in December. So that's point 1. You're telling me we had a drop during a bull trend? Well, that's what every bull trend does. Let's just zoom out and take a little peek. Let's take a little gander. Bull trend, since back here, and it started on the breakout, but the bull trend was really formed. First fundamental change was this top, followed by this bottom. Why? Because this top right here was finally a new high, followed by a new higher high, followed by a new higher low. This is where the bull trend started. But along the way, look, that was a dip, that was a dip, that was a dip. And these dips aren't small. And this is Bitcoin, mind you. So that was a 20% dip. This also, same thing, was about a 20% dip. And then you see back over here, this is right after the ETFs went live. Oh my God, the market's over. I thought the ETFs were bullish. Why we get a 22% dip? Because they're giving the people that are looking at the data and that are not crying, being keyboard warriors on Pump.fun, on X, on YouTube, on across the, everybody in the market that is basically operating scared because they're over leveraged, they're too overexposed, and they're not looking at data. They're being sidelined by price movement. I don't give a crap what the price is on any asset. I look at the price only as it relates to the data that is corresponding with that price. And you look at that over time, and you get a map of the swings of the momentum bullish and the swing of the momentum back bearish. You do that on the small time frames, the medium time frames, and the macro time frames. And in this case, we've seen these dips over and over again. And not only did we see the dips here over and over again, we saw a sideways descending consolidation that proved, once again, $74,000. Wait, is that the top? No, it's not the top. That was the top. Yeah. No, it's not the top. Let's get back in. No, it's not the top. And then here we go. What did it do? It just came back and retested previous range high. See how simple this is? Well, it's not simple because we're all emotional, and you never know when this is actually going to break down. What happened in 2022 is still, miring people in just fear. What happened in the run-up in 2018, and then the subsequent sell-off, and then now it's going to go parabolic, and then the ultimate washout. The problem with markets isn't that they're choppy. The problem with markets for most people is that our emotions are choppy. We get too expectant. Our bias becomes too pervasive in the way we're looking at the market versus letting the market do what it's going to do and responding when we're seeing setups based on something leading up to an event. We're seeing the setup take place, and so we can respond with an action that we are already looking to do once certain triggers hit. So today, very, very telegraphed about the rate cut. And here we go. We had the sell-off from, all the way up here, 109 back here to the previous range high, bullish divergence. What am I talking about? Look, lower lows, higher lows right here on the RSI. That didn't happen anywhere through this entire phase until here. And we tested a previous range high. So that gave us the signal. So then let's look at where we're at right now. And this is going to spill over. We're going to talk about altcoins. Stick with me here because you got to make sure you're waxing on and waxing off if you think you're going to become the Karate Kid. And the same thing in meme coins, the same thing in altcoins, the same thing in markets. You have to look at the drivers of the sentiment in those fields. Now, Bitcoin is not the driver for the sentiment of Bitcoin, of the crypto ecosystem, but it gives you the hint. It gives you the signal about what smart people in crypto are doing based on the other signals that are giving that clue. So looking at this, what do we see? We see a double top. That means the top is in. Well, not always. And I talk about this regularly here on Discover Crypto, BitLab Academy, on the Mario Nawfal show, where I'm hosting a lot of stuff. And I talk about the cycle of broken expectations. And what we're seeing over and over again, especially on the mid time frames, like the 4 hour and below, is you see a setup that fails, and then you assume that that setup fully failed. And what is really taking place is the setup. Bigger players are aware of it. They're also looking at liquidation heat maps. Where did that go? Did I move it? Oh, here we go. They're looking at liquidation heat maps where people are going over leverage long, over leverage short. And they're taking advantage of people. So while you might have a head and shoulders on an altcoin that tells you that there's about to be a bearish reversal to the downside, you'll get the breakout downside, and then you're convinced that head and shoulders playing out, and then it doesn't happen. A great idea of this right here. Let me actually go out of this chart and I'll show you here. Let's come over here to Chainlink. Here's a great example. Let me just where is my here it is right here, replay. Boom. So look at this. And I talked about this on my channel and on Discover Crypto quite a bit. This is starting to look like a head and shoulders was playing out. Why? We got a bit of a shoulder here, got a bit of a head here, and we have this kind of cattywampus, Hashimoto sort of shoulder forming here. Let's watch. And not only that, you have the rounding top. So this was signaling based on chart patterns that maybe this was going to break down. So how did this play out? Let me exit that. Let's see how that plays out. Okay, there we go. Now we have the shoulder, head, shoulder. Okay, let's look at how this plays out. Now we, boom, starting to break the neckline. Okay, let's exit our entire positions on length because the head and shoulders in the middle of a very bullish trend is signaling it's all over. Well, let's see how that played out. Okay, look at that. Okay, now it broke down, came up for confirmation to touch it. Let's see, does it break back in or does it break down? Yes, I knew it was a head and shoulders. I knew. And now look, let's just add to our shorts. It's breaking down. It's done. The bullishness on Chainlink is over. Oh yeah. Wait, I don't know what's going on because it's just so choppy. Yeah. Okay. Yeah. Bearishness. Wait a minute. I thought this was a head and shoulders. Now, the reason why this is important, yes, this did break down, but what ruins people is they take the measurement from the top of the head to the neckline. This is the neckline right here. And they go, okay, they take their short, or they exit a position, which is technically a short. If you're long, meaning you're holding, even without leverage, if you're bought here on a long, zero leverage on Coinbase, and you come up here and you exit here, in a way, you're kind of spot shorting, right? So now you're out of the market. You see, here's the target. So we're waiting. We're going to get back in when Chainlink hits $19.32. Well, this convinces you that. Breaks down, confirms, comes down, and then reconfirms. And now you're very confident this is going to hit the target because this is the target. And then what happened? The price action only achieved about half of that. And not only did it only achieve about half of that, it basically trapped this bear trap, traps these people short, comes back up, finds support here. And this is where we're at right now. Yet again, signaling potential bearishness. The point here is so many people are getting eaten alive because they learn a little bit of technical analysis and they think every rule that is in technical analysis, whether it's patterns, levels, fibs, they think it has to play out 100% of the time. And that is never the case, ever. So let's get back to some of these things we want to look at today, because we have the total market cap, which dropped from 3.72 trillion down to, look at that, $2.42 trillion. That's a massive, massive move to the downside, right? Over $1 trillion. And now from April to where we're at right now, the market cap has gone from $2.42 trillion all the way up here to over $4 trillion. And we have so much room to the upside. Shout out to the 5,210 people that are in the room. Make sure you're hitting the like button. Get active in the live chat. I want to know right now, as everybody's hanging out here, we're looking at charts. I got a lot more stuff. I got some other altcoin stuff we're going to be dropping here in a little bit. I might have a guest that's going to be coming on a little bit later. But let me know right now, end of day today, in terms of the crypto market close, so 8 p.m. Eastern time, is the market going to be higher or lower than we are right now? Regardless of the chop, regardless of if it goes a lot, are we higher? Do we end up or down from where we're at right now in Bitcoin and Ethereum? Let me know what you think. And also, if you had to buy 3 tokens right now, let me know that too. And this is for everybody on X, on YouTube, on Pump. And I know it's going to be different people on different platforms. Some saying in the Bitcoin top cap, some saying in the mid caps, some saying altcoins or meme coins. If you had to buy 3 coins right now and hold them through the end of October, what would be those 3 coins? And remember, all you memers out there, remember, I said hold, not trade, but buy today and hold through the end of October. All you blue chips, mid caps, all of you. I'm curious what coins you're seeing, and maybe we'll look at them. Some of them here on the charts here in just a bit. It is noon, September 7th. I cannot believe it's September 17th, 2025. The days are going by so fast. Okay, now let's get into the data I really wanted to share. We're at neutral stage on the fear and greed. Great. We're sitting here tickling this basically all-time high market cap for crypto. And we have that rate decision today. Now, we got some other things. That's not what I want to show. Right here, leading into what we're looking at right now, the traders are leaning long, meaning the data is showing that they're starting to become a majority going long in anticipation of the Fed meeting. Now, this was at 10:29 a.m., so this may have shifted a little bit since we saw a little bit of a bleeding in the market. Yeah, I see all y'all's kinetic pixels. I see you, Brian Villages, Rich Miggy. I see you. I am here. Brad Hopkins. Objectively, Real Reality, Objectively. What a great name. I always love that. Mr. B33, Moonwell, he says. Paul O'Boyle says lower. Somebody said, oof, Aave. So I'm going to have to take a look at Aave, see what's going on there. HBAR, Pump, Sui, Camino, Morpho, Sol, XRP, Bitcoin, ETH. I see you just got those top caps. I like it. Vet, ADA, Theta. I haven't heard Theta in a minute, man. Wow. Linea, Arrow, maybe Ondo. Shout out to you. Yeah, we'll get into some of this TA on those here in just a little bit. But right now, the exchange open interest turned positive for the first time since September 13th. So about 4 days ago. And this is, what is open interest? What is positive open interest? This is showing that the people are going long. Now, let's see how many people get wrecked going into this, because we have the liquidation heat map showing that there's a pretty equitable level above and below. However, the price has moved down and scooped this up. So does this mean that the pump is completely failed, is done, because the price moved down from about, look at that, 117,180. Oh my God. And now it's down here at 115.5. Well, when you're looking at the liquidation heat map, if the expectation is to go higher over and over again in assets, the markets move the opposite direction to wash out the tourists, to take the free liquidity before they leave it behind. So what I'm seeing is a price action coming down, setting up better long entries as they're washing out the over leveraged tourists in the market, and then it can move up in a healthier fashion. And then we have all this liquidity we can scoop up above here. Why leave all of this liquidity behind? 80 million, 100 million, 100 million, 100 million, 37 million. There's a lot of money right down in this zone, and they scooped it. Great. And yet again, today's Wednesday. And what is Wednesday? It is pump day. It is not hump day. Why is that? The data is revealed. What is the data? This is a reminder that today is Wednesday, 3-month average return, Bitcoin and Ethereum. And what day has the most positive returns? Wednesday. Which days has the worst? Saturday on both. Now, Monday is pretty bad on Ethereum as well, but Friday and Saturday on Bitcoin and Saturday on Ethereum. And here we are on Wednesday, where we're also getting a rate cut decision and expectations of another leg in the market. And it's not just Bitcoin, everybody. When we come back over here, we look at the dollar index, even for all you meme degens out there, this is going to impact you. When the dollar is falling like it has since that day that Bitcoin turned around, was also the day that we broke below this resistance, or this support, I should say. When this is trending down, risk assets pump. And this is what we're seeing. We've been seeing a nice movement over the last few weeks, pushing to the upside. And this is setting up, looking like it may move lower. But what does that look like? Well, let's talk about some of these things. This is where I'm looking for the targets. And I shared this a few months ago. I'm still looking at this. Even when the price was falling down into the zone, I was hoping that we got down here into the gift from God buy zone. I was praying for it. Most people would be like, God dang it, I guess it topped again. We're not getting the bull cycle. And I would have been like aping in, because on the 4-year cycle metric, we're not at the top in terms of a time basis yet. On the data of accumulation and long-term holders and the demand and ETFs and corporate treasuries, everything is screaming, what the heck are you crying about on dips? That's what it's screaming. Dips right now are gifts for those paying attention. So I'm still looking at these. In fact, I'm looking probably somewhere up here in this 213 to 240 region, somewhere in here. It used to be, I had this when I listed it as a hype target. Now, effectively, I think this is a likely target based on just what we're seeing in the market. Now, why is that? Well, first off, look at the capital flow. A bunch of lines on the chart. What does it mean? Blah, blah, blah. Well, let's look at 2017, 2015 in the setup into 2017. Well, we had the large capital impulse up here. This is right when the market kind of kicks back into gear. Pullback. Oh my God. Capital came out. People are scared. Oh my God. And what happens? You get into negative capital, just a touch, boom. And then you get another impulse up about the same height. This was here, right across the halving. And then it dipped back down. People are scared. It dips right back to, let's take our money out because this isn't fun. Well, it's not fun when you're not involved in this part of the pump. And if you're scared every time it dips, crypto is not for you. But if you can learn to utilize that fear as an ability, especially not just it's scary, let me buy. That's not the strategy. If it's scary in the context of what you're looking at in market cycles and other overwhelmingly bullish data, while everybody else is scared, you're buying those dips, and then you just are stacking into more and more profits on the rips that go to the upside. But what I'm looking at here in reality is this move, this swing to the downside, as you see here, that then swings back to the upside and double tops, comes back, we have a lower high, and then the rip. Well, look at this. Look at what we're seeing in this cycle. And I talked about this for the last 2 years, about this cycle likely looking a lot more like 2017, except being extended. Now, what do we see? We see, okay, the swing to the downside, capital coming out of Bitcoin, comes back up, double top, boom, lower high, same thing, double top, lower high, and a lot of these are revisiting back to the zero line right here, getting slightly negative on the way to the upside. This is what people cannot prepare for, is understanding what your long-term or mid to long-term play is. And even for you in the small cap coins, altcoins and meme coins, this is going to be a major driver. What happens in the market cycle going into 2026 is going to be a major driver for capital flow for all those mid, small, and micro cap and meme coins that are out there. Now, are we going to get the same sort of Bitcoin, ETH, top caps, mid caps, medium, small caps, memes? We've already seen that isn't really taking place this cycle. Now, in everything else it is, but memes are having their own cycles. They're having their own little impulses, their own catalysts, but there's also an orders of magnitude exponential basis now for what we're seeing with meme coins in terms of how many are deployed. We're live right now on Pump.fun. We're live on X. We're live on YouTube. And the creator rewards that are now happening on Pump, the tokenization of content, there's going to be an inordinately, parabolic increase in the number of tokens that are out there. And in some ways that sort of mitigates some upside for the majority of those types of coins, because you're getting this mass distraction. You're getting this mass dilution of how capital is being spread across a lot of different things. That doesn't mean you're not going to have winners out there. Same thing like buying a lottery ticket. And meme coins are lottery tickets. Now, there are certain things that you can do within the meme coin market to really, theoretically identify, well, this one might run because it has the right team behind it, has the right this and that. But at the end of the day, it's all just randomized, right? It really is, who would have guessed that, an AI created meme coin about, Godius Maximus, would have be the runner that was, or Pepe, right? And so what we're seeing here now, Dog on Bitcoin, I really like, because it's kind of outside of all those meme issues. Every token's already out, and it's not out to a bunch of team members. It was equally distributed amongst everybody that was a runestone holder. And now it's, it's taken on a life of its own. Over 100,000, roughly over 100,000 holders. They're not paying any KOLs. There's no paid marketing. It's literally 100% organic. And, there's no tokens for some team cabal to go and dump on you, because no, it's just really entrenching itself as being the meme play on Bitcoin. And I want exposure. I want exposure to different sectors of the crypto ecosystem. I'm very heavy in Bitcoin, Ethereum, but then, Chainlink, BitTensor Tau is one of those ones I think is going to do incredibly well this cycle because of AI, but memes as well. Memes are a part of the crypto ecosystem, and I'm a streamer. I do content. I want to cover different segments of the market, and I want the best asset within each one of those sectors. And for me, that's why I like Dog. But I think the Shiba Inu community's got a great community. Doge is entrenched. It's legendary based on where it came from, what it's done, the type of people that are behind it. But you have to ask yourself, as you're entering these different assets, why are you entering it? what is going to be your exit if there's going to be one? It depends on the asset, right? Depends on the time horizon. It also depends on how uncomfortable it makes you when the market swings on that asset. But long story short, getting back to it, it's looking like we're getting a setup for a good amount of capital if we're going to repeat something similar to this. Or even here, look, we even saw this in 2019. Double top, boom, came back down, lower tops, and then the expansion. Double top, boom, lower top, now potentially the expansion. And this is also considering where we're at on the Bitcoin value map. I want you to notice something. Every cycle, we've hit this heavily overvalued band. Every cycle. Hit it. And in order to hit it, the first time we hit it, as the price melted up, so too do these bands. This is very important for you to realize right now. Hit it, great. Was at the top? No, it came back, retested right on this this general band, this overvalued, right? So hits highly overvalued, bounces right on the overvalued. Highly overvalued, bounces right kind of on the overvalued, and then that parabolic lift up here. Similarly, look, we hit it there. We rode this band, and it just melted to the upside. Notice something right now. If this price has not hit the red band yet, it looks like it got close there, but it did not. In fact, we've been struggling to break through just this overvalued, which is this yellow band here. We've been struggling to break through it, struggling to break through it, struggling to break through it. If the price on Bitcoin went straight up today in one candle, that heavily overvalued band is $187,000. That's if we went straight up in one day candle. But what do you notice on all these tops? As the market starts to really melt to the upside and this parabola forms, or even here where we had an impulse, right? This still melted to the upside, melted to the upside. So this is when we get back over to, I forget where it is. Is it right here? Yeah, this is why, to me, $213,000 seems like it'd be a low target for a top. Now, some people might argue, you're saying we're going to hit that by the end of the year? That's not what I'm saying. I'm saying within this bull trend cycle, before we have a definitive that was a top, I think we're going to hit this. Now, this could be by the end of the year. It's very, very possible to do this. I think what's more likely is sometime, mid-end of Q1, maybe in Q2 of next year. But it all kind of depends, again, on what that Fed decision is today, what the tonality is about it, and what is telegraphed as to the follow-up to the next potential rate cuts. So why can it do it? This goes back to what we were talking about, the huge spike in accumulation. I mean, look at the blue. Just look at the blue. One of these things is not like the other. This cycle, where we're argumentatively by some just keyboard warrior, has no idea about being an analyst and looking at data, a grouping of data, trying to disprove yourself, but also what is aligning, what is disaligning, right? And what do we see here in the 2025 cycle, right? We see massive exponential accumulation, spike in accumulation. These are accumulator addresses, aka wallets that you can see on chain. When Bitcoin goes in there, at least 75% or more of those tokens that are being moved into those addresses do not trade, do not sell, effectively reducing available supply. So not only are we getting a massive amount of accumulator addresses demand coming in, what people are arguing as a top, I mean, look, this is where this happened here. Look at this spike. Was that a top? No. This preceded the massive move up. Okay, now we got another spike here on the way down. Now, why is this? Because people are still, this is an emerging asset. People are still waking up to what's happening in this market. In this case, we had the Luna collapse, right? And then we had the cascading failures from BlockFi to Voyager to, it was a long list all the way, ultimately ending in the FTX collapse here. So people are trying to figure out this market. And over here, what have we figured out? Well, now we know the US president is behind Bitcoin. The administration is behind the crypto market. The SEC is no longer putting the foot on the throat of the entire ecosystem. Strategic Bitcoin reserves, not just in the US, but different nation states all over the world are guaranteed are discussing this en masse. Some of them have already actively moved forward. Panama, El Salvador, Turkey, Bhutan, Kazakhstan, and a number of countries in Africa. All Argentina, Brazil. I mean, the list is just only getting longer and longer, and people are worried. The time now is not to be worried. The time now is to figure out what is your strategy. How much of a degen are you willing to be while you're really trying to stack into an asset and assets that are repiping the whole plumbing of the global financial structure? Bitcoin, Ethereum, Chainlink, XRP. I don't know. You guys can hate me for that. I don't know. I don't like their ethos. I think people are going to make some good money on XRP. I just don't particularly. I'm not a huge fan of how they've operated. XLM. I like XLM better than XRP. Cardano making some strides lately with some of the things they're doing with Midnight. Avalanche. They're already getting some in real life adoption and deployment on tokenization, like different state governments utilizing Avalanche to put their registrations and car registrations and stuff on chain, amongst a lot of the gaming stuff they're doing. Injective, Ondo. I mean, Ondo just launched. Let's look at Ondo, guys. Ondo just launched, and people are just forgetting about this. Ondo just launched 100 plus of the largest assets out there on chain. Well, that's just, who cares? It's already global markets. People forget many of these stock markets are fairly localized to the regions that they're in. So bringing these assets that are already monumental in the US markets on chain for global markets, and how much volume and transactions and the awareness factor that comes out when people start utilizing these things and they realize how quick the settlement is, how quick the transactions are, how much more efficient they are. This is a absolute laser as opposed to a snowball in terms of how fast this is going to change the mindset of what people understand about these assets. So Ondo, I mean, massive move up, the sell off, the massive move up, the sell off. Were these two full round trips, or is this part of a larger accumulation before the move up? Now, on the one hand, if you're just looking at this chart, I want you to notice something. If you're just looking at this chart, this looks like a chart that's double topped and is destined to break down. This is why some people that are only chart traders, it's very hard for you in crypto in some regards because the landscape is changing so dramatically. Look at where this launched. This launched in February 2024. Okay. So not taking into context the broader landscape and the things that have changed around these assets, and the fact that this is in the middle of a monster accumulation. Where is that chart? Right here. Okay, let's look at this chart. This is what I'm seeing for altcoins. Throw a 1 in chat if this makes you bullish. This is so bullish. People forget. What do we see? Back here. Last cycle. The bottom, a run up. Oh my God, it sold off as dead. A run up, a massive washout. Of course, this was COVID, but then the slingshot to the upside. So we didn't get something like this world economy shutting down, but the pattern, this oscillation of trapping people long, trapping people short, trapping people long, trapping people short, and where we're at in the cycle and the capital coming in just says a boom season. Now, what do we see here? But this is so much bigger in terms of how much time it took. Well, look how much bigger it was on the bottom. Look at the bottoming that happened here. Look how quick this bottom was back here. So there's been an extension of time that we've seen, not only on the charts, but also in the context of what we're forward looking as investors as to what's going to take shape over the next 12 months from here. So you think there's going to be a top? The market's going to top because the 4-year cycle, it's happened 3 times in a row. Bullshit. I don't believe it. We're seeing the extension and the formations on the charts, not just in the others, in Bitcoin. Come back over this chart right here. I'll show you. I will prove it to you. Let me reload that page. Takes a second. Cycle bottoms. We see this right here, measured from the bottom, even if we were still in a 4-year cycle, even if this is measured 3 cycles from the day that they bottomed, counting forward. And these have tracked pretty darn close. with the reg one being the current cycle, right in between. Look at that absolute perfect median. Okay, now look, we went a bit above. Cool. Now we went a bit below. We've kind of really sort of hit like an average median price on this, in terms of the structure on this chart. But even if we were in a 4-year trend that it's going to play out exact, look at these, nearly the exact day. It's a few days off. Okay. Day 1059. This was day 1067. But what do you notice? 2017, that's the cycle previous. So it took longer in 2017 to top than it did in the last cycle. So there's no lengthening and shortening. But even if we're on the 4-year cycle, there's still time on that metric. Currently, we're sitting here at 1,029. So that would suggest about 2 months. So what we see today going into October and November, I think we're going to see some booms. I think after that, we're going to see a sell-off into the end of the year. Somewhere around the end of the year, people are going to say that was a cycle top. And then the market just continues to persist to the upside. Because we get back over here to the others chart. Where's that at? Right here. This is what I'm seeing. It's not that the alt season failed both times. It's that the alt season has been really setting up for what everybody's been expecting. And the fact that it hadn't played out on the time that you're expecting breaks your heart, and you're mad, and you want to call everybody a pump and dump scammer, and the altcoin, the analysis has been broken and it's not working, and so on and so forth. So let's take a look at that. Hold on 1 second. I have a call I have to answer. Just wait 1 second. All right. Thank you so much. Bye-bye. All right. Yeah, that was a delivery that I've been waiting on that I keep missing, and I had to do a signature. But I hope you took this chart in while I was holding there for a second, because this is what we're seeing. It's just a longer accumulation setup before the big run. And previously, this was a 19x, roughly almost 20x here from this breakout. Now, do I expect a 20x? No, I don't. Will the others chart 20x over time? Yeah, it will. But it's also, remember, the others chart comprises a lot of tokens, everything outside of the top 10. And some of those tokens are going to fail, and other ones are going to absolutely go monumental. So you have to realize that this has been a setup for the patient. So let's look at some other things here. Well, this is what we're looking at. We're seeing that here's the crypto's top overall coins by notable development. And I'm sorry, all you Pump.fun memers out there, you forget what this word means, development. Somebody that deploys a token on a token deployer and they say, I'm the dev, they're not a freaking dev, okay? A dev is somebody in communities like this, ICP, Chainlink, HBAR, Starknet, Sui, DeepBook Sui, we got Cardano, DeFi Chain, Avalanche, Ethereum. These tokens are people that have built chains and actually written in smart contracts and actually developed a technology in their own niche way that is going to address some sector of the crypto market. Memes are fun. I love to play in that sector, but those are all lottery tickets, and I love lottery tickets, so let's buy them. But let's not just trash talk somebody because you have no idea how to read a chart and you see the price, it goes up and it goes down, especially on the pump tokens, right? When when we launched our stream, you saw the price action on the DC stream token just go up and then jumps. That was zero to do with us. That is the nature of the Solana ecosystem and the bot snipers. You know, there's 100 million bots in the crypto ecosystem, and 85 million of those are in Solana. So what happens is the second a token reaches that bonding curve, it gets listed across, in other places, and bot snipers then go and max bid to capture that pump, and then they sell. I know I bought some of that DC Stream token. I know most of the people here in the office, but I just have it. It's in my Phantom wallet. I didn't sell anything. We locked up, as effectively burned, locked up 69% of the supply that we can't even touch. And this is true for many of those tokens that are getting deployed on Pump.fun. Not all of them. I know Gainsey did it. I know Alex Becker, what do you call it? Crypto Banter. It's just kind of that way. It's literally a mechanism to help protect the community, because we're not trying to pump and dump that. It's just, hey, let's drop a coin so that we can stream on Pump.fun, right? But we're not doing anything with it. We want to be here with you. We want to give you guys the alpha. And this is one of those alpha things. This stuff may not have representation in what's happening in prices and these altcoins immediately on this day. But this is one of those things that I like to see when I'm like, for instance, I love Chainlink. I love to see that they didn't just do something and now they're just hoping for it to go. They're continually building in, adjusting, tightening up, creating new developments within their own ecosystem. It's great. Avalanche, great. Cardano, great, right? So when we look at this chart, let's go back over here and look at where is it at? Boom, Chainlink, or is it others? Here we go. So weekly chart, 3 days. So this is giving us that we've been here before. When you look left on the chart, especially in altcoin or crypto that's been around for a while, if it wasn't launched today and you're trying to make money on it right now, you can look left on the chart and get a map of where you need to be paying attention to. For instance, right here, when this pushed up, that gave us a point. And then when this started to rebound, look at where we had the next, as this pushed up, look at where that chop zone was at the point. And this is true on altcoins as well. So let's look at some of those altcoins. What do we got? What do we got here? We got the price action on Ethereum setting up beautifully, kind of like a bull flag, kind of as ugly as it can be, but let's look at it a little bit clearer. Kind of like a bull flag here with the intermittent bull flag within it, but it's almost more like a symmetrical triangle, I would say. Because this flag is as big as a pole, right? That flag would just fall over, right? So, but either way, the trend is bullish coming into this. So the measured move out of this, if we want to be a little conservative, is you measure this, you can go up, command copy paste, and go down. So you have a target up and down out of this of up here at $5,700. I can get behind that. You also have a dump target down here to about 3,700. I don't think that's really going to take place unless they're like, we're not doing rate cuts and we're not doing rate cuts to 2027. Cool. Market's going to dump from that. Sure. But we have to mark it out. That is a target out of that. But I do think that the swing on this, the momentum on this and everything going on in the market right now is favoring very dramatically the upside. So let's come over here to, let's do money flow and RSI. 3-day charts, RSI is firmly above the 50 line, meaning the strength is in control, okay? The strength is in control. That's how I contextualize it on the 3-day. So let's get down to the 8-hour. Okay, look, it's fighting to have strength and control on the 8-hour, which makes sense. It's right at the neutral territory on a day when everybody's waiting for massive news that can shake the markets. So this is why I'm being a little bit cautious, basically from now through about 4 p.m. today, for the market to pick a direction. Now you can scalp some trades, sure, do it on the 5-minute, 3-minute, 10-minute, but do that at your own peril and do it at your own risk and do it smart. Do it on the direction. Don't do it with your whole portfolio, because on the 8-hour on Ethereum, it's riding this trend line: rejection, support, a little washout there, support, and support. And we're right now on this sort of moving average cloud right here between the 21 and the 50. Okay. RSI is looking a little, I don't want to say weak, but it's right in the neutral zone. What does it look like for all you scalper degens out there? Which, hey man, I know I trade super high leverage on the weekends with like $50, $100, like while I'm watching a game. I'll trade, 30x, 40x, 50x, 60x leverage on very small amounts. That is not my portfolio. It's like, hey, let me go to the casino while I'm sitting on my couch and I'm trading while I'm watching football or hanging out. I do not do it on I have a whole different account for that, so I don't accidentally hit cross margin and liquidate my entire account, which is some of the issues people have, which is also, by the way, one of the reasons why we're partnered with Breakout Prop. We're going to be dropping a lot more information on that for you guys, especially you beginners or people, even people that have been doing this for a while that want a risk mitigated way to trade on leverage, but do it a smart way where you get a funded account and it's you're limited on how much leverage you can do, but it also costs you a lot less money. You're putting less at risk to get that leverage access while protecting yourself. And it's a great way to learn. And we're going to have a lot of educational content around that as well. I just wanted to shout that out. We'll also be doing some content on here with Trader Main as well. So shout out to him. Looking forward to doing that on the 4 p.m. slots. By the way, I don't think there's going to be the 4 p.m. slot today on this channel because we're just going all the way through. I know Drew and Josh will be hopping in here in a little while, but we got some more stuff to look at here. Now, price Ethereum 1 hour. When you look at it like this, there's nothing bullish or bearish about it, right? You're not getting sidelined. If you're looking at it on the 3-minute, scares you because you're like, oh man, this is just breaking down. So looking at it on the 1 hour, we're just within this range, a tightening range. We're coming in near the apex. The apex is where these two lines basically cross. Now, what I'm expecting, and it will either be up or down, we'll have to see how the rate cut is, and then what the press conference tonality is, what is telegraphed. Either up, back down, wash out, and then move, or a breakdown that really scares people, comes back up, and then you get the move like that. But what does the favor show? Well, the strength on the 1 hour has dropped all the way down here into the oversold territory, but the RSI bounced back up and is getting rejected in the 50 zone. I would read this, if today wasn't today, I would read this as leaning like the bears are trying to take a little bit of control here. But at the same time, it wouldn't be the worst thing for this to come down and tap this at the 4,400, 4,410, 4,415, maybe a little wick down, and then, work its way up in here and out. But I'd say, again, watch what's going to be happening this afternoon. Chainlink, so bearish. Is it? We had the breakdown of the falling wedge, breakout, coming down to retest back into a range before a move. That's kind of what I'm seeing here. If we get a deeper washout, I could see us coming down to $22, which also is kind of within this range, $22.40 to $22. But again, I'm looking at this a little different today because of the rate decision. I think this is trying to tell you that it's going down. But I see this as trying to trap people before actually breaking to the upside, and not because this is why. Because the target on this, if that was a head and shoulders, the target on this would be down to, and I don't see this happening, would be down to $20.50. If the market gets terrible news today, then that happens. If the market doesn't get terrible news, it's neutral and slightly bullish, then this has a little bit of a washout to the downside and then resolves back to the upside. That's what I'm seeing. Let's remove that. Boom, boom, boom. Crow is also looking a little good. We had the Trump pump here with their partnership discussion that they had, and then a consolidation and a very bullish falling wedge. See this on the 12-hour? Looks like a giant bull flag. So if that's the case, this pushes up into the mid 50s. See that? Boom. Up here, mid 50s, 54 to 57 sort of cents, something like that. RSI's come down on the 12-hour. It's come all the way down here. The money flows come quite a bit deeper. Look at this. Bullish divergence, hidden bullish divergence. We got the higher price here. And the RSI, excuse me, and the money flow, lower lows lower lows here while the price is higher lows. Hidden bullish divergence. And now this has got a little bit more substantiated bullishness kind of baked into it because of what's happening with the I think is it Donald Trump media or World Liberty? I can't remember. Can't keep all the Donald Trump crypto companies, in line in my mind. It's all kind of jumbled. But the Trump sort of tie with the new integrations and pushing of crypto with the administration and the laws and everything kind of suggests that there's going to be a bit more of a bullish buoy here, right? So if we do get a move to the downside, I think that'd be a good buying opportunity, especially down sub 19 cents. But this is telling me it's likely going to result, whatever move happens today will result in price moving higher. Aerodrome, the base, the base ecosystem, everything going on there, guys. We had the full move Full move here, boom, all the way up, comes down, finds support on the 382. This is the 382 fib. Loses it, comes right down where golden pocket. We had the map there already when it happened. Now it's pushed back up, fought with this multi-month all the way since March of 2024, I believe. Let me see. Double click here. Look at that. March 2024. Year and a half trend line. Below it, now above it, finding support, trying to get above, fighting at this 382 fib. If we can move out from this, then we're looking to target back up here in the $1.50 range and then ultimately break out from there. Ondo also, guys, massive inverse head and shoulders. Boom, boom, boom. Just looking like this is a spring-loaded tension to slingshot those people paying attention to what's going on into that bullish movement up here to tackle the $1.20 region. $1.20 to $1.30. This region here is going to be important. And then I think it's going to be moon sailing from there. That's what I'm seeing. Solana also great signal for the meme community. Multi-year trend line. We've talked about this a lot back to 2021. This level back here, November 2021. Rejection, resistance, resistance, support, rejection, lost it again, came back up, support. Now bull flagging up, bull flagging. If this were to sell off a bit, I'd be looking for an opportunity in the 220 range, potentially down into the 200 range. But I'm leaning way more bullish here. I'm looking for this to, break out here, find support on 250s, and then make that move up. Avalanche, also similar to what we saw on Ondo, but look on Ondo. This has not had the move up yet, and yet it just had major news. They're partnered with some of the biggest financial institutions in the history of the world. BlackRock. I don't want to go through the list right now. I have the list somewhere, but the list is incredible of the different partners they have in their integrations and what they're doing with their tokenized assets that they're bringing on chain, as in addition to the U.S. treasuries. But look at this shape, and then look at Avalanche. Very similar shape. But this sliced through that zone. Look. Is it going to slice through the zone? I think it's going to. Can you hear me now? Look at this, right at the 200 moving average. It's on the 3-day. Let's look on the daily. Look, back above the moving average cloud. Bullish. Now, is it bad if Avalanche sells off? Depends on what the level is. If this sells off from here and finds support down here in this moving average cloud and goes, great. If this bull flags like it is right now and then just takes the next leg up, then that leg would look like this. You measure that move and then go like this. Now we'll notice something. If we zoom in on this, this does look a little bit, if this does have a move to the downside, this yellow line that I drew, that would just essentially be the liquidations, right? Short squeeze here. Boom, pops up through. These tend to fill in this inefficiency. Same on meme coins, guys. When you get a move like this, that's an inefficiency. That means the price on this just sliced right through there, with no filling out in liquidity and testing the levels in the zone. So you like to see if this Bart Simpson were to play out, the price actually come down and fill in somewhere in the zone, which would be likely we have a top there. We have the candle body tops here, which essentially would look like this. Option J, go down here, option J. And that would be price action coming down to 27, potentially down to 26. To come down, the bulls find support and then launch. So now if it's a bull flag, you have your target. You could trade the breakout. If it's a Bart Simpson, then you know what to do on the levels that come down. Now, if you buy in the zone and you have a stop loss and you don't lose anything, if you're trading, if you're looking for positions to position buy for the next several weeks or months, then 27.50, great range, 25.34, great opportunity. And if it drops from there, again, position trade, then I'd be adding more, especially if we get down in the 21s. But I'm leaning a lot more bullish here. BNB just persisting higher. And this is a major player in the market, guys. You need to pay attention to these coins, whether you like them or not. Bitcoin, Ethereum, XRP, BNB, Solana, Dogecoin. Yes, great signal for the memes in general. Tron, Cardano, Hyperliquid, Chainlink. These coins, all the way through these 12, I'd be paying very heavily attention to. These are the top 10. The Kelly, that's number 12. Okay, let's take out Tether. Let's take out USDC. Those are stable coins. Then, what's 12 minus 2? 10. So the top 10 coins are Bitcoin through Chainlink. Paying attention, especially to Ethereum, XRP, and BNB and Solana. These are the ones I'd really be paying attention to because they're giving great signal in the space. Why not look at Dogecoin or Tron or Cardano? Now I'm still looking at those, but it's giving bigger signals to the crypto ecosystem. Look at the difference from Solana, $126 billion. The next one up is 1/3 of that, 40 billion. Smaller, Cardano, Tron, 30 billions. So these are going to be the bit of the, drivers of the altcoin ecosystem. When we get back over here and look at BNB, it just keeps pushing to new all-time highs. In BNB, remember, is a coin from Binance. So it's a Binance exchange token. Oops, sorry. Double clicking on the chart. Remember earlier, for those of you that have never seen me before, by the way, welcome to the show. My name's Kelly Kellum. I'm a part of, BitLab Academy, Discover Crypto. I'm here with the family. We break down charts, we break down signal, we break down different tools, different ways to look at the market, to build a strategy that's effective, to find edge, not just say, that meme coin's cool. I'm going to fight with you because I bought this and so everything else sucks. No, we don't do that nonsense. We say, where is alpha? How can we find the signal? How can we set up and look for setups to take trades that are based on probabilities, based on risk management, and then also degen in the space? Absolutely. But using all the same skills we're using on Bitcoin and Ethereum and BNB and Solana and XRP and XLM and Chainlink and Cardano, all these signals we can utilize also in the meme coin space. Sometimes not as effectively because they're much smaller market caps, but yeah, we need more kettlebell. We need more kettlebell. You got to smack the kettlebell. Shout out Crypto Craig. We're going to have to get you on here again, get you on here soon, my friend. You're stacking more Gala. You see, everybody's looking at stuff that is different. Gala's the biggest sleeper, says Ninja Vlogs. Yeah, I use old Gala. It's completely out of my wheelhouse right now. But let's look at a couple other ones. Hyper Liquid came out of nowhere and now is in the top 10. Crazy. And looking at this coin. Okay, so some of those signals. Now, for those of you, again, that if you've never seen me, sometimes I drop little lessons within. See this, how it's all cluttered up? I have I have indicators and such. If you right click on your chart first, yes, it'll bring up a menu. Don't do anything with that. I do that because if you have a tool or something like this, you can't see it on your thing. You see like this, if this brush tool is on here, if I double click, all it does is draw dots. That is frustrating as heck. So in case you have a tool on, right click on the chart. It does nothing except look, it turned off the tool. Now double click on the chart. It minimizes the indicators. They didn't go anywhere. Double click on the chart again. You bring them back. I'm going to give you a couple other quick tips real quick. You don't need to use the toolbar. Hint. You want a fib? If you're on Mac, it's Alt. If you're option, if you're on PC, it's Alt. So every time I say option, if you're a PC user, no, I'm saying Alt. So option or Alt, F, nothing happens. But if you click on the chart, look at that, and move your mouse and click again, you got a fib. Okay. Now, if you want to do a trend line, option T, click on the chart, boom. If you want to do a horizontal ray, option J or Alt J, or you can do across the entire chart, option H or Alt H. If you want to do a vertical line, option V. See that? Easy ways to do things in the charts will really simplify things for you. So now looking at Hyperliquid, what do we got? We had the run up, oh my God, the sell off, and then came fiercely back and has been riding above this trend line this whole way, kind of consolidating into it. Some people would say this looks like it could be topped out. We're also going into what will likely be the most explosive part of the market cycle. So what do we see? Well, RSI is trending up. The lows I'm talking about. The money flow coming out. Excuse me, I got the hiccups. Trending to the upside, but we're also seeing the money flow coming in. It's also trending to the downside. It's coming into an inflection point. You can see that we're coming into a decision day just based on what you're seeing in the chart. Well, each time this has come down, it's marked a relative bottom. Do you see this? See what we're seeing here? See what we're seeing here? See what we're seeing here? And yet again, we're down. Ready for that. I think we're going to get another move on Hyperliquid. Cardano. Got a rising channel that it broke out of. It's all over. Also kind of got a bit of a triple top here. I think there's a lot of expectations around Cardano. I think there's a lot of broken expectations around Cardano, both good and bad. I'm not saying anything negative about it, but some people, you know, there's very positive news coming out about Cardano, and then there's a lot of just hateful FUD because people don't understand when you're building something really strong and you're building it for security and you're building it for an endeavored long-term use case. You do it smart, you do it slow, and Charles Hoskinson and team, IOG, and you know everything that they're doing, IOHK, I meant, they are being very smart about doing it kind of like a scientific approach, but it's not sexy. Good. That means you're going to have smarter, stronger money that's going to be involved with it for longer, and then when it booms, it's going to leave a lot of people behind. And I think Cardano was a laggard last cycle, and then it just melted people's faces. Same thing happened with XRP. Everybody really counted XRP out, and then it just boomed. Again, I'm not a big fan of XRP, but me being a fan of it or not should not impact how you feel about it. If you like it, if you've done the diligence, if you've looked into it, and do what's best for you guys. But Cardano, let's go on the 3-day. Okay, 3-day, look at this. RSI is maintaining above the 50 line. Strength is in control. This is looking to me kind of like what we were seeing on Ondo and an Avalanche. A lot of the altcoins are looking like this, where this sort of reversal pattern looking like it's waiting to take its next leg up here to $1.09 and then up here to $1.30. Can you look at the Memo chart? Yeah, let's look at Memo. Oops. There you go. Memo. All right. Looks great, guys. I'm just joking. Let me see if there's an older chart. I know it's on the newer side. Yeah, there we go. You notice what I just did? There wasn't enough data, so I wasn't going to do analysis on something that didn't look like it had enough data. Maybe every chart was going to look like that, but try to find as much data, a chart with as much data as possible. So Mamo, this is a 3-day chart. Look at where the price is right now. It came down to revisit where the previous range top. It's almost like the market tells you if you would just shut your ego up and shut your emotions up and let the charts give you the roadmap of where likely areas are going to be intersections for either bounces or rejections. The chart won't always be right, but it gives a pretty darn good roadmap. Because look, right here, the price fell. What did it do? It bounced above the previous range high. Okay, now pushed up, came back down. Now we're actually in this zone. So what are we looking at? Let's look at a fib from right here, Option F, see, or Alt F if you're on PC. Now click. Now move to the top of that wick here. This is on the 3-day chart. Okay, look, price rejected, came to the 382, pushed back up, came back down. Look, initially had bounces right around this golden pocket and then ultimately rejected, came down to the 786 fib. Cool. Now, I know Piper Academy, Army Piper calls this the platinum pocket. And kind of when you have smaller coins, when you have smaller market caps, sometimes they kind of tend to use the 786 or the 382 as their golden pocket because they're a lot easier to move around. So pay attention to that. Now getting down, let's look at the 8-hour chart. 8-hour chart, what do we see? I want to first, I'm not even looking at the price. I'm not looking at the price. In fact, we're just going to look at the RSI. So you see what I did there? Just double click on the RSI, make it full screen. Now we're going to mark out the low, Option V, mark out the low, Option V, mark out these lows, Option V. It's kind of in a range. Now let's see how that relates to what's going on in price action. Oh, we got another low right here. Option V. So how does this relate to price action? So price came down, RSI went completely dead. That marked the bottom, boomed up. Okay, this had a little bit of a reset, but it didn't get all the way down here and still, boom, pop up. Came all the way down to oversold. Look, that marked the bottom on the bounce above the 786. Moved to the upside. Okay, comes all the way, it's coming down. This resulted in nothing, right? Basically just chopped sideways and then fell again. And now we are in this level. But What do you notice is different between here and here? And this is true for every asset, for altcoins, for meme coins, for stocks. Okay, the RSI signaled here. It went quite low. Remember, this was on the 3-day chart, right? This is where we're, no, it was a daily. Yeah. I don't know. No, it was 8 hour. When the RSI got this low. Well, on this point right here, when this came down, you don't have any bullish divergences or anything in the data as it relates to what the price is doing. But when the price fell down again and the RSI basically flattened out here, you're starting to get a little formation of kind of bullish divergence in the RSI there, where the price is much lower. The RSI is still showing the same level of strength. In this case, it's quite weak, but it's not getting that much deeper. But what do you see on the money flow? In this case, less money is coming out. You're getting a bullish divergence on the money flow coming into this. So while this one didn't fire, now you have better data on this one and you have bullish divergences lining up into it. And yet again, prices kind of flattening here. Money flows kind of ticking up. So in this case, I mean, I'd be a little cautious here. If this were to fall a bit further, I'd be looking for this zone right here. I'd be looking for this opportunity zone at 6916 because you have this range high and these range lows. But to me, this looks like if we get the bullishness of today, like a lot of people are hoping for and expecting, then what you'd like to see is a bounce here back up again. Watch basically right at where the golden pocket is, but right where these range lows are. Option J gives you the horizontal line there. Because if that were to be the case, then you have basically a W formation, double bottom, and then you can talk about higher prices. That's what I'm seeing there. That is on Mamo. Injective. Let's go to 12 hour, double click here. Yeah, look, I mean, it's just being held up by this region, right here. But again, just like we saw on Ondo, look, being held up, but we already got the leading signal. It's possible. Avalanche already made the move. XLM, inverse head and shoulders, setting up into all of this. Inverse head and shoulders, money flows positive. RSI is back at the neutral zone on the 12 hour, back at 50. Currently still holding above it on the daily. What does it look like? Yeah, RSI is back in the neutral zone with the bullish pattern and the money flow. Look, on the daily, money flow just flipped back positive. What happened the last time I did that? Boom. Flip positive. What do you see? Boom, season. Are we going to get that? We'll have to see. I'm not yelling at you, AG47. We're doing this together. We talked about Link, but we can look at Link again because Link is my favorite altcoin this cycle. We had the bull flag here, right? Kind of a falling wedge or a bull flag. We broke out. We had the visit back down. Look at this on the daily. I didn't show this earlier. On the daily, we had the price action rejecting here, coming down to tickling this moving average right here, which is a 21. I think it's the 21 moving average. Let me check. 20 style. Yeah, 21 and 50. So this is the 21 moving average. And it's kind of right now between the 21 and the 50. But the price action on Link, if this were to give us an opportunity at 22.38, great. We're going to get that signal today about what's going to happen. But again, guys, remember, this had a multi-year trend line, right? Multi-year. This top right here, let me move this out of the way. This top right here is May of 2021. Rejection, support, rejection. We know there's a valid line. We've broken out of this with authority. And this has been coiling up, much like it did here. This has been coiling up for the move everybody's been waiting on. And there's some big things coming into play with Chainlink going into November, also with a lot of their fees going live, further integrations. I mean, they're connected through freaking everything in the ecosystem. It's insane what they're doing. W pattern, W bottom here, retest, launch. This is now looking to, we're looking for fireworks once we break above $31. Next level up above that, 37, next level above that, 56, and then 55, 56, and beyond. But it's getting exciting. The long story short, with this market, before we bring in my compadre here, we're seeing exciting things in the chart for those of you that are patient. The way you make money in this ecosystem, in any investment ecosystem, is to try to see these swings in sentiment and the swings in momentum. This price action on any asset, I don't care if it's the S&P 500, which has just been opening at new daily high, new all-time highs. Tesla, opening with a 7% gap the other day. Insane. What we're seeing in this market right now feels like it's breaking molds, feels like it's breaking trends. We're seeing these setups that on the one hand are doomers. Oh my God, it's all going to be over. But just as we outlined before, and I forgot to get to this, and I'll get to this right now actually, is this. People are worried on the macro sense because things feel like it's all doom and gloom and how can things persist higher? But then much like my friend Caleb Franzen highlighted the other day is this, look at this junk bonds. I know you're in meme coins, you're in altcoins, you're in Bitcoin. Who cares about this? Get your edge, guys. You get the edge outside of the exact asset you're looking at. And that's this. Before the stock market peaked back in 2021, junk bonds peaked in 2021 before the stock market peaked. What are junk bonds doing right now? They're breaking out to multi-year highs. The junk credit market is confirming the uptrend in the equity market, which means that we have a strong bull market signal set up going on. So yes, we're looking at Bitcoin. We're looking at, the dominance. What are the alts going to do? The others chart that is miraculously signaling patience because we've been here before. The sideways chop consolidation that were pretty big swings, but proved to be ultimately the setup before the 20x in the altcoin market back here. And what was this, 2019 into 2020? Massive setup. And yet again, we're seeing the same thing right now. We just don't notice it because we're wondering why we're not seeing 30Xs on every altcoin in our portfolio right now. But the smart money was stacking here. Smart money was stacking here. Smart money now is even saying, okay, I think it's about to be all systems go. But Drew, I see you in the wings. Let me know. You can give me a thumbs up when you want to pop in here because we're seeing some magic brewing. We got Jerome Powell coming out to give everybody a Christmas gift today. We're seeing some great stuff. And then, throw those thumbs back up, my friend, because we got to get you in the mix right now with add the backstage. Are you on stage? There you are. Dude, are you excited for today? Are you worried? Are you selling everything? Are you going all in on a new token on Pump.fun that some random guy is jumping off a bridge, lighting himself on fire doing? What are you doing?
I got $40,000 in a long going into FOMC, balls on the table. Let's go. All right. And now I'm going to talk about the long-term repercussions of what we're about to see go on today on the show. It's been a long-term theory that sounded insane. People said I was an idiot for warning them of stagflation. But here we are. We're talking about, what do you do? You got to flip it like this.
I'm trying to make you full
Let me
screen.
drive.
How do I do that?
Let me drive. All right. Just hands off the wheel.
No, but I've got to be driving too sometimes. How do I make you full screen and not just me?
Oh, just like this. So I've been warning about stagflation for about 2 years, right? And we've seen falsified jobs data over the course of the end of Joe Biden's reign over the United States. We've seen continued Bureau of Labor and Statistics data called out as fraudulent. Over 2 million jobs vanished into the abyss, never even existed, lying straight to our face and making decisions on macroeconomic movements of the United States, the world reserve currency, thus crushing currencies all around it. Now we are going into Thunderdome. Whew, we got a lot to talk about here today. Zima, where is your super chat? Let me know where your super chat is. What's up, Halo?
I just saw it. It's how high will the crypto market cap, how high is the total crypto market cap expected to go?
Mm-hmm. So in my view on the velocity of our current bull market, which we are in, I think we can hit $6 to $8 trillion market cap in aggregate, right? We're already at $4 trillion market cap. So we are but a few bullish months away from hitting those peaks that I expect. Now, is this an up-only situation? Bitcoin reserves, all of this shilling that we've heard from the U.S. government over the past few years, is it finally going to happen? The government's not coming to save your bags. I will say that. They are more interested in confiscating your bags and going after cold custody. Securing your Bitcoin on an Arculus cold storage device is the ultimate dissent against a tyrannical system. Now, we have a great partner, Arculus. Please take advantage of the power that it's given you. Okay, you could become your own bank. We got 20% off, cost you like $80 or something like that, to literally take the power out of the Federal Reserve and put it in your own hands. Own Bitcoin, right? And also Bitcoin IRA. Absolutely. Bitcoin IRA, this is where you can actually get a person on the phone to talk to you about the tax incentives of a Roth IRA, different IRA setups. You can call 877-936-7175 and get a human on the phone to talk to you about some mechanisms that you can take advantage of. If you're a long-term believer in Bitcoin, I highly recommend diversifying. Cold storage and IRA setups will really help you out with tax in the long term, right? The FOMC is coming out today. Now it's coming out, the number of what the interest rate cut is going to be, likely going to be 25 base points, right? I really, really doubt we're going to see a 50 base point cut. As you said very eloquently, Kelly, the tone of Jerome Powell is going to matter quite a bit. So, you know, the tone in the speech of Jerome Powell is going to be coming out at 2:30 today, but we got a lot of stuff to cover. Did you already touch on the DXY and the levels that the DXY is sitting at right now as we're heading into good. We are at a very, very important moment for the US dollar, right? Very important moment. And shout out to Crypto Billy up in the chat. I had an incredible conversation about God, about faith, about family last night. Was able to stay up late and spend some time with Crypto Billy. If you guys don't follow Crypto Billy, please do yourself a favor and go ahead and give him a follow here. I'm keeping the Discord chat up and available as well because I am indeed still in the 19x long on Morpho, and it's going absolutely swimmingly. Let's go check it out. Let's go check out how much danger I'm in. Am I going to lose everything? Is Jerome Powell going to take $40,000 from my hands and transfer it to his own pocket here? Let's pull up the charts here and see. I want to show you guys. This is the stuff. If you're not in the Discover Investments group Discord, this is what you missed. Okay. Got in at about $1.97. And now we're sitting, I think we're up by like 20% or something like that. So not too bad, not too shabby at all. Feeling good, feeling groovy about it. But now I have a lot of things that I do want to touch on in terms of news, things that matter. There's Senate Banking Committee hearings today. There's a lot of things that are happening on a legislative level in the background to, you know, actually kind of pave the path, the long-term path for Bitcoin, for crypto. I see Toshi in the chat. People bringing up Toshi. Toshi is an interesting base meme token. Definitely had, you know, a really, really good run up initially. I actually might want to look at the Toshi chart here later on today, but let's go into the juice here. At Druth Crypto on Twitter. This is where you can find all my crash outs. Here's me crashing out about the Joro spider, which I am battling currently on my land, and it will not win. I will win this battle against Joro spiders. They have doubled their numbers in just about 3 years. Okay. And these are not small spiders. They are not poisonous. They're not excessively aggressive. They're about 4 or 5 inches long. So just take that to the, put that in your pipe and smoke it. Now, God, dang, looking juicy. Let's see if we can get up to this upper echelon, back above the $2 mark on Morpho during the show. Daddy Pal, pump my bags, baby. Now, if you're not following Discover Crypto, you're doing yourself a disservice. Also, I'm live on the blockchain basement right now. Kelly Kellum of BitLab Academy and my man Veteran Crypto and Jeff. His name is Jeff at DeFi Crypto and Airdrops. Go give him some love. Follow him. This is where you can find all the mechanics behind DeFi, the education behind that, and then airdrop hunting as well. Now, Bitcoin got a struggle bus. Obviously, DZ called this out very nicely in the morning. It's taken a hell of a haircut, but we did hit the bottom echelon of my chop zone that I've had marked out here for some time and found a little bit of a bid at this level. Ethereum, flat. Okay, there is some sort of extremely strong industrial magnet that has kept Ethereum at $4,500. Probably going to see some Darth Maul candle below to like 44, maybe even 4,300, back on up, and then back to equilibrium. This $4,500 level is just like a magnet for Ethereum, but we'll look at some news, some charts, some movements to see if it's got that breakout point. Now we got to take a look at the landscape. We got to look at the forest through the trees here. Kind of red, right? Kind of red, kind of painful. Yes, it is a huge spider, Oscar. It's bothersome. Okay. I don't like running into a 6-inch spider on my face, and I've done it before. It's not a good feeling, right? A lot of red, ETH slightly green. And this is why I've kind of shifted. I really do feel like alt season is upon us. The altcoin index coming in at a 71 right now, but I love seeing that the fear and greed is flat, right? We are having a very nihilistic approach to bullish and bearishness right now across the board on crypto. which leaves plenty of room for upside for me. If we're looking at 3 incoming Federal Reserve rate cuts over the course of the remainder of the year, horrible monetary decision in the long term, excellent for risk assets, in my humble opinion, right? So I'm going to be having some fun over the remainder of this year with this. Hopefully you got in position over the last few years, because I've been ranting and yelling at you to buy Bitcoin at $15,000 on up. And we've longed it all the way on up from 49K to where we are right now. So I pray that you've had the patience to stay in the market and continue stacking to get prepared for this moment right now. Is your stop loss in profit? Jelly in the Discord, yes, it is in a dollar profit. Stop loss is. So you know what? If the trade fails, I actually don't lose it. Now, liquidation has been a thing today. Liquidation heat map. Let's go have a look, see at what Binance has been doing to those leverage traders' bags. Now, we washed out about right around like $100 million here at 115.8. Seemingly trying to find a bid here actually on Bitcoin, which is very, very interesting. Not hating what I'm seeing at all on this setup. Actually, I am leaning bullish, and I am leaning towards the general thesis that we can accomplish $118,000 today. Now we got to move on to the rest of the stuff. And on you guys, I'm going to talk to you about something very, very crazy. What happened to the rock? Okay. This is not the actual rock, but it could be. The rock has now collapsed down into like my body frame size. It's rumored that he cut down the weight for a movie role, but also I'm hearing reports that he's had to back off the roids for his heart. I don't know what's true. I'm just reporting what I've heard, right? So it's interesting to see that going on. I don't think I'm ever going to really be interested in steroids. But you know what? I'm still going to watch the Rock's movie. I remember, the Rock, the Biden thing, it really kind of, what are you doing, man? Now he's kind of deflated back to reality here, and hopefully he takes care of his body. Now, for some reason, also, I found out John Cena is still following me. Saw this guy in my hometown, and he was wandering around and doing handshakes and all this stuff. I didn't even go up to say hello to him and say, hey, you follow me on Twitter. And I will never follow you back, John, because you refuse to acknowledge that Taiwan is its own country. Pandering to the CCP. Absolutely ridiculous. Could be that 80s virus. Oh, no. T-Pro. Hold on. Wait a minute. Hold up. Something ain't right.
You are banned!
Jeez Louise, man. You can't catch a break. You can't catch a break here. Where you, where's that comment come from? God, we have like 7,000 people watching live on the show today. Absolutely incredible. Thank you for joining me on the show today, everyone. We're on Arena, we're on Pump, we're on X, on multiple different accounts on YouTube. Once again, we are finally out of YouTube jail. That was quite aggravating to be put in YouTube jail just for covering the Apple products. They want ultimate control. What's up, KJC? Super cool new here. What's up? All the new names. Love from India. Shout out to y'all. Good to have you here in the show. Now, let's go on to the rest of the news. Okay, I went on my little World Wrestling entertainment tangent. Now we're going to go into some price predictions on what's going to happen today. Go into it. Wrecked Fencer, Fed rate cut. This was posted yesterday, so it's today. Many TradFi experts expect a fake dump before the rally. Possible outcomes: Bitcoin dips down to $104,000 and then reverses, or Bitcoin fills the $92,000 CME gap before new all-time highs. Quite a crazy prediction, right, to think about it. But if you really are backed up, we're still definitely in a bull market structure should either of these things occur. And one of my other favorite traders out there in the interwebs is Flawless. This guy's hilarious. I think he's like French or something. He's got an excellent accent here. He's thinking 25 base points, volatility chop, basically nothing. 50 base points, new all-time highs with haste, and 0 base points, ghost month turns into poverty month. Is this poverty month? I need to know. You got to tell me. You've already heard my thesis. I got my a thing on the table. I've told you what I think publicly. I want to know what you guys think in the chat. Bogus 92,000 is not happening. Yes, we still do have a CME gap at $92,000. Are you closing the Morpho trade before the meeting? Well, I'm a little bit crazy. And I might not, right? Might not close it. It's already in slight profit, so I don't really feel like, because this is the moment where monetary irresponsibility meets the absolute fundamentals of altcoins in a bull market. This is a juicy time, honestly, and it takes a lot of guts to hold this trade into this meeting. I get it. But you know what? I found my position with all of my signals that I'm talking about, being very concise about in the Discover Investments Group Discord. We're also going to be working on Breakout Prop. I know Kelly was just talking about Breakout Prop. We're going to be rolling in some new traders and expanding that trader ecosystem, because you know what? If we learn the chops and apply those chops of trading in this current market, and then know when we basically flipped into a bearish sentiment, you're going to be a very, very effective monetary. You can become your own money printer, right? You can become your own money printer during bear markets. Let's see here. I'm going to go to the rest of these stories here. And obviously we have the Federal Reserve YouTube up here, but I'm going to be actually watching this on the website. The live starts at 2:30 p.m. If you guys see anything go live from Jerome Powell ahead of this meeting, please do drop it in the chat if you may, so we can make sure to keep eyes on all that. But we got some kind of interesting stories going on. We got Elizabeth Warren, the banking broad, Pocahontas herself, probing whether Trump's AI and crypto czar, David Sachs, has broken ethics rules. Take a look at this. There's this, God, what a weird smile. So Senator Elizabeth Warren out of Massachusetts and other prominent liberal lawmakers have turned up the heat on White House AI and crypto czar David Sachs, pressing the Trump administration official on Wednesday on whether he has overstayed his temporary post and violated ethics rules. In a letter sent to Sachs Wednesday morning and shared with Decrypt, Warren noted that as special government employee, the crypto czar is permitted to work in his position for only 130 days per year. Kind of an interesting highlight there, trying to put a little cap on the amount of time that he can sit in the seat. Any effort to stay beyond these limits imposed on you as a special government employee would raise additional ethics concerns for you and the Trump administration, particularly as it moves to implement recently enacted cryptocurrency legislation and put in place new rules for the crypto industry. And I'm getting a bunch of questions in the Discord. You know what? I know anyone that moved in on that Morpho trade at $1.97 is looking juicy right now. So you don't go poor taking profits. I'm a little nuts. I'm a little crazy. And you know what? I'm holding it, baby. That's what I'm doing. So now Warren has requested Sachs to, within the next 2 weeks, provide lawmakers with a list of days he has worked in any capacity for the Trump administration since his appointment in January, plus further details on whether he's conducted said business, including in Silicon Valley. White House did not immediately respond to Decrypt's request for comment here. Okay. Is Powell streaming on Pump? Crypto price, he says Powell is streaming on Pump. I kind of doubt that. Right? That'd be absolutely, and that's the top signal. If we see Jerome Powell start to stream on Pump.fun, I'm out. I'm selling everything. I'm selling Bitcoin. I'm selling Chainlink. I'm selling it all. If I see Jerome Powell peek his wrinkled little head onto Pump.fun, I'm out. That's it for me. This movement from Senator Elizabeth Warren likely will mean literally nothing. She has accomplished nothing in her career as a politician. She is a loud, annoying woman that accomplishes zero in her professional political career. Take that to the bank, put that in your pipe, smoke it. Okay. Now, we got some action happening with Binance. Binance is reportedly in talks with the DOJ to end its 3-year compliance monitoring requirements from the $4.3 billion settlement, which could ease regulatory pressures on the exchange per Bloomberg. This is a long time coming. The government, the US, has been going after Binance, trying to poke holes in the fabric of what Binance has been operating off of for quite some time. it hasn't really worked out. They got CZ locked up for a couple months. He put up the 4. He did a couple hundred push-ups a day, came out jacked and ready for even more. And now he's pushing forward decentralized science, among many other things in crypto. The DOJ movements against Binance, I felt this entire time, had no teeth. They were using it as a parade to keep people's heads low, keep them worried about getting involved in crypto, especially becoming the main character in crypto. We know that becoming the main character in crypto is not a good thing to accomplish. So, keeping that in mind, not too worried about it. And this is absolutely crazy. Phantom, when the dev is bald, the tech is good. It's hard to argue with this. Bald devs, bullish charts. Am I right or am I wrong? All right. Do you trust the dev more when he's bald? I mean, Walter Wright with that blue, I don't even know. Is this the guy from Solana? Holy, I think his name is. And then Bezos here. And then the bald Pump.fun ghost. Shout out to Phantom Wallet. I mean, honestly, what Phantom Wallet has done with the user interface and the usability of the Phantom Wallet is absolutely unprecedented. They've done an incredible job doing it. I would like to see Avalanche come out with a competitor. I would like to see a bunch of different chains, but particularly I would like to see Avalanche come out with a effective effective Phantom competitor. I would really, really think that would help the Avalanche ecosystem grow and thrive. I'm bullish on Avalanche, but there's some tweaks that need to happen from point A to B to actually really get that chain off the ground. Now, something very cool that I covered last night on, I think it was on the Arena, the Avalanche SocialFi platform with my buddy Matt Malik. Shout out to you, Matt. I think he heard me yesterday. Matt Malik is the best kind of chaos I've came across in crypto, right? Absolutely fantastic human being that is. Let's go into where the juice is for Avalanche. This was really, really cool. And shout out to Veteran Crypto for calling it out. Avalanche has grown by 140% in real world assets over the last 30 days. A massive increase. There is something happening under the hood with Avalanche, and it might be under the hood with Toyota. Avalanche with these big, big numbers. We had that Toyota announcement later. I think it was like 2 or 3 weeks ago. There is a statistical, provable increase in RWA movement within the Avalanche ecosystem. There's XRP Ledger at the bottom of the list. Aerodrome at number 9. BNB right behind Avalanche. That's all. That's tough to do. Stellar coming off the top ropes. Solana, Aptos, Polygon, ZK Sync Era, and then the top being Ethereum. Just some important side notes to know where all the RWA development, where all that long-term asset tokenization is moving. Now, I do want to find a little bit of a highlight from Eleanor Tourette. I tagged this last night. Let me scroll, do some doom scrolling and see if I can locate this. Where are you? And friend of the channel, Eleanor Tourette, absolutely awesome reporter. I think she's I don't know if she's still with Fox or not, but she's an absolutely awesome human. She's an absolutely awesome human. I do want to find this. Where is it? I bookmarked too many things, you guys. I bookmarked too many things. Okay, and that's my problem. That's my problem. But Eleanor Tourette is highlighting that the Senate Banking Committee is having a meeting. They're going to be discussing different market structures for what crypto can plug into, what it can't plug into, how banks' relationships with crypto are actually going to look. And here it is: as a Republican and Democrat senators continue talks on market structure legislation, a group of leaders from several crypto firms is set to meet tomorrow, which is today, right? Go over with their meeting with several crypto leaders and major firms to set basic Senate Banking Committee leadership into a roundtable setting, according to 2 industry invitees. Some close sources here. A meeting follows more than a week of industry review on the committee's latest approach in distinguishing securities from commodities, also DeFi treatment and other key issues. I know Veteran Crypto and everyone that's heavily involved with DeFi is going to be watching this very, very closely. Let's go hop back over to the Federal Reserve website. Make sure we're not missing any of the juice. Not live yet. Not live yet. We have the announcement of what the rate cut is going to be, which is going to be 25 base points at 2. It's still going to cause chaos on the charts. it's still going to cause chaos on the charts regardless. And then the actual press conference of Jerome Powell at 2:30. Now, I see a lot of people, I'm banking on him wearing a purple tie. I think he pretty much always wears a purple tie. So I don't think the tie is going to give us any signals, bullish or bearish. How many rate cuts this year in total? Right now, we're sitting and looking at 3 expected rate cuts over the course of 2025. Now, what 2026 is going to look like is where some of the devil in the details and some of the worries might come into play here. And I'm going to talk to you about that right before we actually go watch Jerome Powell. But I do got other crypto stuff to cover. Now, the Trump family's American Bitcoin went public on NASDAQ today. There's them hammer buying a bunch of meme coins on Pump.fun. It's great. They're having a good time. Confetti going everywhere. The Trump family's getting heavily involved in Bitcoin. They've been debanked, and it seems like they're leaning into it more than ever. I'm here for it. You know what I mean? Pump our bags. Now, when it comes to how long it's going to take for the Trump administration and or the next administration in the U.S. to start buying Bitcoin actively for a reserve, I don't think it's coming within the next few months here. I don't think that they're going to go buy the Pico top. I think they're going to talk about it. It's coming, guys. Stay on the edge of your seats. Keep tuned, right? And then they'll let the market reset back down to generalized lows. I think from the all-time high, be it 150K, 200K, I feel that Bitcoin has less downward pressure now that ETFs are in the game. I feel like Bitcoin has less downward pressure because treasuries are part of the game, but I think that it's going to be a 50% down, right? So if we hit 150K, I'll be looking for 75K. If we hit 200K, I'm going to be looking for 100. That's my general thesis as things sit right now. If things change, obviously you're going to hear about it. Let's see here. Bro, do you think we will dump then? When's then, bro? Bro, I ain't your bro, pal. I ain't your pal, bro. Let me know when it then is. My man, what's your name here? Vico Trades. A bunch of new names in the chat here. I love seeing all the new names up in the chat. Welcome to the show. Googly Moogly. Now that I've covered Trump pumping our bags and his son's up, we got to go into this. Metaplanet. This is a Japanese firm that has been leaning into Bitcoin treasuries very, very heavily. It's a relatively small firm in comparison to the other bigs that it's competing with on the stacking of Bitcoin as a treasury, a Tokyo-listed hotel group that owns $2.3 billion worth of Bitcoin said on Wednesday that its business is expanding to the U.S., but the stock slid as the top Japanese Bitcoin treasury sets up shop in Miami. They're actually kind of coming pretty close here. Let's read into this. Metaplanet, blah, 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 blah. The firm, which now owns more than 20,000 Bitcoin, that's a pretty good chunk. That's a pretty good chunk of Bitcoin, establishing a subsidiary in Miami, Florida to manage and grow incoming generational activities. According to a press release, Metaplanet said the wholly owned firm, dubbed Metaplanet Income Corp, will initially have $15 million in capital that will provide its parent company with a better opportunity to pursue derivative options and related activities that produce revenue. I like hearing that. That's the magic word right there, revenue. I'm making sure that whatever I'm investing into has very provable revenue. Okay. There's a lot of ghost chains out there. There's a lot of ghost chains that people are doing TA on, which is absolutely ridiculous. You need to make sure that the product is producing revenue, right? I think that is very, very important to do. Now, that's some backstory on Metaplanet. Founded in 1999, Metaplanet managed the budget hotels across Japan, including Love Hotel. Okay. But Wednesday's announcement makes no mention of hospitality. Rather, Metaplanet said the new subsidiary will separate from its treasury operations. In second quarter, Metaplanet disclosed an operating profit of 817 million yen, I believe is their currency, 5.5 million bucks on 1.23 billion yen or $8.4 million in total sales. So a little bit of a shift into the American market. Not surprised. I see a lot of companies investing in American markets. They see the new deal that Trump is doing right now. I'm is that the Love Hotels that were like here in America? They're usually like massage parlors, right? Lot lizards are a thing here in the US. What is going on with the Love Hotel play here? I'm going to move on from that story. Now, NVIDIA, the stock extends its loss nearly 3% on the day after China banned the company from purchasing NVIDIA chips. China banning internal CCP companies from getting involved in NVIDIA's chips operation. I do actually want to go check out NVIDIA price and see what it's looking like now that the market's open. Just a touch, just a touch. Are we just pulling back for general market expectations? NVIDIA. Go here. Let's go here. All right. So it found a little bit of a bid here in this structure. Found a little bit of a bid in this structure. But honestly, like looking at these charts of the stock market, like I'm not buying this. Look at the performance has already been there, right? The time to buy NVIDIA was say this dip at $100, this dip at $80. Now it's at $170. Like I'm not buying this thing. But you know what? Where NVIDIA revenue is going to matter. NVIDIA is basically the skeleton elephant that carries the entire Wall Street sector with it. It's now worth more than the nation of Canada or Snow Mexico, otherwise known as. So seeing them pull back just a bit, oh my God, it's the end of the world. But honestly, guys, like, can we please calm down? This thing has been absolutely ripping to the moon. A little bit of a haircut is in store. And people have been asking me, am I going to get a haircut? The answer is no. The answer is no. I'm going to grow this mullet out to, I can't believe it's not butter level. Okay. I really feel that way. I'm going to be the next butter guy. I'm going to be the next margarine salesman. God, what a weird word. Let's check back in on the FOMC. Make sure we're not missing any juice here. We got 32 minutes until the FOMC goes live. Rather the data comes out and then they go live at 2:30. So we got 32 minutes until they verify if it's going to be a 25 base point or not. And there are slight chances that we could be looking at absolute chaos. You know what? I'm here for the chaos. Let's light this candle. Let's do 50 base points. Actually, you know what? Here's what I say. Let's do 100 base points. Let's do 100 base points and light this candle. Let's let the entire world know what a Ponzi scheme the fiat currency system is. Let's let them know that you literally lied for years, not only about inflation levels, right? They've fudged the numbers on inflation levels, but they did it within the proper channels so that we can't roll that information back. But also the jobs market. And like when we ask people like, how are you doing? How's the job market feeling? Are you doing okay? The average person is not doing okay. They don't have more than $400 in their bank account to deal with emergency problems. They're using credit cards to survive. They're all-time highs in help me with my mortgage searches on Google. People are struggling. And yet they come out here, the market's strong and resilient, guys. Don't worry, it's going to be okay, right? Absolutely insane. Absolutely insane. I could go and start cursing. I feel like I sound less intelligent when I curse. And I'm trying to be a better person. I am trying to be a better person, right? Doesn't mean that I'm not going to try and make the devil afraid to be on this earth. After seeing what happened to Charlie this week, it is clearer than ever that the devil is alive and well here on earth, and I am going to aim to make him terrified. I'm going to try to let God work through me and make the devil terrified. Now let's go check out what Tom Lee is talking about with Ethereum here. Tom Lee sees the biggest winners if the Fed rate cuts happen this September. So U.S. Federal Reserve may cut interest rates, yada, yada, yada. Analysts believe this could trigger sharp gains across technology stocks and crypto. Fundstrat co-founder and BitMine chairman Tom Lee told CNBC that NASDAQ 100, Bitcoin, and Ethereum stand to benefit the most. Federal Open Market Committee, the FOMC, meets today, and they also met tomorrow. As the last meeting, the Fed kept rates unchanged, but expectations are now leaning heavily towards an easing cycle. According to the CME Exchange data, markets assign a 96.1% probability of a 25 base point cut, 3.9% a chance of a larger 50 base point cut. But that's actually, I think that these data points have shifted since they put this little article out here. So let's go straight to the source here. Let's go to the FedWatch tool. Let's go check out. Let's go check it out. So we got a 95% likelihood of 25 bips and then a 4%. So not too big of a change. Very heavily weighted towards just a quarter of a point rollback. But let's go look at October now, right? Let's look at October. Let's see how scared these little fellas are. 72% likelihood of a 25 base point cut in October on the 29th. And then a 3% chance of a 50 base point cut on October. And then December also looking juicy for another expected rate cut here at 66%. So basically, it looks like with a higher probability than not, that we're going to have 3 consecutive interest rate cuts. But the linchpin here is that they're cutting interest rates as inflation is returning. Now, there's a lot of data that I can go in and show you after I go through the rest of the altcoin news here that paints a picture of take your profits and protect your money over. Once this bull market is done, there needs to be a game plan in place to protect that value. Okay? You need to make money slowly and protect it quickly. I know that there's lots of snapshots of I turned $5 into $100 million. Don't go chasing those waterfalls. Make money slowly, protect it quickly. Let that sound resound through you as you see this altcoin market continue to move, because profits, no one goes broke taking profits, as DZ wonderfully says. Google and Sway Network, is it Sway or Sway? You let me know in the chat, is it Sway or Sway? Google and Sway Network teaming up on next-gen payment standards? What? Why isn't Sway mooning right now? Sway Network, can't decide how to call it. It's Sway, right? It's Sway. That's what I thought. Sway Network has teamed up with Google, an official launch partner for the tech giant's Agentic Payments Protocol, AP2, a system designed to let artificial intelligence agents perform financial transactions on behalf of users. AI agents doing transactions for us, smoothing out the process of crypto, I think is a very beneficial movement. In general, I want to read into this to actually find out. Emir Hossein, up. Okay. Oh, where you at? God, the chat's moving fast. Up. You know, I ain't a fair weather fan. I say up. I'm long. I'm up. Now, let's look at this. Instead of just forwarding instructions, AI systems would be able to transact directly, managing balances, settle payments in real time. Developed by Mistine Labs, Sway built to deliver high-speed programmable transactions along with privacy-focused identity solutions. Its role in this AP2 marks the step towards combining blockchain infrastructure with artificial intelligence and creating a potential for automated commerce powered by both technologies. The announcement briefly pushed by Sway token price higher before the market gave up those gains. Analysis of this say the muted reaction reflects investor caution, as real-world adoption will determine how significant AP2 becomes. And the markets are they're not feeling good or bad right now. They are very agnostic, as we see the fear and greed index at a 51. This is what is Redfin doing here? I have the deport button as well. I have a new button. I need the deport button. Aaron, I know you might have to search for it. If possible, find me the deport button. Now, I talk a lot of trash about certain crypto projects. Not even just a few projects. I mean, there's a lot of projects I got gripes with. But there's one project that is an altcoin that has a fondness in my heart, and that is Chainlink. Okay. And I'm seeing some good things happening on the Chainlink exchange reserve side. Chainlink supply on exchanges has dropped to a multi-year low as institutions begin to adopt the network per crypto quant. But also, looks like something coming here. Chris Barrett, that's with Chainlink, talking about something booting up. Chainlink team hints that the network is booting up and are gearing up for the largest announcement in leak history. Now, there's something that comes to mind. An expectation and a plan for Chainlink to go live with Swift in transactions using the cross-chain interoperability protocol, or otherwise known as the CCIP, developed by Chainlink. And this is a communication and data oracle network that transfers data to and from. It is one of the more based and real utility projects on the planet, for me, in my humble opinion, of course. I bought Link a long time ago, but I added to it about $13. I got an old bag of it. And I actually kind of feel like I'm going to hold some of my Chainlink. When you see GDMS Maximus return and I start dumping all my, my memes, my altcoins, all that stuff, Chainlink, a chunk of it will remain. I'm going to keep a moon bag on. I like this question. Takash, you're going to get me going on cars. So which car you got? Where'd your message go? Which car you got, bro? I have a minivan. I am a dad of 4 kids and I have the Sienna. Okay. And now the Sienna, extreme levels of comfort, extreme levels of reliability, a massive screen, a TV in the back. I was really, really close to getting one of the newer Corvettes. Okay. Those new Corvettes look absolutely sick. But I went to a car show and then I sat inside of the Corvette and I do not fit. So I can't have nice things. Right. And I come out of my house this morning and my second oldest daughter picks up a stick, bam, hits the car. I don't think I should get a fancy car until they're, of age where they understand fear a little bit better, because yeah, she's just going to beat it up. And I would be heartbroken if she hit a brand new Corvette with a stick. Obviously, like, there's not much you could do. But that would be pretty rough, right? That would be pretty rough. And also, I got to pull up the basement chat here as well. If you guys don't know, I have 6 monitors, about 10 chats in front of me. I got, oh my gosh, what is up? All the people on the blockchain basement. Thank you guys for joining this massive, massive multi-stream. We're at 7,800 watching right now. You guys are dead center of my heart. Okay. Dead center of my heart. Someone's doubting that I'm not that tall. I don't fit in it. My knees hit the damn dashboard. It's not happening. Okay. It's not happening. Now, another RWA project that's very, very interesting to me, Centrifuge. They're doing DERWAs coming to Stellar. So they're looking to actually start partnering up with Stellar. A lot of people ask me, like, how bullish are you on XRP? Blah, 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 blah. And it's if you must find something in the ISO narrative, right? The ISO conspiracy theory realm, I feel like Stellar has better upside than XRP. I think that they're essentially going for the same thing, and they have pretty similar original founding members, Jeb McCaleb. So I feel like Stellar's actually got pretty similar longevity outlook as XRP, but better upside because the market cap is so much lower, but it's definitely finding its stride within the RWA sector. Look at this. I mean, it's number 6 in terms of RWAs. It's definitely a nice chain that's very sneakily moving up in the ranks in terms of RWA involvement here. Now we do got to check back in, make sure nothing crazy's happened on the Federal Reserve site here. 2:30 still planned. Let's see. And Nicole Marie in the argument, and I want to know in the chat here. Let's put a poll. What is a better project? What is a better project? XRP or XLM? XRP or XLM? All right. So which is better? That's what I'm going to put. And the chat is going to decide. Okay. Chat is going to decide. I'll put this in both YouTube channels. God, I got a lot of stuff going on, right? I got a lot of stuff going on. Let's see here. Let's put a poll. Because there's a lot of ISO maxis. There's a lot of ISO maxis out there. And I just kind of want to do a litmus test on which project is okay. Might it piss XRP people off because you're bringing up another option other than XRP? But you know what? XLM has been in the mix for quite some time. It's a very fast protocol. And in the last bull market, I was even using Stellar to get in and out of projects for a very, very cheap transactional cost. Holy God, my Morpho trade is going ballistic. Hold up. Wait a minute. Oh, what you doing? What you doing, Morpho? All right, hold on. Wait a minute. Something is going right. All right, so we are pumping. Do I clip it? Do I jeet it? Not bad. I mean, not bad. I was a tiny little trading bag here. Oh, yes. Oh, yes. And that's why no one will ever remember your name. Staying out of the trenches. right? Absolutely sick. Aave trade pumping. Oh baby, we are moving. We are moving. What's all these deleted messages? World Liberty 5, World Liberty 5. Don't spam the chat, Kevin, but I'll look at World. Yeah, here's my deal with World Liberty 5. It's a test ground for government level DeFi involvement. Bullish for DeFi, yes. Long-term outlook, yes. Probably going to turn into something really, really big over the long-term time frame, yes. Does it have sexy pumpamentals currently? No. No. Okay. So there is some value in looking at a project that has a long-term vision, but expecting pumps like 50% moves in a day in comparison to like Memecoin type price action, kind of out of the scope of what I'm looking for out of World Liberty 5, but I do look at it as a test ground for a government level involvement of DeFi, which I think is very, very bullish. Starting to move up $7,500 in 12 minutes. Ooh, what's up? Federal Reserve can print money. We can print money too. Am I right? Am I right? They can do it. Why can't we? Right? That's the top. That's the stuff. Is Crow pumping too? Ooh, thanks for the marinade tip. Everything is up now. Dang, what are we looking at on Bitcoin? First and foremost, and look at all the markets are going, ballistic at altcoins, and Bitcoin's like, yeah, I'm not dead. Yeah, I'm not dead. Look at this. Absolutely crazy. And it's still going. It looks like that support zone actually ended up playing out pretty nicely. I've stopped trading Bitcoin though. I've felt more juice to the upside with the altcoins, and particularly Morpho, right? And actually, let's head on over to CoinMarketCap. Let's check it out. Boom. All right. So what do we got for the biggest winners? Bitcoin's still down on the 24-hour time frames. Just keep that in mind. MYX. Oh my God. I said this is going to pump yesterday. Look at the chart. Look at the chart. I want to puke right now. Oh my God. Oh my God. It is going nuts. It is going absolutely nuts. Now, it's probably going to run into a little bit of turbulence in these previous all-time high zones. I'm expecting that, but gosh, what was that gain? We're literally looking at it here, being like, yeah, it's probably going to pump you guys. Literally right here. Up by 62%. What? This is the chaos realm. This is animal spirits returning to the market. Arrow, let's see here. And you know what? I might have to clip this Morpho trade. It has gone up substantially for me. I'm going to clip. I like 40%. Fine. Should I clip it or not? Okay. Should I clip it or not? We got 40% gains on the Morpho trade. I'll leave you guys in control. All right. Clip the trade or not. Let's put the Q&A, or not the Q&A, the poll. Let's start a poll. Oh, wait, I got to end this. Oh, yeah, we got another poll to go over the results of. So 74% of viewers on Discover Crypto think that XRP is a better project than XLM Stellar Lumens. Let's go on over here and see where did my other chat go? Hold on, let me grab this out of the way. I got so many chats, guys. All right, let's see. All right, so we got XLM by 63% in the blockchain basement. That's very, very interesting. That's very, very interesting. So 62% of people think that XLM is better in the basement, and then 74% of people think XRP is better in Discover Crypto. A little bit of a contention point there, y'all. Y'all gonna have to fight it out, see who's got better upside after this altcoin season is all set and done, right? You're gonna have to measure up them sticks and see who made a bigger bang for their buck. These other now, talk about some base plays here. Base team confirms that Arrow holders get native token allocation. September 29th, base batches signal announcements timing. Buy Arrow under $2.50 before the allocation snapshot locks, according to AIXBT. Let's go check out Aerodrome. I heard that there was some juice on the charts. Honestly, there's juice all over the charts. It's crazy. It's a freak off. Let's see here. $1.28. Up by 6%. 7-day. All right. 11%. It's really not broken out. Like, I'm gonna be looking for that breakout about $1.33. All right. $1.33 is where we can start talking about like that breakout moment. It is what it is. I bought Arrow 18 cents. I bought it 3 times again at 50 cents. The bag is what it is. We're doing a lot of work in the background with Aerodrome. And if they do that base token release, things are going to get absolutely crazy. Absolutely crazy. Are we falling now? Let's see. Oh my God, it's over. Oh no. Help me, I fall. Help me, I fall. Oh, we got some news about AVNT too. Well, we got time before the FOMC data comes out. So let's hop on over to that. Now, perpetual futures were released on Coinbase for Avantis, right? AVNT. Now, Avantis is a sneaky little girl. Sneaky little girl. This is something that is backed by Pantera Capital, which is not a small firm, and also backed directly by Base. And this is something that I see being rolled out by Base as a hyper-liquid competitor. Hyper-liquid competitor, right? So I think Base kind of fostering the development of Avantis makes it have a lot of pumpamentals. A lot of pumpamentals there. We may as well go check out the price because I'm giving myself FOMO about Avantis right now. Okay. Avantis. Oh wait, AVNT. What am I doing? What am I doing? Unbelievable. 4% on the day at $1 flat. Okay. That's actually not a bad pullback. I remember I was looking for something around this shelf. It did. It's 80 cents is what it did hit. I should have been paying better attention. This little red highlighted zone on the daily, just about what I'm looking for. Entries for me personally, because I'm not a financial advisor and I'm a public crypto maximalist that gets to come out live to 10,000 people live on the show right now and tell you what I'm doing with the most volatile asset on the planet. $1 flat. I'm looking for entry points around 85 cents. Okay. Looking for entry points around 85 cents. Let's refresh this chat. Man, this is that fast moving chat I got going on right now. A little bit of intense. Let's have a drink. Are we? Not that kind. Get the hair flowing a little bit, right? And now maybe we do the poll of do I clip this trade or not, right? Do I clip the trade? Clip the trade before FOMC. That's the question. Given the power to the people. Of course they're manipulating us, man. Of course, Brian. There's a government. Their job is to manipulate us, to psyop us into submission, right? Start poll. All right, I'll give you guys like 3 minutes to answer that. Let's see. Yeah, I love this too. People say that it has not pumped, but everything is at least 250% up in the last 6 months. 100%, bro. Well, 250. Maybe you chose the wrong coin if your coin hasn't pumped yet. Maybe you were following the wrong people. Everything that I've been leaning into, publicly disclosing that I'm buying, is up immensely. The one that's underperforming in my portfolio is Ondo. Okay? Ondo. And I almost feel like buying my barbecue food with Ondo tokens today. Am I going to go poor if I spend crypto I bought for half the price or a third of the price and I sell it right now and I only made 200% gains? Go buy myself some delicious barbecue, right? Am I going to be poor from that? I want to know. This whole like idea that people have to marry the altcoin that they're invested into is just absolutely insane to me. I think my Discord's probably pretty happy about that morpho. Oh, now they got some short targets. Unbelievable, Elise. I'm going to fight you, Elise. Unbelievable. They're having a lot of fun in there. If you're not in the Discord and you want to learn how to trade, guys, I mean, you're doing yourself a disservice. Let's do some live sleuthing as well to see. We're 10 minutes away from the data coming out on base points. So Fed rates, right? Let's type this in. And I think it's been about, what has it been? Has it been 3 minutes? DAG, my worst coin, Nova SS. You know what? I totally forgot that I hold DAG. I haven't covered DAG in a long time. I'm going to go look at that chart too. Let's check out what we got here on the, all right. So we got a 63% vote for yes, clip the trade right now on the blockchain basement. Now let's go check out Discover Crypto. 70% yes. All right, guys. There it goes. There it goes. It's dead. It's dead. I killed it. I only made 36% in an hour. I'm gonna go poor now. And it's all your fault. All it's all your fault. Man, what a beautiful day trading. You know what? This has been an incredible week. Last few weeks trading here. All right, I ended the poll. I closed it. The power to the people, right? Manipulation happening. Now, it's not just enough that I made 36% in an hour, but it also must dump immediately after I sell the long, right? That is the average logic here. It's probably, it's probably going to make me regret selling. Whatever. It is what it is. I'm here for you. I'm here for the content, folks. Ondo goes to $26. That's a hell of a pump. Ondo's got to accomplish some major stuff going. I like this. A gung. And I'm probably slaughtering your name. Please forgive me. I am but a simple man. Thinking that we go to $130,000. Woof, man, $130,000 on Bitcoin off this pump, man. That would be absolutely juicy. What about XRP? Hybrid. It's when I talked and compared about Solana or Stellar to XRP, it wasn't that I think that XRP has no pump left in it. I'm thinking like $5 or $6 is accomplishable. I gotta let the chat know. GTID, holy God, I got all kinds of GTID on live. GTID on live. Got to get the notification out to everyone. God. Oh, woo-hoo-hoo-hoo. Oh, it makes me so happy seeing all of these reactions in our trading group. God. Oh, that makes me happy. Everyone says there is no bull market, there is no upside. Just leverage it. All right. Now, we don't have the data out yet for whether the Fed has cut rates or not. Let's see here. We got 7 minutes going, and we may as well check out Kita before. That's a great idea, actually. I like Kita. I like Kita as a project, but it lost a little bit of momentum after that Visa announcement. Where are we at? So we're about $1.92. A horrible graph, actually. Actually, this is opportunities. Higher lows, right on the doorstep of alt season. Higher lows on the doorstep of alt season. New project, juice. That's what I see on Kita. Okay. That's what I see on Kita. Are you going live, John? Am I live? Am I live right now? It says there's 9,000 people watching, and I'm questioning now if I'm live. Am I? Oh, to the Fed. Yeah. I have the live stream for the Fed pulled up. It's coming out at 2:30 though, right? So we're gonna watch the Bitcoin and market reaction here in about 6 minutes. We're getting that data come out in 6 minutes. This is gonna be crazy, you guys. I almost feel like I need some doom music going on, but I don't want to go back into jail, right? Don't want to go back into jail on YouTube, so I can't do that. But here's the Bitcoin chart. We're right at 115.9. Let's see here, and we'll actually make this bigger. Oh, snap. I got a legend from down under coming in, getting ready to come in the show here today. We also have, I want to show this. We got the liquidity sweep going on. And you just give me the wiggly face when you're ready to come up on the stage, my mystical co-host here. We got a fella coming in. Now, the liquidity sweep that I was watching earlier this morning definitely happened. It still looks like it wants a bid, but this is probably going to be chaos. This is probably going to be chaos. The Fed number coming out, we already know what it's going to be, but we're probably going to experience some painful up and down. That's what, usually these things are, very volatile days. I was able to find the trade earlier this morning, and, now here we are. And, it's probably going to make me wish I was still in the trade, but it is what it is. This is like trading will give you ultimate FOMO either way. Either way things are going, it's going to give you ultimate FOMO. You just got to remain based, There she goes. There goes again. There she goes again. I'll never do that again until like 20 minutes from now. This is kind of a chop zone. This is a turbulent zone. ETH Classic, ETC, normies are going to buy it. They're going to be like, oh, it's like Coke Classic, but it's Ethereum Classic. It's going to pump. ETH Classic is absolutely nuts. ETH Classic is absolutely nuts, and it's a true ass altcoin, right? So you know, I I almost feel like ETH Classic feels like Cardano to me, and maybe I'm gonna get booed off the stage, but I can't hear you, Booze, so it doesn't matter. It feels like the true ass altcoin that Cardano is, right? Massive pump coming now, longing ETH. Oh my God, you guys are being wild out there, hopping into trades right before this. Danger, absolute danger. Let's go back to Bitcoin's chart and see what we got here. You know, we'll keep an eye on this. We're right smack dab in the middle of this chop bid zone. Cardano, I think, will be a long-term winner. Cardano, I think, will be a long-term winner. Could this start alt season? We've been in altcoin season, baby. But how long the alt season lasts, right? But how long the alt season lasts. Pump over Cardano. There's a lot of conversation, a lot of battles back and forth. Which project is better? Now, if you have a concise thesis on why a project is good and nothing has fundamentally changed in that original thesis of why that project is good, why sell, right? If nothing has fundamentally changed on your thoughts on why whatever project it is that you're thinking about is good, why change your investment strategy? I'm asking you a question, right? Not telling you what to do, just think internally, right? Use critical thinking logic to make those decisions for ourselves. Now, we will the YouTube for the Federal Reserve also just started up their little show here. It's not live yet, but they got the room created, so we're going to keep this up. Oh, look, they disabled the chat because they don't want to hear about the gripes of everyone yelling that they completely lied to us for the last few years, and now we're heading into a market freeze and stagflationary event. Now, I can talk about those stagflationary events after we get that actual data come out. Again, it's looking like 25 base points. Open Door Army, please will you put the charts up when it goes live? Absolutely. Absolutely, I will. Oh, what the hell's Open Door? It sounds like Next Door. I was falling asleep last night and I heard this huge crash. And my Cane Corso started going absolutely ballistic in the room next to me. So naturally, I cleared the home with the flashlight, the standard. You know, if you don't know, you grab the real estate on the handle of it and you hold your light like that. If you don't have, a mounted light, it ended up being a gigantic lantern that fell down that my dog was trying to attack. I was looking on Next Door Neighbor, trying to find out if anyone had heard any craziness there. Last night, that was actually kind of a crazy moment here. Can you check on Crow? Why not, brother? Why not here? Josh, you give me the signal as well when you're ready to go up. I'll pull you up whenever you're ready, brother. ETH is pumping. ETH is pumping off of that $4,500 mark at least. So that's good. Go check it on Crow. I want to keep. So let's go. Let's go to Crow token because it had a lot of juice from that Trump announcement. And then a pullback. Kelly was doing some excellent TA work on it earlier this morning. Crow, let's see here. On the 15-minute, a decent move, but I'm imagining that most alts look like this. I mean, that was not a massive, like 1.4%. Maybe on 50x leverage, that's a huge pump. Maybe on 50x leverage and Batusi, okay? Batusi. In the chat, I see you, and
You are banned!
okay, there you go. Now let's look at Crow now. Look what that band did. All those gains gone. ETH dumped. Am I happy I sold my long? Sort of. Okay. I would have lost a little bit of money. Made some good money on that. Honestly, that was pretty cool. Now, SPX pumping. SPX is pumping on the hourly. 25 base points. It's the number is in. 25 base points is the move here. 25 base point cut is now looking like it is confirmed. Let's go verify this all on the Twitter. Let's see here. BPS. Let's see here. 0.25. Yep. We got the chat coming in. ETH going crazy. Oh my God. Here's the Darth Maul. Holy God. The chaos. The chaos has become 15-minute Darth Maul candle washing out, absolutely crazy. I'm going to set up my my screen here so I can actually overlay the live stream with the charts. So give me just a quick second. I'm going to make things bigger. That's what she said. Let's see here. Share screen. Bam. In your thing. Bam. All right. Got this. Add to stage. And then I can add on. You know what? This is what I could do. So, oh God. Where's the Fed thing? All right. Here we go. There's that. And then I'll also make this a separate tab. And I will make this smaller so we can keep a close eye on ETH price here. Bam, 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 bam. Bam, bam, bam. Okay. All right. So nothing too crazy. I mean, this is Bitcoin price, right? Just writhing within this buy and sell box, which is absolutely nuts to see. Sonic airdrop, worst ever. It's the way it goes. Sonic airdrop, worst ever. Pour some liquor out, baby. Pour some liquor out. Now, oh, and where's this? Hold on. Where is it? Oh, I can't find the sad music. I was looking for a tiny violin. I wanted to play a tiny violin. All right. Let's see. Oh, you're good to go. Perfect. All right. We got add to stage.
Test.
Bam.
There we go.
What's
Reload
up,
the slide
man?
a little bit. I'm brighter than the future right now, so we're turning down the lighting just a little bit. But there we go. What is up, guys? Yeah,
Oh,
dude,
man.
FOMC, perfect time to go live. Perfect time. The trades on XRP are doing fantastic here. We're in the same trade.
Oh, you are.
We are
Okay.
doing good. We're about $1,800 right now, but the volatility is insane. So I'm thinking about closing this thing, dude.
And shout out, we got 11,000 people watching the show right now. 3,500 on YouTube. I mean, we are all over the place. I am totally banning. What's this,
Banned.
guys?
I love your
Hold on.
band.
Yeah, we got. Well, I need the deport button too. Hold on. I'm gonna hide this user from the channel
Banned.
forever. If you come in here shilling something 100 times, I know to literally do away with you forever. Kind of like the deport button does. Algo looking nice. We got a lot of charts that are looking nice, honestly. Let's go pull up a lot of these things. God, I'm probably gonna hate myself for closing that more for long though.
Yeah.
Probably
Yeah,
gonna
I mean,
hate
dude, it was
myself.
hard. Like, because I entered the XRP trade here with the chat, with the Discord and the groups, probably 2 days ago now, and we got in at $2.99. So we have a really good break even position. Almost came back down to it takes my stop loss is at break even, but dude, then I don't know. We just saw the pinch taking place. We left it open. It's now up roughly $1,900. But dude, check this. Let me share the screen here.
Yeah,
I don't know
yeah,
if
yeah.
anybody's seen this.
I'll pull it down.
Look at this minute time frame, Drew.
Oh my God, bro. Oh
That
my
is
God.
XRP on the 1 minute time frame. So we saw it go up to 306.7 and then back down, but to 301 in one. I mean, that's a massive move here off the announcement. But when you're looking at the liquidations here, guys, it looks very bullish today. I think, with everybody coming in here, we have liquidations all the way up to $117,000. The 117 level has been huge resistance. But if I think we break through this, I mean, we might get a nice sweep like we were predicting up to about 118 before we see a pullback potentially.
Yeah, I mean, people are asking me like, say up or down, Drew, up or down. I'm like, up 118K. Feels like we can do it today.
Yeah.
We'll see if we get there. I did clip my trade already, but it was kind of a fresh one. I'm just a scalp trader, in and out. I get in and out, absolutely chaos zone. Josh, good to see you though. Did you lose a tan? Why am I so much tanner
I
than
have
you?
no
Weren't you
glasses
just in
today.
Bali?
I realized I didn't have glasses on until I got to the studio. So yeah, but I'm also just white as shit. So there's also that. I went to Bali for like 3 weeks and I went from white to eggshell white.
Okay.
Not even like a fresh egg out of a real chicken coop, like just straight up bleached egg white.
Yeah. My wife tried to get me to
Josh was
leave
like
the chickens
President
behind
Lee.
on the next house. It ain't happening. I'm not leaving the chickens behind.
I'm so guys,
chicken
the
left
more I
behind.
turn into a Bitcoin maxi, the more I turn into President Bukele. That's what's happening here.
Okay. I can see that. That. Absolutely. Well, as you can see, the charts, I mean, this is the 15-minute time frame for Bitcoin and very, very volatile. I'm going to zoom this in because when on fence, zoom in, right? That's what the thing goes. Oh, let's do it. There we go. Ooh, baby. We are getting some juice on Bitcoin. Love to see it. We don't have, I mean, what's going on in the background is basically just their little commercial thing. They're back to the waiting period here. Nothing insanely exciting. Josh, you know, I've seen some things, like I'm starting to feel a little bit of FOMO about this AVNT ticker, this hyperliquid competitor.
Avantis, baby.
It's down to $1. But hold on, you broke my character. You broke my character. Josh looking like Dracula.
Yes, sir, dude. No, I didn't have time to do the full hair today, so I just slicked it back today, dude. We want the slick back look today. No glasses, dude. I feel like biting down on some cheeks. You know what I'm saying today? That's how I feel, man.
Shout out to that. Shout out to that.
Which, guys, chat, can you hear me? Because I did go live on TikTok as well. And there's like literally there's 10,000 people watching. Guys, everybody start double tapping. Hit that like button. Repost if you're on X. We're now like 25 minutes away from Jerome Powell coming out and speaking. We're open in a position on XRP here, up literally almost $2,000.
Let me check out your position.
So shout out to everybody that followed. But yes, guys, I'm Dracula, and with me today, I got Doomsday Drew here with me. So we got a perfect mix. We got the person that's prepped for the end of the world, and I am the person from the underworld. They cut 25 basis points. Yeah, it kind of came out as expected, guys. So what people are going to be waiting on now is really what happens at 2:30 this afternoon, which is now only 23 minutes away. Let me know in the comments right now. What do you think? What color tie is Jerome Powell going to wear today? Because that is how markets tend to bet on the price action.
Always wears purple. I don't understand where this betting on what he literally, it's like he only has one tie and it's all purple. Like I'm betting purple.
Maybe today's purple. Maybe green, orange, dude. Orange would be wild.
Ooh, the charts are getting spicy here, Josh. Charts are getting spicy here.
Yeah, I don't like them. I think I should just close this trade.
You're gonna cheat it?
I don't know, man. I mean, it's just an easy, good, open trade. And I
your
feel
stop
like
loss
when I'm
above the
looking
entry
at
point?
What's that?
Is your stop loss safe and above the entry point, or are you leaving it?
Yeah, it's at about break even.
Okay.
It's at a good position. So like what I'm looking at though is, I mean, dude, I'm looking at the liquidations here. Let's go to the daily time frame. The daily time frame, again, bullish. So like Bitcoin, there's liquidity down to 114.5, but like there's so much starting to open up towards 118. And what you guys got to remember here is on the screen, it says it 100x, 50x, 25x. The bright orange is the more, like, you want to pay attention to the bright orange more than anything. And you have liquidity not only open up all the way to 128 or 121, but look at this, Drew, 127.6. There is 10x positions on. So there's liquidity up here. So if we get a short squeeze, it's very, very possible. I wouldn't be shocked if we push to 118K today. It just, you got to be prepared for the volatility. So if you're not in a good position that you caught from a few days ago, just know that this is going to be incredibly volatile. Bitcoin looking wishy-washy here. Let's look at XRP again, 105. I mean, look at that is disgusting. That is this. How much is this, by the way? This is a 1.85% candlestick. So if you're on high leverage,
right,
good luck. Good luck.
Yeah,
we're on a 5x low leverage long from 3 days ago.
That's why I got out of the way with my Morpho long, is because it's 19x. And so, and it's like a way smaller market cap, bro. So it's just, it is,
that's
what
pretty
it is.
degenerate. Yeah, that's moving by 2-3% candle wicks on any given moment.
But it's an easy, I made like 40% in like an hour. You know what I mean? It's like, I got a position ahead of time.
Bro.
Huh?
Lock it away. That was beautiful then.
Oh yeah. I mean, absolutely. And if I'm making 30% trades daily, that compounds very, very quickly. You know what I mean? Very, very cool though. I'm loving seeing the volatility. It makes for good excitement on the charts. I am monitoring and waiting for Jerome Powell to go live on the Federal Reserve website here as well. And we might actually want to watch it on this one. Let's see here. Pull this bad boy up. And then
that will be definitely the one you want to watch.
Where
are we going? Okay, let me ask this, chat, because let's get a price prediction here, guys. What do you think Bitcoin's price is? It going to be up or down? Let us know, up or down after the FOMC meeting today. I want to know where chat's at, up or down after the FOMC, because chat is asking right now, Drew, and I have to ask your opinion on this. Do you think we're going to be higher or lower after the FOMC meeting today? Because that's what everybody is curious about.
I'm leaning bullish. It's really, I'll have to expand this a little bit, but the weekly time frames have got me feeling all giddy inside. We printed a green dot on the upper echelon of momentum, and we are starting to see some really, really good indicators telling us up. And shout out Crypto Face and Market Cipher. Ooh, I got a little eyelash trying to make its way into my face. So this is what I'm looking at on Bitcoin is we printed a green dot on the weekly. These weekly green dots they usually end up being very, very powerful for price action. We see momentum swooping back to the upside. I also see that the VWAP has reset from the lows that it hit. And I really like when the VWAP hits a -13 on the weekly and then reverses, kept momentum to the upside. And we are in pump city from a larger time frame standpoint. So beyond all the 1 minute charts and all the things that we're doing on the leverage trading side, I am hard-sidedly of the opinion we are going higher from here. Yes, there's extreme chop right now, but that weekly signal to me tells me quite a bit about where the general markets are moving, where the money is flowing, how good the velocity of upswing we are actually looking at outside of all the the bullish people, the bearish people. I mean, everyone's going to have opinions. They're just like butthole, right? Everyone's got one. But I have data backing this up. And so, it is what it is. I'm not quite. Should we talk about stagflation? I feel like stagflation bores people, but basically, we're in a scenario right now that I feel like is worth talking about. Josh, can you go on ahead and pull up the gold chart on a weekly time frame and then zoom out so we can get a viewpoint all the way back to 1970? Because I got a story to tell here.
Sorry, what chart?
The gold chart.
Gold.
Commodity that is a hedge against monetary irresponsibility. The same irresponsibilities that we're seeing in our current day and age right now as the Federal Reserve is cutting interest rates into an inflationary environment. This is what I want to compare to our current time frame here. I'll pull you up. Now, this chart is very, very, very important for me and my investment strategy. What we see, Bitcoin going to a parabolic hockey stick all-time high, or gold rather, 3650, right? A massive, massive move gold's made. This is not a normal move. This is not a sound and resilient fiat currency system that we're looking at here reflected on this gold price. But you see it all the way back in 1970. Back and look at that hockey stick pattern that happened back in 1970, about 1976, right there, that swoop up right there. This current scenario has all of the same macroeconomic implications of inflation returning, cooling labor market, people without money in savings account that ended up causing a lock on the housing market and a general stagflation where you don't have growth, but inflation returns with a vengeance. This looks very, very similar to me. This looks very, very similar to me. I don't feel like buying gold at all in this scenario. But what I will say is that if this process repeats itself, instead of the 16% mortgages that we experienced in the 70s to 80s with the what they call great inflation event, we're going to be looking at 12 to 14% interest rates on the average home costing $450,000. This is a nail in the coffin for anyone that's trying in retail sense to own a home in America. Right. And so after the event, that first box that you highlighted there, the market on gold and the commodity went flat because they injected tons of liquidity. They brought interest rates down. They really tampered the market down. And I just want to warn about this because, what's being done over the course of the next few months here is bullish for our alt bags, bullish for risk assets, bullish for gold, but there will be a reckoning. And I think in my heart of hearts that the 4-year cycle is still absolutely at play. I feel like that is still absolutely at play. Check this out. Bitcoin
dumping right now. Yeah, I was about to say.
Let's see. We're and I'm glad I clipped that trade. Jeez, good googly moogly. Let's
Yeah, we're
see
getting
here.
that FOMC volatility, if you ask me.
Oh yeah, I mean obviously it's going to be there.
Looks like we just got
Really
a huge liquidation sweep.
huge liquidation sweeps. Let's go to the 4 hour and look at this a little bit wider time frame. I think a crescendo. I mean a major support spot at 100. Is there any liquidity spots at 114.5?
Yeah, we came out and we actually came right down to it. That was the liquidation level. So
oh really?
now the liquidation level is 116.9.
Okay.
Still a little bit more, but it's a 114.599, and the liquidation sweep was to 114.99. So it's kind of like, actually, I'll move this up a little bit. It's about here. But again, people need to remember that a liquidation level doesn't necessarily mean it has to be wiped. It could be a support zone. So it's going to be a really hard spring for Bitcoin to eat through this position. So like what you're going to kind of see is this, and then if it like snaps, it bounces. If it doesn't, it breaks through. So like this could just be a signal that we got the liquidation sweep the market makers want. Again, this is why you don't trade liquidation day or FOMC days usually, guys, because of the volatility within. Like, look at this liquidation sweep. This is retail just getting wrecked. It's up, down, up, down, up, down. So you wouldn't be shocked. I would not be shocked if you ended up today seeing this, a sweep of the liquidation level to the highs before it goes lower, right? If we see a liquidation sweep to the upside, that's going to be more. That's going to be kind of confluence that you're going to be choppy to the downside. But now if you get it going into it, like we did just right now, this could have been a liquidation sweep that signals the upside push. But again, I think, guys, just don't trade FOMC day. That's always the rule. It's always choppy. It's
I literally just traded FOMC. What are you talking about?
Well, I mean, I've been in a low leverage trade for days, right? Like, and maybe we trade. If you're a professional trader, you can have fun with it. But I think we both know, Drew, that it's very volatile.
It is. I just had to, I had to call a spade, right? I'm in there, but I did get out of the way right before this chaos. God, the stream keeps growing. Got 12,800 watching live right now. Absolute chaos here. Now let's pull up and check in. We are still waiting on the Federal Reserve. This is their website in the background. This is the price action right here overlaid on Bitcoin. And whew, God. Might be a good time to spot buy some stuff. That actually is coming to my mind. It's like maybe I could get an entry point on Avantis. Where's Avantis? Can you check Avantis right now? Because I'm having FOMO about Avantis. Yeah.
So a lot of people are. So Avantis. The reason why I haven't jumped into it yet is I called Avantis in the Discord at 33 cents. At 33 cents, I said I'm going to wait for a 10% pullback. It went to 42 cents. I said I'm going to wait for a 15% pullback. It went to 80 cents. I said I'm going to wait for a 30% pullback. The problem was it never pulled back, Drew. So Avantis here, the reason why it's ripping was off the base announcement. There's a lot of people speculating that a lot of the base ecosystem plays are going to be getting airdrops for a potential base airdrop now in the future. And that kind of led to the huge spike up here. But either way, it was already a really, really strong platform. Right? Look at this. Global markets, limitless leverage. It's backed by base. $22 billion in traded volume already. Over 2.3 million trades. This is the largest real world asset exchange on Base's ecosystem. So very clean project, very, very simple, very, 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 very backed by a lot of really large institutions. It kind of had everything just playing out. I mean, you saw the total market cap was, I think, 50 or it was like 60 or 70 million when we first saw it. And the volume, 500 million. So this is a very key indicator, guys, of like a project that has a lot of attention, that, when it has a backer, when it has all of the, moving like mechanics that you would see in what could be a good perpetual based contract play. When you see that type of volume, it means there's a ton of interest. So what I am seeing here, volume's down now 50%, right? So the attention, volume is attention, chat. So if volume is slowing down, it usually means you're moving towards a consolidation period. And so now at the dollar range, after peaking at $1.40, I think it could be a good pickup. But to be honest with you, Drew, like it has ran up 300% in the last few days. I'm waiting for just an entry point because, I don't like jumping into something, even though I know it's a good project. This thing could definitely go to 500, 600, $700 million. But like, I'm like, dude, I've just seen it rip without me. So I'm kind of like, okay, I'm going to find another play that hasn't necessarily taken off yet and kind of just wait and be patient until it consolidates for a decent period of time.
Yeah. And it's like navigating and not buying tops, not buying gigantic wicks is how I've ended up with low entry points. Like outside of Bitcoin, my favorite alt is Chainlink, but like I don't buy it very often. So my average entry is like $3.90 or something. You know what I mean? Like I don't buy it very often. You know, and I definitely trade a lot and then use that money. I don't care if I'm top blasting Bitcoin. I trade, I earn the Tether, I send it into Bitcoin. And, you know, a little bit of Morpho previously. So shout out to Moxie out in the blockchain basement. He trades because I trade. Shout out to you, baby. God, what is this asterisk? I'm going to, I mean, I think I know Nicholas, so I'm going to leave him be. Let's go back over to my charts or the charts and the FOMC here. We're waiting. We're waiting patiently here.
I was going to say real quick too, before we continue, guys, there's now over 13,000 people watching across all of our social channels. Make sure you guys just hit that like button, repost. We're now we're 8 minutes away. Wow, time's flying by. We're 8 minutes away from Jerome Powell coming out and speaking for the FOMC. So if you guys are on Twitter, hit that like, hit that repost. If you're on YouTube, hit that like button, turn it sideways, hit the little like icon, leave a comment. If you're on TikTok, double tap the screen, get your fingers going. Warm up those streams, guys. Warm up those streams because this is a big day. Of course, we're very excited because this is the first time the Fed has cut interest rates in a very long time. And what people are kind of expecting right now is there is a possibility to an upside play here where people believe traditional markets are waiting for Jerome Powell and the speech in terms of understanding where their decisions are moving forward, whether it's 100 basis point rate cuts this year or 100 by his retirement in 2025 or 2026. That is what we're going to be looking out for. So lots of volatility expected today. Any trader out there that's telling you there's a guarantee, traction to the upside or downside after an FOMC, just know, I know Drew will back me on this. They probably haven't been through an FOMC meeting before. We've been doing this for 4 years. We watch every single FOMC meeting, and I'll tell you, it is always a gambit, if that makes sense.
It's insane.
It's not gambit. There's another word. You just can't say it on other socials.
Stop losses have, I reiterated it this morning. Stop losses are my friend, especially today. Don't want to blow up my bag thanks to Jerome Powell coming up and dancing on the stage here.
I hope he blows it up for us. I hope he pumps it for us. I really hope he comes out and puts that money printer on and screams bye, bye, bye. I hope he says the word Bitcoin.
So we have 7 minutes until this goes live. Okay. So I actually want to touch on something here. Let's go over to what
do you want to touch?
Inflation.
Lindsay? Or Drew, what do you want to touch? My bad.
Not you. Okay. No homo. The great inflation of 1970 to 80. So that gold chart that I had you look at, Josh, the commodity of gold went parabolic in that time frame because inflation went to just around 15% year over year in the 1970s to 80s. This caused the markets to lock up, right? Thus, the hedge against fiscal irresponsibility in a locked market was gold, and it went parabolic. This is what they call the great inflation. Now, the reason why I've been watching this chart in comparison to our current time frame is because about a year and a half, maybe 2 years ago, I saw warning signs within the car market, within the housing market, that buyers were really out of money. They weren't interested in buying, and the market was starting to lock up just a little bit. Now, the signal of that made me move to the understanding and just general understanding. Like after I saw them lie about the job reports over and over again, I realized they're hiding something very, very bad in the U.S. economy. Many people agree with me or disagree with me, vice versa. But I believe that in the middle of next year, to the end of next year, the markets are going to have to acknowledge that, yes, we are locked. Lowering the interest rates didn't do a damn thing. Inflation returns to 10+%. And then the hammer comes down from the Federal Reserve to fix an out of control inflationary spike to the upside. Now, take this information as you will, but what I'm doing is I'm going to act like Warren Buffett. At the end of 2026, I'm going to use cash, aka Tether. I'm going to buy homes, Bitcoin, Second Amendment goods, things of that nature, because they retain value. And that huge valley that you saw after gold, it in essence is a collapse in a system that is reliant on constant upside. It is not that the S&P 500 or Wall Street collapsed down to zero like we saw in the 1930s Great Depressionary collapse. It is that a system reliant on constant growth that flatlines, that is in essence a collapse. And I remember you mentioned that I'm a doomsday prepper. Over the course of the last few years, I've realized that this is not a collapse down. This is a collapse up. This is a collapse up in terms of cost of housing. This is a collapse up in terms of cost of food. This is a collapse up that will put the average person that doesn't have hard-sided goods, cash flowing businesses into the poorhouse. You know what BlackRock's subsidiary Blackstone's actually doing right now, along with Printier Partners, one of the largest home buyers in the United States? They're leaning into Section 8 housing. They're leaning into Domino's Pizza. They're leaning into your life being so difficult that all you can afford is government-assisted housing and fast food delivered to your door from Domino's Pizza. That's where Warren Buffett thinks this market is. Let's check out this super chat. Billions of dollars have been getting laundered. They're absolutely hiding something ugly in the U.S. economy. I absolutely agree with that. Honestly, they lost $1.4 trillion of our tax.
Yeah, I'd say it's
money.
trillions of dollars that have been laundered.
Yeah.
I think
mean,
there's trillions that have been unaccounted for, which is like
Mhm.
even scarier. It's why like I think we have like one chance in the next 8 years before this becomes a technocracy, where like if we actually go after congressional spending and actually put a deficit limit and force Congress to budget. But it's a hard play because one, no one wants to get up and do it, right? People are just kind of laying down, committing Sudoku or whatever it's called in terms of the Japanese do. They're just like, you know what? It's bad. We're not going to fix it. I'm done. I surrender. But like, you know, there is a lot of positivity to the upside and that collapse to the upside. Whether some people believe it's, you know, going to be the great AI replacement or the great inflationary cycle, you know, I agree with you. I think there's, you know, I think you're also very pro-American as myself as well, where we're just like, we believe that the US dollar isn't like, I don't think the US dollar is going to be replaced by any other world currency. I think they're using crypto to extend fractional banking and the US superpower and control even further. And so there's so much that's happening here, but I want to ask chat here because we're about to be live in 2 minutes, guys, with the FOMC meeting, guys. Hit that like button, okay? Again, I'm going to ask everybody here, are you bullish or bearish on the FOMC meeting? Are you bullish or bearish on the, it's seppuku, thank you. Yeah, it's not Sudoku or whatever it's called. I think I said the game, right? Like the, I don't know if that's a board game, but
Oh,
seppuku.
Lord. Oh, my
I don't
God.
know. I just knew it was an S and ended in an U, and I was like,
Oh, my God.
But yeah, guys, are you bullish or bearish on the FOMC meeting? Because I know me and Drew, we're definitely optimistic on the cycle. I don't think either of us believe we're even near the top. We're definitely well into a bull run. But this is going to open up. I think you brought up a lot of great points, Drew. I think you brought up the, you know, this is definitely, I like that you're comparing this in the 1970s, because the other thing people don't realize is obviously there's the gold explaining the inflationary cycle, but it was the only other time, I believe, in the last 60 years where in a stagflationary economy, GDP grew. So that's like a moment where you have to realize, okay, and specifically in the 1970s is because of energy production, industrialization, et cetera. But you had this huge economic expansion, but it felt like you're losing more money than ever. And that's because of the devaluation of the dollar. So businesses, the 1%, they get richer, the 99%, they get poorer. Holding your dollars, you lose money.
People are saying Jerome is on stage. I'm looking for him. Not seeing him yet.
Jerome's on stage or getting scammed.
Not seeing him yet. This is the Federal Reserve press conference for today. I'm waiting for this to come out. Where is he? Oh, here we go. Here we go.
He's still not speaking, though.
All right, here we go.
Yo, appreciate you, John. He's live?
Here we go. Oh, God. Purple tie.
Hit hide for me on the StreamYard.
Okay.
You have a little bar that popped up. It says, yeah. I don't hear the audio. There's no audio.
Chat, do you hear audio?
There's no audio. For sure, there's no audio.
No sound. All right, let's see here. I'm going to pause it. I'm going to fix it. Stop screen, share screen, entire screen. Bam, bam, bam.
Did he say good afternoon? We'll never know.
He did. All right, let's set it. All right.
Risen recently and remains somewhat elevated. In support of our goals and in light of the shift in the balance of risks, today the Federal Open Market Committee decided to lower our policy interest rate by 1/4 percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a pace of around 1.5% in the first half of the year, down from 2.5% last year. The moderation in growth largely reflects a slowdown in consumer
Hit high for
spending.
me again.
In contrast, business investment in equipment and intangibles has
Thank you,
picked up from last year's pace. Activity in the housing sector remains weak. In our summary of economic projections, the median participant projects GDP to rise 1.6% this year and 1.8% next year, a touch stronger than projected in June. In the labor market, the unemployment rate edged up to 4.3% in August, but remains little changed over the past year at a relatively low level. Payroll job gains have slowed significantly to a pace of just 29,000 per month over the past 3 months. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and lower labor force participation. Even so, labor demand has softened, and the recent pace of job creation appears to be running below the break-even rate needed to hold the unemployment rate constant. In addition, wage growth has continued to moderate while still outpacing inflation. Overall, the market slowing in both the supply of and demand for workers is unusual. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen. In our SEP, the median projection for the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.7% over the 12 months ending in August, and that, excluding the volatile food and energy categories, core PCE prices rose 2.9%. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 3.0% this year and falls to 2.6% in 2026 and to 2.1% in 2027. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by 1/4 percentage point to 4 to 4.25%, and to continue reducing the size of our balance sheet. Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to push up prices in some categories of goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, Our framework calls for us to balance both sides of our dual mandate. With downside risks to employment having increased, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.6% at the end of this year, 3.4% at the end of 2026, and 3.1% at the end of 2027. This path is 1/4 percentage point lower than projected in June. As is always the case, these individual forecasts are subject to uncertainty, and they're not a committee plan or decision. Policy is not on a preset course. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission, and we at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
Right.
There we go.
Thank you. Chris Rugaber at Associated Press. As you know, Fed Governor Stephen Myron has kept his position at the White House, even as he's joined the Fed board. This is the first time, I believe, the Fed's board has had someone with executive branch ties in decades. Does this compromise the Fed's independence from day-to-day politics? And relatedly, how can you maintain the public's perception the Fed is politically independent with this dynamic? Thank you.
So we did welcome a new committee member today, as we always do, and the committee remains united in pursuing our dual mandate goals. We're strongly committed to maintaining our independence, and beyond that, I really don't have anything to share.
Okay, and then just as a quick follow, I'm sorry. Can you and other Fed officials have spoken extensively about the impact of tariffs on inflation, although perhaps with many companies appearing to eat the tariffs, tariffs may be impacting the labor market and other parts of the economy instead. Do you see that as a possible outcome here, that tariffs are the reason we're seeing some slowing, particularly in the labor market, rather than in inflation? Thank you.
You know, it's certainly possible. You know, we're beginning to see, we have begun to see goods prices showing through into higher inflation. And actually, the increase in goods prices accounts for most of the increase in inflation, or perhaps all of the increase in inflation over the course of this year. Those are not very large effects at this point, and we do expect them to continue to build over the course of the rest of the year and into next year. And you know, it's also possible that there may be effects on employment, but that I would say if you're looking at why employment is doing what it's doing, that's much more about the change in immigration. So the supply of workers has obviously come way down. There's very little growth, if any, in the supply of workers. And at the same time, demand for workers has also come down quite sharply. And to the point where we see what I've called a curious balance. It's, you know, typically when we say things are in balance, that sounds good. But in this case, the balance is because both supply and demand have come down quite sharply. Now demand coming down a little more sharply because we now see the unemployment rate edging up.
Chat, we dumping or pumping, chat?
We done
bullish or bearish?
Conditions and the balance of risks no longer warrant a restrictive policy setting.
So I don't think we can say that. But what we can say is this: that over the course of this year, we've kept our policy at a restrictive level, and people have different views, but a clearly restrictive level, I would say. So, and we were able to do that over the course of this year because the labor market was in very solid condition with strong job creation and all those things.
It was not.
I think if you go back to April and now look at the revised job creation numbers for May, June, July, and August, you can I can no longer say that. So what that means is that the risks were clearly tilted toward inflation. I would say they're moving toward equality. Maybe they're not quite out of equality. We don't need to know that, but we do know that they've moved meaningfully toward greater equality, the risks between the two goals, and that suggests that we should be moving in the direction of neutral, and that's what we did today.
Under what circumstances would a larger than 25 basis points rate cut be warranted? And how seriously was that option entertained at your meeting this week?
There wasn't widespread support at all for a 50 basis point cut today. I think we've done very large rate hikes and very large rate cuts in the last 5 years, and you tend to do those at a time when you feel that policy is out of place and needs to move quickly to a new place. That's not at all what I feel certainly now. I feel like our policy has been doing the right thing so far this year. I think we were right to wait and see how tariffs and inflation and the labor market evolved. I think we're now reacting to the much lower level of job creation and other evidence of softening in the labor market, and saying, well, those risks are maybe not fully balanced, but moving in the direction of balance now. And so that warrants a change in policy.
Colby Smith with the New York Times. Should we be viewing today's cut as the committee taking out some insurance against the possibility that the labor market is at risk of weakening? Or is it the committee's view that the dynamics of a downturn are already in place? I guess I'm just trying to square the shift in the rate forecast in the SEP towards more cuts than just 3 months ago, with the fact that the forecast for unemployment didn't change.
Yeah, I think you could think of this in a way as a risk management cut, because if you look at the SEP, actually, the projections for growth this year and next actually ticked up just a little bit, and inflation and unemployment didn't really move much. So what's different now? What's different now is that you see a very different picture of the risks to the labor market. You've seen, we were looking at 150,000 jobs a month at the time of the last meeting, and now we see the revisions and we see the new numbers. And I don't want to put too much emphasis on payroll job creation, but it's just one of the things that suggests that the labor market is really cooling off, and that tells you that it's time to take that into account in our policy.
So just looking at the SEP once again, the median participant has inflation higher than previously expected by the end of next year, and the Fed not getting back to the 2% target until 2028. So I guess I'm just wondering how you characterize the risk to price pressures of kicking off a series of cuts at this point.
Yeah, so I would look at it this way. We fully understand and appreciate that we need to remain fully committed to restoring 2% inflation on a sustained basis, and we will do that. At the same time, we've got to weigh the risks to the two goals. And I would say since April, to me, the risks of higher and more persistent inflation have probably become a little less. And that's partly because the labor market has softened, GDP growth has slowed. So I would just say that the risks there have been less than one might think. And in terms of the labor market, what we're seeing is unemployment is still low, it's still a relatively low rate, but we're seeing downside risks.
Michael McKee from Bloomberg Radio and Television.
Down like the Titanic, chat.
A little confused by your explanation of the Fed cutting rates because of unemployment. If you think that most of what's happening in the employment area is related to immigration, which your rate cuts wouldn't address, how do you see that as more important than inflation, which has remained almost a full percentage point above your target?
Well, I was saying that what's happening in the labor market has more to do with immigration than it has to do with tariffs. That was the question I was answering. So I wouldn't say that all of what's happening in the labor market is due to tariffs. I mean, you clearly have a slowing in it due to immigration. You clearly have a slowing in demand, which is now perhaps more than that in supply, and we know that because the unemployment rate has ticked up. So that's what I meant by that.
Like a follow up. Every year since 2015, the SEP has forecast that you would hit your target 2 years later. And this year, this SEP says you're going to hit your target 2 years later. 2% does not seem to be in sight. Does that suggest that the 2% target is not really achievable? And does this present any credibility problems for you in telling people that that's what you're going to do if you can never reach it?
Well, I mean, you're right. It does say we're going to get to 2% inflation in 2028 at the end of 28. But that's, that's literally how you put projections together. You're writing down a rate path, which is designed to create over the course of the SEP, time frame, 2% inflation and maximum employment too. So that's all that is. No one really knows where the economy will be in 3 years, but the nature of the exercise is to.
Man, Jerome Powell sucks, dude.
You believe would return to the 2% goal over at least by the end of the exercise.
He's not a fun guy, man.
I have a hard job.
Thanks so much, Elizabeth Schulze with ABC News. The latest inflation report shows that prices are still going
W
up
or L chat
in categories for many households, including groceries. What will the Fed do if prices pick up more?
So our expectation, and you can see this consistently through the year, has been that inflation will move up this year, but that basically because of the effects on goods prices from tariffs, but that those will turn out to be a one-time price increase as opposed to creating an inflationary process. That's been our forecast. Pretty much all the individual forecasts say that. We can't just assume that though, right? We have to. Our job is literally to make sure that is what happens, and we will do that job. Right now, the situation we're in is that we see inflation. We continue to expect it to move up, maybe not as high as we would have expected it to move up a few months ago. The pass through of the tariffs into inflation has been slower and smaller. The labor market has softened, so the case for there being a persistent inflation outbreak is less. And so that's why we think it's time for us really to acknowledge that the risks to the other mandate have grown and that we should move in the direction of neutral. So what will we do? We'll do what we need to do, but we have two mandates and we try to balance them. For a long time, our framework says that when our two goals are in tension, this is quite an unusual situation. How do we decide what to do? Because our tools can't do two things at once. What we do is we ask which is farther from, how far is each from the goal and how long is it expected to get to the goal. So, and then we think about those things and we see, as I mentioned, we're pumping really skewed toward inflation for a long time, really. Now we see that there's
that's crazy.
Risk clearly in the labor market. And so we're moving in the direction of more neutral policy.
How concerned are you about the slowdown in the jobs market for households at home, especially younger Americans struggling to land a job?
So it's an interesting labor market, and obviously we think it's appropriate that we reduce our rates so that we become more neutral, which presumably will be better for the labor market. You see people who are sort of more at the margins, so kids coming out of college and younger people, minorities are having a hard time finding jobs. The overall job finding rate is very, very low. However, the layoff rate is also very low. So you've got a low firing, low hiring environment. And the concern is that if you start to see layoffs, the people who are laid off there won't be a lot of hiring going on. So that could very quickly flow into higher unemployment. In a healthier economy, healthier labor market, there would be jobs for those people. But now the hiring rate is very, very low. So that's been a growing concern over the last few months. And it's one of the reasons why we think it's appropriate that we begin to shift our policy focus toward a more balanced one.
Steve Leisman, CNBC. Mr. Chair, in the past, during rate cuts, you used the word recalibration. And I wonder if you pointedly did not use it this time. And in fact, when you said policy is not on a preset course, did you mean that as sort of the opposite of recalibration? Are we meeting to meeting, data point by data point? Are we in the process here of getting back to neutral? Thank you.
So I think we're in a meeting by meeting situation. We're going to be looking at the data. Let me say a word about the SEP really here. So we often point this out. What the SEP is it's an accumulation of the individual projections of 19 people, showing what they believe at a particular moment in time to be the most likely path for the economy and thus the appropriate path for monetary policy as well. And as you know, we don't debate or try to agree on what that is. We just write them down and accumulate them. We do sometimes discuss them. And so we always say we're not on a preset path, and we really mean that. The actual decisions we make are going to be based on the incoming data, the evolving outlook, and the balance of risks at the time the decisions are actually made. So you will have seen that we have 10 participants out of 19 who wrote down 2 or more cuts for the remainder of the year, and 9 who wrote down fewer than, in fact, in a good number of cases, no more cuts. So rather than looking at this as certainty, I would encourage people, as always, to look at the SEP as through the lens of probability. And so there are different possible outcomes and likelihoods rather than.
So it's probable they're going to get
this
more.
one isn't happening. So that's what I would say.
Thank you for getting to my follow-up question. Is the dispersion,
Hey, you, Drew?
the outlook,
Yeah.
a sign of uncertainty of policy in the meetings to come? Thank you.
You know, it is such an unusual situation. Ordinarily, when the labor market is weak, inflation is low, and when the labor market is really strong, that's when you got to be careful about inflation. So we have a situation where we have two-sided risk, and that means there's no risk-free path. And so it's quite a difficult situation for policymakers. And it's not at all surprising to me that you have a range of views. It's not so much about having different views for the path of the economy, but it's partly that. But it's also partly about what's the right thing to do in light of the tension between the two goals. How do you weight them? How worried are you about one versus the other? And so it's natural. I think it would actually be surprising if you didn't have a pretty wide range of views based, in this kind of highly unusual situation, and we do. So, but we get together, we discuss, we have a great discussion, and then we decide what to do and we act. But you're right there that it's a wide dispersion of views, and I think that's understandable and natural in the current situation.
These answers are so long-winded.
There's nothing.
Yeah, how many times can you say unusual situation?
You've talked a lot about Fed independence and the importance of it over the years, but as markets have questions about what exactly President Trump's intentions are with the Fed, what would you point to as the things they should be watching to determine that the Fed is still making decisions based on, the economic outlook rather than political considerations?
Look, it's deeply in our culture to do our work based on the incoming data and never consider anything else. That's just everybody who's at the Fed really feels strongly about that way. So, you'll know it by the way we talk about what we're doing, by the speeches that people give, by the decisions that we make. You'll know that we're just still going to do that. That's all we do. And we don't frame these questions at all or see them in terms of political outcomes. I think when you get to another part of Washington, everything is seen through the lens of, does it help or hurt this political party, this politician? That's the framework. And I think people find it hard to believe that is not at all the way we think about things at the Fed. We're taking a longer perspective. We're trying to, serve the American people as best we can. So I think you would be able to tell. I don't believe we'll ever get to that place. I would say we're doing our work exactly as we always have now. And people they're making their arguments, and we're having a great discussion around these challenging issues. So,
Excuse me. Do you see the court case around Lisa Cook as being related to questions of Fed independence?
I see it as a court case that it would be inappropriate for me to comment on.
Thanks, Mr. Chairman. Edward Lawrence from Fox Business. So we saw the preliminary benchmark revisions down 911,000. The revisions for June were the first negative revisions we've seen since December of 2020. How can the Fed base important decisions on rate and what to do with the interest rates on data that seems to be, as you've called it in the past, noisy?
So on the QCEW, the revision that we saw was almost exactly what we expected. It was amazing how close the expectation was. So, and the reason for that is, for the last bunch of quarters, there's been almost a predictable overcount. And I think the Bureau of Labor Statistics really does understand this, and they're working hard to fix it. It's got to do, of course, it has something to do with low response rates, but it's also got to do with what's called the birth-death model, because a good amount of job creation happens around new companies and how many go out of business, how many are founded. And it's just really hard. You can't survey for that. You've got to have a model that predicts that. And it's quite difficult to do, especially when the economy is undergoing big changes. So, and they've been working on that and are making progress on it. But the data we get is still well good enough for us to do our work. To the extent we have issues around data right now, it's about low response rates. That's happened all over really. Response rates are just lower to surveys now, both in and out of the government. And it's no great secret. We want higher response rates, and we need those to have, less volatile data. And the way to get that is to make sure that the agencies that collect the data have sufficient resources to drive higher response rates. It's not a complicated problem, but that's what it takes. It's not a mystery. That's what it takes. The other thing I'll say, Edward, is in the case of the job creation, the response rate is quite low for the first month, or lower for the first month. By the time you get to the second or third month, you're still collecting responses for that last month, for that prior month. And you get to the place where the data are much more reliable by the second and certainly the third month. So it's not that we don't get the data, it's just that we get it a little later.
But for the benchmarks, if that holds, it's 51% of the jobs that we thought were there weren't really there. Shows a weaker job market coming into this year. If you had had that information, would it have changed your mind related to where the interest rates should
Finally,
be?
thank you.
We have to live life looking through the windshield rather than the rearview mirror, as you know. And all I can tell you is we see where we are now, and we take appropriate action, and we took that appropriate action today.
Okay, so he's got short answers when he's wrong.
Thanks. Howard Schneider with Reuters. So as you mentioned a minute ago, some margins of the job market would suggest that the slide's already happening. A black unemployment rate in August was above 7%, declining work week, difficulty among college graduates finding work, rising youth unemployment. Why do you think a quarter percentage point now is going to arrest that?
Well, I didn't say that I thought a quarter point would make a huge difference to the economy, but you've got to look at the whole path of rates.
Shut the door for me.
Right? And the market's has already been baking in expectations. I mean, our market works through expectations, right? So I think our policy path really does matter. And I think it's important that we use our tools to support the labor market when we do see signs like that. I did mention that, you see minorities, unemployment going up, you see younger people who are more vulnerable economically, more susceptible to economic cycles. That's one of the reasons, in addition to just overall lower payroll job creation, that shows you that at the margin, the labor market is weakening. I would also point to labor force participation. Some part of the significant decline in labor force participation over the last year has probably been cyclical in nature rather than just the usual aging process. So we put all this together, and we see that the labor market is softening, and we don't need it to soften anymore, don't want it to. So we use our tools, and it starts with a 25 basis point rate cut, but the market's also pricing in a rate path. I'm not blessing what the market's doing at all. I'm just saying it's not just one action.
Interesting comment.
As a follow-up,
guys, like the stream.
Growth mix right now
Keeps us awake.
Traded in an investment, and on the consumer spending side in the higher income groups. Do you feel that that's an unsustainable mix for the economy moving forward?
I wouldn't say that. I mean, you're right. Those are two. We're getting unusually large amounts of economic activity through the AI build out and corporate investment. I don't know how long that will go on. No one does. In terms of spending, you saw that the consumer spending numbers were well above expectations, and that may well be skewed toward higher earning consumers. There's a lot of anecdotal evidence to suggest that. Nonetheless, it's spending. So, I mean, I think the economy is moving along. Economic growth is going to be 1.5% or better this year, maybe a little better. Forecasts have been coming up, as you can see. So, labor market unemployment is low, but downside risks, but it's still a low unemployment rate. So that's how we see it.
Oh my God, it's such a lie.
Hi, Stephanie Rule, MSNBC. Treasury Secretary Scott Bessent has said that the Federal Reserve suffers from mission creep and institutional bloat. He's now calling for an independent review. Would you support an independent review, or are you open to any sort of reform in any areas of the Fed?
I, of course, am not going to comment on anything the Secretary says or really any other officer says. So in terms of reform at the Fed, we just went through a lengthy and I think very successful process of updating our monetary policy framework. I would say there's a lot of work going on behind the scenes around the assets we have in the Federal Reserve system and at the board. Are they the right size? We're actually going through a 10% headcount reduction through the whole Fed, including the board and all the reserve banks. The employment at the Fed at the end of that will be basically at the same level it was more than 10 years ago. So we will have had zero job growth for more than a decade when we're finished with that, and I think we'll probably do more than that. So I think we're certainly open to constructive criticism and ways to do our jobs better.
Not an independent review?
We're certainly open to to always trying to do better.
He feels the
weird gotcha question. I don't know what type of gotcha question that
lately
was.
on whether AI is already starting to affect the labor market in terms of lower labor demand, higher productivity by contrast. Do you buy that? And if that is true, does that have implications for the monetary policy setting?
So there's great uncertainty around that. I think my view, which is also a bit of a guess, but widely shared, I think, is that you are seeing some effects, but it's not the main thing driving it. And so particular focus on young people coming out of college. And yeah, there may be something there. It may be that companies or other institutions that have been hiring younger people right out of college are able to use AI more than they had in the past. That may be part of the story. It's also part of the story, though, that job creation more broadly has slowed down. The economy has slowed down. And so it's probably a number of things, but yeah, it's probably a factor. Hard to say how big it is.
Thanks, Mr. Chairman. What evidence do you see of tariffs showing up in inflation?
Oh my God! Ask this question one more time. I'm going to fucking drive to Washington D.C.
Broad goods category, and last year, goods inflation was negative. If you go back 25 years, that was the typical thing, was that goods inflation was goods prices generally went down, even adjusting for quality. So that was not the case during the pandemic, of course. Goods inflation went very high, but we had essentially returned to zero or slightly negative inflation. Now, I think goods inflation over the course of the past year is 1.2%, which doesn't sound like a lot, but it's a big change. So we think, analysts have different views, but we think it's contributing 0.3 or 0.4, something like that, to the current core PCE inflation reading, which is 2.9%. So it's contributing. What seems to be happening is that the tariffs are mostly not being paid by exporters, mostly being paid by really the companies that sit between the exporter and the consumer. So if you buy something and you sell it,
you mean the importer?
Make a product,
Jesus.
You're probably taking a lot of those costs on and not able to pass it fully along to the consumer yet. That appears to be what we're seeing. All of those companies and entities in the middle, they'll tell you that they have every intention of passing that through in time, but they're not doing that now. To the consumer, the pass-through has been pretty small. It's been slower and smaller than we thought. But the evidence is it's very clear that there's some pass-through.
We're only down by like 0.5%.
I also wanted to ask if you could share with us the conditions under which you might consider leaving the Fed in May.
I have nothing new on that for you today.
Who hires these people, TJ? Jesus Christ. This guy asked ChatGPT for questions for
Hi,
the Fed.
Karina Saraiva with Bloomberg News. I just
They get
wanted
assigned
to
their
follow
questions.
up on one of your answers just a couple minutes ago. We've often heard you talk about how you and your colleagues, do not think about politics. This does not enter the room. But one of your new colleagues does come from this world, right, where everything is seen through this framework of politics and of what party is being helped, and that person is still employed by the White House. How can markets and the public interpret, some of his speeches, for example, and then some of the forecasts that we see today? I mean, the median for this year was moved because of the introduction of his forecast. I'm talking about the number of rate cuts seen this year. What do you say to markets and the
We
public that
focus
are
on a
trying to
dual mandate.
interpret
Guarantees has it.
what you guys are saying?
So there's 12 vote, 19 participants of whom 12 vote, as you know, on a rotating basis. So no one voter, can really, the only way for any voter to really move things around is to be incredibly persuasive. And the only way to do that in the context in which we work is to make really strong arguments based on the data and one's understanding of the economy. That's really all that matters. And that's how it's going to work. And I think that is the way the institution, that's in the DNA of the institution. That's not going to change.
And then I wanted to ask about a Gallup poll that showed that Americans now have more confidence in the president than the Federal Reserve when it comes to doing what's right for the economy. Why do you think that is? And what's your response? What's your message to the public?
Our response is we're going to do everything we can to use our tools to achieve the goals that Congress has given us.
Crush out.
And we're not going to get distracted by anything. So I think that's what we're going to do. We're just going to keep doing our jobs.
Holtby's probably freaking out too, huh, TJ? That housing
Trump
director.
is. Yeah, they all are.
These are the dumbest questions on earth. They get stupider each meeting.
The range of views expressed prior to the meeting, I think there was a lot less dissent today than a lot of people expected. It'd be good to know just what you think the drivers were of coming to that very strong consensus in the meeting, and also on the flip side to just explain why the dot plots are really so scattered between, someone even expecting rates to end up higher by the end of the year to 5 cuts. I mean, what were the kind of range of views you heard about, on one side, why there was so much support for a cut today, and on the flip side, why there's so much divergence about what comes next?
Who let the bread in? I think there's quite a wide assessment that the situation has changed with respect to the labor market. Whereas we could still say, and did say in July, at the time of the July meeting, that the labor market was in solid condition, and we could point to 150,000 jobs per month and many other things. I think that the new data that we've had, and it's not just payrolls, it's other things as well, suggests that there really is meaningful downside risk. I said there was downside risk then, but I think that downside risk is now a reality, and there's clearly more downside risk. So I think that's broadly accepted. And so that meant different things for different people. Some wrote down, almost everyone wrote down, supported this cut, and some supported more cuts and some didn't, as you will see from the dot plot. So that's just the way it is. I mean, people have, you have people who take this work very seriously, think about it all the time, do their work, discuss it with our colleagues. We endlessly discuss this between ourselves, and then we have a meeting where we put it all out on the table, and this is what you get. And you're right, there's a range of views in the dots, and I think that's, like I said, very unsurprising given the quite unusual, historically unusual nature of the challenges that we face. But let's remember, though, the unemployment rate's 4.3%. The economy's growing at 1.5%. So it's not a bad economy or anything like that. We've seen much more challenging economic times.
There you go.
Policy standpoint, the standpoint of what we're trying to accomplish, it's challenging to know what to do. There are, as I mentioned earlier, there are no risk-free paths now. It's not incredibly obvious what to do. So we have to keep our eye on inflation. At the same time, we cannot ignore and must keep our eye on maximum employment, which is those are our two equal goals. And you will see that there are a range of views on what to do. Nonetheless, we came together today at the meeting and acted with a high degree of unity.
That's not a good thing to say. What he just said is not good.
Thank you, Archie. Hall,
Almost was.
economist. You
Almost.
mentioned earlier that job creation was running below your guess at its break-even rate. I'd be curious to hear a bit more about that and where you think the break-even rate is.
Why is there more Brits?
So there are many different ways to calculate it, and none of them is perfect. But it's clearly come way down. You could say it's somewhere between 0 and 50,000. And you'd be right or wrong. I mean, there's just many different ways to do it. So wherever it was, 150,000, 200,000 a few months ago, it's come down quite significantly. And that's because a very lower amount of people are joining the labor force. The labor force really not growing much at this point. And that's a lot of where the supply of labor was coming from over the last 2 or 3 years. So we're not getting that now. We've got much lower demand. It's interesting that supply and demand have really come down together so far, except now we do have unemployment ticking up just one tick outside of the range where it's been for a year. 4.3% is still a low level, but I think this speedy decline in both supply and demand has certainly gotten everyone's attention.
Follow up, if I may. You mentioned the downside risk to employment a fair amount, but it's striking that measures of kind of activity and output for the third quarter, those that we have, seem pretty strong. The Atlanta Fed's GDP now is very strong. You mentioned strong PCE numbers as well. How do you square those things? Is there a chance actually could be upside risk to the labor market if those activity measures are right?
Well, that would be great. We'd love that to happen. So I don't know that you see a big tension there, but it's gratifying to see that economic activity is holding in. And it's
I like this, Brit.
It's a good bit from consumption. It looks like consumption was stronger than expected. What we got earlier this week, I guess. And also we're getting a fairly narrow sector is producing a lot of economic activity, which is the AI build out and business investment. So. We watch all of it, and I would say we did move up. The median for growth for this year actually moved up in the SEP between the June and September SEPs. So, and really the inflation and labor market didn't change much. It's really the risks that we're seeing to the labor market that were the focus of today's decision.
That's funny.
There's some serious chop
Hi,
here.
Nicole Goodkind with Barron's. Thank you for taking my question. Given the cumulative impact of high interest rates on the housing sector, I'm wondering how concerned you are that current rate levels are exacerbating housing affordability issues and potentially hindering household formation and wealth accumulation for a segment of the population?
Housing is an interest-sensitive activity, so it's at the very center of monetary policy. When the pandemic hit and we cut rates to zero, the housing companies were incredibly grateful, and it was really, they said that was the only thing that kept them going, was that we cut so aggressively and provided credit and things like that, and they were able to finance because we did that. The other side of that is when inflation gets high and we raise rates, and you're right, it does burden the housing industry, and so rates have come down a bit, and as that happens, we don't set mortgage rates, but our policy rate changes do tend to affect mortgage rates, and that has been happening, and that'll of course raise demand. Lower borrowing rates for builders will help builders will help supply, and so some of that should happen. I think most analysts think that it would have to be pretty big changes for it to matter a lot, for the big changes in rates to matter a lot for the housing sector. And the other thing is by achieving maximum employment and price stability, that's a strong economy. That's a good economy for housing. And then the last thing I'll say is, there's a deeper problem here. There's not a cyclical problem that the Fed can address, and that just is a pretty much nationwide housing shortage. Or a lot of places in the country just don't have enough enough housing for people, and all of the areas around metropolitan areas like Washington, for example, are very built up, and so you're having to build farther and farther out, and so that's where it is.
Bullish on the burbs.
And just a quick follow-up. During the last SEP, or the press conference following the last SEP, you seemed to indicate that policymakers lacked conviction about their projections, and I'm wondering if you still feel that way.
Forecasting is very difficult even in placid times, and as I've mentioned before, forecasters are a humble lot with much to be humble about. So I think right now is a particularly challenging time, even more uncertain than usual. And so I don't know any forecaster anywhere, really. Ask any of the forecasters whether they have great confidence in their forecast right now. I think they'll honestly say no.
Well, we got a penguin.
So we have us professionals have no idea what the fuck we're doing. That's what he's saying.
Sean Berger with Yahoo Finance. If you're cutting rates, why continue to reduce the size of your balance sheet, then pause the unwinding?
That's a good question. That's a good question.
We're cutting the size of our balance sheet quite marginally now. As you know, with the balance sheet, we're still in an abundant reserves condition. We've said that we would stop somewhat above somewhat above an ample reserves level. That's where we are, and we're getting closer to that. We're monitoring it very carefully. We don't think that has at all significant macroeconomic effects.
That's a bold-faced lie.
Moving around inside a giant economy. The level of runoff is not very large. So I wouldn't attribute macroeconomic consequences to that at this point.
Okay. And at his recent hearing, Stephen Myron brought up that the Fed actually has 3 mandates from Congress, not just jobs and stable prices, but also moderate long-term interest rates. So what does Congress mean by moderate long-term interest rates? How should we understand that when we see the 10-year Treasury moving? And how do you think about this part of the mandate when policy choices like rate cuts or balance sheet reductions affect the long end of the yield curve?
So we always think of it as the dual mandate, maximum employment and price stability, for a long time, because we think moderate long-term interest rates are something that will result from stable inflation, low and stable inflation, and maximum employment. So we haven't thought about that for a very long time as a third mandate that requires independent action. So that's where that is. And there's no thought of, as far as I'm concerned, there's no thought of considering that we somehow incorporate that in as something in a different way.
We just don't think about it.
Yeah.
Good answer.
You don't
Mr.
know.
Powell, Matt Egan from CNN. We recently learned that average FICO credit scores are down this year by 2 points, the most since 2009 during the Great Recession, and delinquencies are high for car loans, personal loans, credit cards. How concerned, if at all, are you about the health of consumer finances, and do you expect today's cut will help?
So, we're aware of that. I think this default rates have been kind of ticking up, and we do watch that. They're not at a level, I don't believe they're at a level where overall they're terribly concerning, but it is something that we watch. Lower rates should support economic activity. I don't know that one rate cut will have a visible effect on that, but over time, a strong economy with a strong labor market is what we're aiming for, and stable prices. So that should help.
Just to follow up, this rate cut is coming at a time when the stock market is at or near all-time highs, and some valuation metrics are elevated historically. Is there a risk that cutting rates could overheat financial markets, potentially creating a bubble?
We're tightly focused on our goals, right? And our goals are maximum employment and price stability. And so we take the actions that we take with an eye on those goals. Separately, and that's why we did what we did today. Separately, we monitor financial stability very, very carefully. And I would say it's a mixed picture, but households are in good shape, banks are in good shape. Overall, households are still in good shape in the aggregate. And I know that people at the lower end of the income spectrum are under pressure, obviously. But from a financial stability perspective, we monitor that picture. we don't have a view that there's a right or wrong level of asset prices for any particular financial asset, but we monitor the whole picture, really looking for structural vulnerabilities. And I would say those are not elevated right now.
Jean, we'll go to you for the last question.
Hi, Chair Powell. Jean Young with MNI Market News. I wanted to ask about inflation expectations. You've said the Fed can't take the stability of inflation expectations for granted. You mentioned at the short run, they've gone up a little bit. I wonder if you can talk a bit about that. And then also at the long run, wondering, do you see evidence that the debate over Fed independence and the growing deficit is putting pressure on inflation expectations?
They're going to remain independent.
As you said, shorter term inflation expectations have tended to respond to near term inflation. So if inflation goes up, inflation expectations will predict that it takes just a little while to get back down. Fortunately, throughout this period, longer term inflation expectations, both break even in the markets, and almost all of the longer term surveys, Michigan being a bit of an outlier lately, have been just rock solid in terms of running at levels that are consistent with 2% inflation over time. So we don't take that for granted. We actually assume that our actions have a real effect on that, and that we need to continually show and also discuss our commitment to 2% inflation. And so you'll hear us doing that. But we're, as I mentioned, it's a difficult situation because we have risks that are both affecting the labor market and inflation. Those are our two goals, and so we have to balance those two. When they're both at risk, we have to balance them, and that's really what we're trying to do. Your latter part of your question was about independence. I don't see market participants. I don't see that that's something they're factoring in right now in terms of setting interest rates. Thanks very much.
All right, he's done.
Finally, dude. What a pointless question to end it. Do you think the Fed will remain independent? What type of question? I don't know, man. These are just like, there's actually a few. I think the Brit had some of the best questions. Jennifer had some good questions. Obviously I want both you guys' takes. It's bullish, but uncertain. It's uncertain to the fact that the Federal Reserve is adjusting their decisions based off data points that the government previously gave them that weren't true in terms of a strong labor market condition. So now they've led them through the tariff conversations with the current administration, is now running into a stagflationary market. So I think it's as expected, 25 basis point rate cut. The probability and consensus is a 50 basis point rate cut by the end of the year. Depending on data points coming out in September and in November, that will lead us to the FOMC decision. Actually, I think the last one of the year is in November. I don't think there's one in December. Which would
there's two. There's two more.
Yeah, there's two more. October,
okay, so there's two more. So then I think it's likely we see 75 basis points cut this year.
Yeah, I mean, he basically said when they showed that dot plot, they basically said 50 basis points is like the consensus. Like if you go back and look at that, that graphic, that's basically what he said is going to happen. But the key phrase that he said to me is, if I can remove and add, is this right here. We will continue to reduce the size of our balance sheet. That is by definition quantitative tightening. So as long as the Fed is reducing the size of their balance sheet, that is going to keep the restrictions on the market. It doesn't really matter what the rate cut is or what the interest rate is. Like if it's 3.75, 4, 3.5, even 3.25 or 3, as long as they're reducing their balance sheet, you're going to feel that. And so the real pump comes in. And I think what needs to happen, I said this a little bit earlier today, Trump needs the interest rate to come down so that they can refinance. Once they refinance, then the Treasury can go back to easing, buying stuff, increasing its balance sheet. They would hope that the Fed would increase their balance sheet. And that to me was the most hawkish thing he said, is we're still reducing the size of our balance sheet. Now, towards the end, when they pressed him on that, like when somebody said, well, why? If you're saying this needs to happen, why are you reducing the size of your balance sheet? He kind of backtracked and said, oh, it's marginal. It's a small amount in the grand scheme of a giant economy, blah, 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 blah. But that is the true pivot that we need to see. It's like, this was the first step. the interest rates are coming down. That's showing signs. They're heading towards the pivot. They will continue to come down, even continue to come down through 2026. But the key, when all of our bags pump, when it's all full risk on, is when we're in quantitative easing. And that's what needs to happen. And that's what Trump wants to see happen sooner rather than later, which is why he's pushing for fast interest rate cuts so that they can get this refi done. I mean, he came out with this statement here. Jerome Powell just cut interest rates by a tiny 25 basis points. Wow, what a genius move. Said no one ever. Total idiot. Could have been 100, could have been 200. If I were running the Fed, we'd be cutting rates faster than Sleepy Joe can eat an ice cream. Can't get brain freeze if you don't have a brain. Let's pick up the pace. Jerome, this is the big line. 100 basis points by next meeting or you're fired. So obviously he can't really do that. But that's why he's really turning up the heat for rates to come down quickly, because we can't afford to refinance. So imagine, if this is just, you take it to a consumer type financial situation. Imagine you can't make your payments for your mortgage. You can't. You're about to, your spouse just lost their job. Okay, so now you've got less money coming in. You can't afford rent anymore, but you got to keep everything going. And you need to take out a home equity line on your house, but you can't pay the current rate. You say, oh, my house value is up higher, but I can't pay it anymore.
Yeah.
You beg in your bank, like, give me a better rate so I can refinance this thing, get that cash out, and keep this Ponzi going. That's what we're trying to do, and it will happen. They won't let the Ponzi crash. This is a confidence game. The reason the Fed is reducing the size of their balance sheet is because they know what's going on, and they don't want to have the exposure. They are a private bank. They don't want to get wrecked in the process of us going away from the dollar as a reserve towards Bitcoin as a reserve. I found it somewhat poetic that they're literally having meetings in Washington right now with the leaders of our industry about setting up a Bitcoin strategic reserve while Powell's out there doing his song and dance. He said, well, if you're renting, good job. It's actually much better. The best spread ever for owning versus renting right now is it's a good financial decision to be renting. I'm about to be renting too. So.
I considered it. I definitely considered it on the move. I mean,
So I said this a little bit earlier. Interest rates, you can go look throughout history, look at the data. Interest rates are a political talking point for the most part, but they're not necessarily connected to housing. Cutting interest rates 50. I mean, they're connected, but they're not necessarily indicative of what's going to happen. You can see affordability go up and down with a pretty consistent 6-ish, or 4-ish% where it is right now isn't very outside of the median or mean of where they've been throughout the history of the Fed. That being said, I do think the Fed is mostly noise. I miss the days when nobody in crypto talked about the Fed. But the other thing that got me going was how many times he said unusual situation.
Yeah.
This is an unusual situation that they're having to navigate. And it's because we're at the end of a debt cycle. We're at the end of the dominance of the US dollar. And we are, I mean, they said it without saying it loud and clear. We're not, stagflation isn't coming. It's freaking here. It's here. The hiring rate is very, very low. They called them out and they said, are you ever going to achieve that inflation target that you're setting of the 2%? The answer is no, they're not. It's yes, it's unrealistic. They've abandoned that target by cutting today, whether they're admitting it out loud or not. So, we're in stagflation. Inflation's here to stay. And the hiring rate is very, very slow. We're going to continue to see that with efficiencies with AI and tech continuing to grow.
Yeah.
And it's going to be a world where the rich get richer and the separation of class gets bigger. The middle class will disappear. This is what we've been talking about on this channel for a long time. And if I was not in Bitcoin, this would be a scary, scary thing to hear. The beautiful thing is, the best thing you can do with all of these macroeconomic conditions is be in Bitcoin, be in commodities, whether it's gold, whether it's Bitcoin. If you like silver, fine. I love Bitcoin. I like gold. I'm less in real estate now, especially in a month from now, than I've ever been. And I'm very happy that the play is to buy Bitcoin regardless of the situation. So if you're here and you're watching this, you're in the right space.
So look at the DXY. Look at the DXY on this. Not doing well. Not doing well.
I think I saw some dollars lost 10% of its value this year, which is crazy. So that means if you got $3 million sitting in the bank, you just lost $300,000.
Yep.
Yeah. People, I mean, it's 100% stagflation. It's, we've all been saying it here for months now. It's you got to expect. I think what people are like hoping on is like somehow the Fed's going to magically pivot. Guys, like quantitative easing, like we're in a form of easing is what's happening, but it's still not even easing because they're still reducing their balance sheet. So it's like we're at like a neutral position in a stagflation economy, and it's weird because Jerome Powell is trying to play the power figure of not folding to the political atmosphere that is Donald Trump's administration. But Donald Trump very clearly using Jerome Powell as a punching bag to blame him for any economic despair that exists currently in the system. Because he's the one he's spamming tariffs on the economy. Like it's a completely new monetary policy, fiscal policy shift that we've seen. So like the conversation here moving forward, this is why I keep saying that this cycle isn't the cycle to get rich quick. This cycle isn't the cycle to make generational wealth. It's the cycle to protect your capital. And you protect your capital with Bitcoin. You protect your capital. It could be gold if you're in traditional markets. If you make wealth this cycle, you need to rotate it into something that is just not even necessarily going to make you rich, but is going to sustain that value. That's why I keep telling people so much. Like, I'm not a Bitcoin maxi, but right now you should be a Bitcoin maxi because of the devaluation of the dollar. Now, I think everybody might have different, time links on, the dollar collapse. I don't think the dollar is going to collapse. I actually think the United States is going to remain dominant, but it's going to devaluate the dollar, and it's going to do exactly what TJ mentioned, which is while they are still the world reserve currency, it's destroying the middle class. There will not be a middle class. It's going to be the 99.9 versus the 0.1%. And so, just remember that moving forward, guys. You have the world's best economists, quote unquote, that run the Federal Reserve, that run the Treasury. You have economic projections coming from every single hedge fund on artificial intelligence and on economic expansion. And Jerome Powell is coming out here. When someone tells you guys, what's your educational background to have that opinion? Dude, education does not matter in economics. Every single top tier economist in the world is saying, we don't know what's about to happen. We are optimistic, but we don't know what's about to happen. And the only thing that is clear is the devaluation of holding your money in a government printed asset like the US dollar. And that's why you need to rotate into something that protects that wealth. So that way, no matter what happens in the next year, 2, 3 years, you're in a safe position.
Absolutely agree with that. I want to hear what you think too, Drew. But if you go back and look, because if you haven't yet, go study what happened when we shifted away from the British pound being global reserve currency. You're not going to see hyperinflation. It doesn't happen overnight. It is exactly what Josh mentioned. You're going to see a long-term devaluation of that currency over time, just in runaway inflation. And we're going to continue to see that. We've been seeing that. This is the marching beat of Bitcoiners from the beginning of time. Bitcoin has no top because the dollar has no bottom. That's 100% what's happening. And I saw earlier this morning, and it does ring true. What's tough is you've got boomers trying to navigate this who have no idea of what the current trend is. They've gotten really rich based on dollar devaluation over time and coming off the gold standard in the 70s. And you've got Zoomers trying to navigate it that have zero attention span and patience. And that's the key that you need right now is patience, because there will be opportunities. Drew, you've called this stagflation perfectly, and I'm really starting to believe it is going to be like what we saw in the 80s, where they're gonna at some point they will pivot into full easing. The Fed will be growing their balance sheet, the Treasury will be doing buybacks, and everybody will say the economy's booming and assets are going crazy, and we're going to see like what we saw in the 80s, and then all of a sudden it's going to come to a grinding halt. And the other thing that I was thinking about while this was going on, they were talking about jobs and really the internet and what you see with streaming, and the way you make money today is much more international than it's ever been with the internet. Zoomers, a lot of them understand how to make money on TikTok, understand how to make money on social media, and you can create a self-sustaining business just on social media. That won't show up in any of the statistics they look at. So they have no idea. All of us, we're somewhat in there because we use ADP, but for the most part, people that are making money online internationally don't show up in any of these statistics. So you're like Josh said, they don't really know how to predict what's coming. But if you study this long enough, and I would argue too, especially modern education in economics is actually a disadvantage more than an advantage, because they don't teach a lot of the actual Sewell and Friedman and a lot of the great economic minds of the world don't get taught today anymore because it's counter to the Keynesian mindset that they've all been indoctrinated into. So yeah, this whole debt is good and debt runs, more debt is better. It will come to an end at some point. You guys are in the right place. The solution is always buy Bitcoin. I do think we see more cuts. I think I kind of predicted that. I don't know where we're at, mostly neutral on. Yeah, we're back to basically where we were on the day. So it dumped on some of his tones, recovered. I am still bullish for Q4, by the way. Don't everybody freak out. I still think we see Bitcoin rally. It almost always follows gold. This is all the more reason for gold to continue going up.
I think people should even be bullish past that. I think it's.
Yeah, I do too. I think 2026
there's a possibility here, because if it does repeat the stagflation economy of the 1970s and runs to the 1980 crash, there's a lot of similarities. And look at the energy market. AI is expanding. We need more energy than ever. So there's there's two things too that we didn't talk about yet that Jerome Powell kind of said. Is one, he said, yeah, looking at the economic cycle, it doesn't necessarily mean that it's close to a bubble. I'm paraphrasing what he said, but there was a question in reference to are they worried about the restrictive policies hurting the economic expansion? And he said no. The other thing that he said too, which was very appealing to me, which tells you that there's, again, it's going to be stagflation for a few years, but a very key point he brought up was when he said that the employment numbers for immigrants is rising. That's a direct effect of the deportations from the illegal immigration for the minorities. That to me is very interesting, because what you're now looking at is with the $5 to $10 trillion. I don't even know how much they've raised now from the administration with the energy sector and the infrastructure plays that will go into effect in 2027, 2028. You could get a rotation to where wages do outpace inflation heavily in 27, 28, which would lead us into a weird market where maybe we run up heavily in Q4, pullback. I like, if we have a pullback, I think it has to be in 2026. And that's just simply because if wages start outpacing that and consumers start buying more goods still and accelerate the so-called bubble pushing in 2027, people need to be prepared for that. So it's just so simple. The easiest way to prepare is yourself, buy as much Bitcoin as you can. You're going to be, you're limiting your risk to the downside, and you're exposing yourself to all the potential upside.
Exactly. Yeah. That's what's great, is it's the best upside hedge and downside hedge that has ever existed. And this was, I meant to show this on the stream this morning and we didn't quite get to it. This was a graph of all the other times that they've cut interest rates when prices were at all-time high, when the stock market was all-time high. And what stood out to me that was interesting, like there's a lot of this stuff that's in the 80s. So 80, 83, 83, 85, 85, 86. And look at some of these numbers: 7% within the next year, 15%, 21%, 24%, 28%, 16%, 33%. And so all of those were the 80s. And that's when they basically unleashed Wall Street, said, go at it, get after it. And they kind of knew, okay, this was it wasn't necessarily a pure economic boom when it came to jobs. Inflation was still very high. The economy wasn't feeling great going into this. And they basically just let Wall Street go make a ton of money, removed restrictions. And, it's kind of like everybody jokes about it's crime season again. Like, I think we're going to see something like that. And we could I'm not ruling out very bullish 2026, 2027 if they switch to an easing, like cut 2 more times. He basically said they're going to cut in 2026 as well. But when the Fed starts adding to their balance sheet, when the Treasury starts buying, we're going to see explosive growth in assets. And I agree, just accumulate Bitcoin and you'll be happy.
It might be like you're looking from the dot-com bubble to 2008, where it was just like this 8-year run. And there's the blow off top eventually, but that's after, for probably 2003 to 2006, it was primarily the institutions making all the money. And I think it's another similar position to where retail is going to get wrecked, man. Not because they, we're in a bear market, but because they can't participate in a bull market.
They don't have a job.
Because as we leg up, dude, it's going to be.
Well, that's
my biggest worry is that we get crazy legs up, TJ, and then it's like 6 months of consolidation. And it's like we go to 150, then come back down to 120, and you range for 6 months. And that's what's going to wreck retail, because as stagflation starts hitting us, they're going to be forced to capitulate to pay off debts, to pay off the cards, to refinance, everything you already mentioned. And I'm being optimistic. I hope that doesn't happen, but
I think it will. And because if you look at this graph here, look at the other 91, 91, 92, 95, 96. So it's exactly that same. If you look at history, you can almost always kind of see the story. And that, when I looked at this graph, it was like, okay, that was the confirmation I needed to see, okay, exactly what happened in the 80s, exactly what happened into the dot-com boom. And then unfortunately, like you just mentioned, we'll have a pump, we'll pull back in range. It'll be accumulation range for the ruling class or the elite class or the wealthy class, whatever you want to call them. And then right at the most bullish, that's when the bottom's going to fall out. And they're all going to be prepared. They're all going to be hedged, and they're going to be pushing retail in right at the dot-com. That institutions had already made all their money, and retail was coming in the dot-com crash. Retail was coming into real estate in 2008. Everybody was thinking, oh, this is what we have to do to compete. The same will happen with this, and then we'll do it all over again. So, but sorry, go ahead.
I'll give you my take here now.
Yeah, I was going to say, I wanted Drew's take.
Yeah. There's nuance to the situation because in the 70s to 80s environment, the average house was $50K, but the average salary was like 25 to 30K, right? Now the average salary is right around 60, but the average home is $450,000. So a massive discrepancy in earning compared to the cost of living, with a collapse to the upside in terms of the cost of your house now. Major difference. The housing market in the US makes up around $120 trillion. So if the housing market comes to a lock and a $120 trillion industry basically turns stagnant, it's not that the market, the S&P, needs to collapse for the great reckoning to happen. It needs to stop growth. The system is reliant on constant growth. So when I look at this situation, I think there's going to be a lot of similarities, but I don't think that the interest rates on mortgages are going to make it back to the 16-17% level. I think the discrepancy in the cost of housing and how it's increased is actually going to make the kind of ceiling on mortgages somewhere around the 12 to 13%. I do think that this situation is going to play out again, but given that the average cost of a home is $450,000 and the government has literally already been using our tax dollars to artificially keep homes off the market to stop a massive inventory from making it out there, I think that they're going to artificially keep those houses off the market with our tax dollars, mind you, and keep the prices as high as humanly possible because they don't want a $120 trillion market to have a 30% haircut. So I do think that is going on. And right now, if this generally continues to follow the path that it already has been, we have about 6 months to a year of the Federal Reserve acting like they have the ability to cut interest rates. Inflation then takes off and goes to the moon, and then the hammer comes down on the markets at large at the end of 2026. Let the hammer come down, the chaos begin, the flash crash to Bitcoin, then the US government comes up and buys the blood somewhere around $100,000 Bitcoin. That's what I think is at the end of 26. I think that the government's going to keep, we're going to do it. We're going to do it. And a bunch of these countries are going to be like, I'm getting in first, right? And then they're going to be like, just kidding. We're going to actually raise the interest rates to 15%, sucker. And then bam, right? You have that happen. The US government buys up that floor. Then you got a Bitcoin reserve going to 2030, probably $1 million plus Bitcoin.
Yeah, I think that's the move. I think everybody, and so because I see some people over there like, man, new fear unlocked. Guys, like, there's no fear to have. Like, literally, just even if you're up 20%, 100%, 200%, like, just rotate into Bitcoin as much as you possibly can. Because I think the biggest play here long term, if you guys are like, I'm talking to our more mature audience here, like probably 30 plus, that's like, okay, we're talking 5-6 years from now, you're looking for your first house. The average home buyer in America, by the way, is like 38 years old now. It's like, it's gone up exponentially. I think there will be a rotation because once you beat stagflation, you get that wage market, you get that inflationary period, the interest rates cuts will come back, and you're looking at whether that's 2030 to 2032, probably a position where you'll be able to, if you're buying, everybody's goal should be one Bitcoin. I think if you have one Bitcoin by 2030, 2032, you can do what like we've done on this panel, which is like, you'll be able to borrow against that with almost zero risk and actually purchase your first home at incredibly reduced interest rates. And there's going to be a switch. But I think we all agree on the panel right now. I was even in a Twitter space with Grant and Gary Cardone yesterday. Like, the way to go right now is rent, because it's just not affordable you can invest way more money if you're renting and not worrying about the asset right now.
I just put in an offer on a house, literally like right before I started yapping there. I'm holding the other house too. I'm going to rent it out to someone good, but it's too low of an interest rate to let go of. And in the next year or two, I have to get used to the 5-6% mortgage rates. I can refinance if, this plays out 2028. The interest rates come back down to 4%, yada, yada, yada. Right now, I am taking the 10, 20-year outlook where I think inflation, the dollar devaluation is going to go ballistic, and this, $1,000 a month mortgage is going to feel like a current $300 mortgage. For people that are boomers that are walking around with houses that have like $300 mortgages and are renting them for $2,200, they're feeling good, right?
Yeah.
That's a good deal. So that's the approach I'm taking. I think hard assets, playing this market like Warren Buffett, using trash cash to buy hard assets like Bitcoin and homes, vehicles, Second Amendment items are going to be my play. And I think history is going to, it's going to rhyme. I don't think it's necessarily going to repeat because the housing cost is so much exponentially higher now in comparison to our income than it was the last time this happened.
Yeah, and that's because real estate has become one of the premier assets to store your value. And that's what's interesting to me is going to be, and it's interesting, I'd be interested to hear Grant's take on this as well. That's starting to change in the sense that now Bitcoin is becoming the premium asset for a store of value. And as that shifts away from real estate, it will take decades. This is not going to happen overnight, by the way. This is 10 to 20 year outlook I'm talking about. But that could impact housing affordability because right now, most of the stuff a lot of the inventory is just being used by very wealthy individuals to just sit on the real estate because you can't have it in dollars. You only want to have, you don't really necessarily want it in government bonds right now. You don't want it in, so there's limited options. You can either have it in equities, which feels bubblish. So if you want something that's long-term, low risk store of value that used to be bonds, those are actually looking a lot more risky these days. Maintenance and insurance and property tax costs goes up and up and up on real estate. And now for the first time ever, you've got a liquid, mobile, transferable, permissionless asset that you can take anywhere in the world with you that's holding value better than anything else. That's a better hedge than real estate. And so if people like me have figured out I'm better off long in Bitcoin and basically putting it all in Bitcoin versus holding a lot of real estate, I guarantee the BlackRocks of the world and the big money of the world are putting that together as well. And to me is the best case you can make that housing affordability will come back is if the wealthy elite don't use it for a store of value, but that's gonna take a long time. So
it's more kind of morphed into a government relationship with housing. So it's like Section
100%.
8.
I gotta hop off. I love all you guys. Shout out to the Disco fam. My parting advice is have good financial fundamentals, have principles that you stick to in the environment that we're heading into. Like Josh said, you do not need to be scared because we have a solution like Bitcoin. Get out of debt. The best thing you can do is eliminate your debt and hold Bitcoin, because if you are in debt, it's going to get harder and harder as these things go on. Have a positive cash flow and be debt free, hold Bitcoin, and you will be prepared to take advantage of the collapse, crash, whatever you want to call it when it comes. That's the stance I'm getting into right now. Whether it's next year, whether it's 2 years from now, I'm going to be extremely prepared whenever we do see a pullback to be accumulating Bitcoin. And
I'm going to call you TJ Buffett 5 years from now, bro. I mean, you're going to be
that would be a great compliment.
Your
I would welcome
I think the real value creation here over the next few years is like just compounding your wealth. It's not like getting rich this cycle. It's like taking your Bitcoin, your hard assets, the value, the store that you created, rolling it into probably more real estate in the 2030s. Then you get to roll that into more Bitcoin or rent. Like we're going to roll into it. I wanted to show you this though, dude. Look at this. Is the craziest trade ever, man. The stop loss, bro.
No way.
Stop loss. I am going to zoom in on this. Yo, dude, I put it at 2.9799 right under, because like they're gonna eat all the stops. Came right down to it, and we bounced back up on it. So we're up 1,300 for the day.
Holy cow!
That was the liquidation models, dude. But it actually got super bullish here
Yeah.
On the liquidations, like while you've been live, it's like bounced back and forth, obviously. But if I zoom in on this,
we're looking good. I mean, you got those data points.
Very
Let's
good.
look at the money flow too. I mean,
the 12-hour.
Let me actually look at your signals first. So the liquidation's definitely looking like it's
So
up,
you're at,
right?
so it's 117. If we break 117, it's crazy. We're probably going to go to like 118, 120, like pretty quickly. Because you can look at it on the liquidation here too. Let's refresh this now. So many orders have been opening up above towards 118, 118.5. So like it's when we went that, we called it live right here. We're like, we're probably going to drop down to liquidation. It literally went right down to that range, turned into support, bounced higher now. And now we're expecting that upside here. Delta spread looks good, which is kind of your money flow, if anybody's asking too. Money flow is flipping quite positively. So I don't know. We may have caught like, that might have been the perfect, this is our stop loss. The yellow line.
That's insane. That was absolutely insane, dude. And like, look at this,
bro.
Let's pull up the other metrics that we use. I mean, you got your approach, I got mine. They kind of meet in the middle here. So the 15-minute on money flow is swooping aggressively to the upside. You have higher lows on the volatility waves. This is signaling pump. Okay. This is signaling mega pump. And then we look at, the larger time frames. And with that washout, I mean, this is something that I really, really like to see on the, I guess I call it a larger time frame because I'm a day trader, but the hourly volatility, the momentum wave on the hourly,
the larger time frame, bro, goes 60 minutes.
right. 60 minutes, large time frame. We are VWAP clipping to the upside, momentum still at the downside. This is a definite bull signal, right? And I've already had a really good time trading today, so I'll probably relax and enjoy my 40% trade. Woo. Josh, good job on that XRP trade. People in the Discord feeling good as well. And shout out to the 15,751 people logged in right now. We're also, that doesn't even include the people watching us on the Arena, the Avalanche Social 5 platform.
We're probably about 20K.
Jesus, man, what a hell of a stream. Josh, I'm going to go eat some barbecue food, pick up my daughters, hug them. You're welcome to keep rolling here, man. But this has been an absolute banger of a show. Huge shout out to you, man. I'm going to head out here. I love it. Appreciate every single one of you out there in the chat. Make sure to share it. And I'm going to see you in a little bit here, Mr. Josh. I'm heading out.
I'll talk to you guys later as well. Peace out, guys.
All right. We're going to end it. See you. Peace out. Oh, wait. There we go.
We just wanted to take a quick second to shout out our sponsor, Arculus. They are a cold storage hardware wallet, helps you secure all of your digital assets for the future. Just tap this thing to the back of your phone and boom, you're in. We wouldn't be able to do this without them, but also wouldn't be able to do this without you guys, the Disco fam. You've supported us a lot over the years. If you want to support the channel now, just use the code DC20. It gets you 20% off this card. It's the #1 way you can support this channel going forward. Thank you for your support. We'll see you at the top.